Welcome, you're watching India Market Open, and what times we live in, where overnight recession fears have gripped the United States, showing its impact the world over. Back home, this news on IndusInd Bank shaking up the street. So a lot of negative cues today. It's going to be a tough morning, guys.
Yeah, tough morning for sure. And I mean, one would argue that IndusInd may not be the only game in town. So that is one fear. I just wonder, though, if the end of US exceptionalism, as we've known for 2023 and 24 on growth and market preference front, is it in the slightly medium term in 2025 constructive? But for now, the fisherman's guide to trading. When the seas are choppy, don't go out to fish, stay on the shores.
Yeah, you're looking like tsunami mode right now.
And absolute, the pressure that could come in terms of domestic markets as well, it's clearly visible because the volumes in terms of FIs and DIIs, that number has shrunk yesterday as well. So there is fear gripping not only retail investors, but if you think about it, FIs and DIIs as well.
Yeah. Are people staying out, and should you continue to stay out? Of course, all of that through the day. Let me start with what's happened overnight. Meltdown is the only way to describe what we've seen in the US markets overnight, as recession fears are back and they've gripped the street. The Dow plunged nearly 900 points overnight. You've had the Nasdaq down 700 points, 4% in a painful session of trade. Look at the futures. I want to pull up Dow futures just for a second at least and see where we're going after that huge hit on US markets. I mean, we can't take much heart from that, 55 points in the green. Treasury yields have also slid as recession fears grow, the 10-year at 4.16. Crude has slumped on tariff fears. Brent is below $69 a barrel. I mean, you would think all said and done, cheaper crude, yields coming off, good for India, but the reasons is what's worrying, which is why you're going to see a negative on the implied open as far as India is concerned as well. So now the question is, what are these recession fears that seem to have come in the last 48 hours, and where are they coming from? So let me break that down for you. First, what the White House has said on the market crash, because there was actually a statement coming in, and the statement from the White House is, we're seeing a strong divergence between animal spirits of the stock market and what we're actually seeing unfold from business and business leaders. Let me break that down to you for what it actually means. It's essentially that what the stock markets are doing is reactive, but it's going to be good for business. The start of all of this is an interview by US President Trump to Fox News, where he was asked specifically, do you think there's going to be a recession? And he says, I hate to predict things like that. There is a period of transition because of what we're doing is very big. Now, that's a statement that has sparked off all the fears. And we told you about this in yesterday's show as well at the same time, that this statement that we're going through a period of transition is something that the street is not liking. It was actually echoed in a way by something that the Treasury Secretary, Scott Bessent, also said. And he described it as a detox. He says the market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. Now, call it a transition, call it a detox, call it panic, what you will. The screen is only showing pain at this point, and which is why you're seeing what you're seeing on the screen. I want to pull up Asia before we get to our first speaker today and just show you what the Asian markets have started off with. I mean, no surprises there. Shanghai relatively doing okay, Nikkei in pain, Hang Seng about 0.5% down, implied open. Once again, we're about 120 points off. Okay, 100 points down right now in what the Nifty seems to open at, or could open at. Sonal Verma, first conversation this morning, Managing Director and Chief Economist, India and Asia ex-Japan at Nomura, with us this morning. Sonal, pleasure as always to speak with you, and thank you so much. I think great time to get your perspective with everything happening. As the Trump trade seems to be receding quickly and maybe disappearing, what does this mean for emerging markets, especially India?
Well, it's a extremely tough period because if the US does go ahead and implement the various tariffs that it's promising to on 2nd of April, which is something as a house we think is likely to get implemented, then from an economic perspective for the US, we are likely to see weakness in growth. We think it's going to be a year of below trend growth and higher inflation as the tariffs kick in. So that stagflationary kind of a backdrop actually ties the Fed's hands in terms of what they can do. And as you all were discussing, the US administration is also ready to take some short-term pain for what they believe is going to be a medium-term benefit for the US economy. For EMs in that backdrop is essentially, much weaker growth. We think disinflation is likely to still happen because higher tariffs on China does mean the risk of more dumping of those excess products in other countries. But then we also need to basically be ready for more volatility in terms of financial markets, in terms of more capital outflows, currency spillovers, which typically do have feedback loop back into consumers through the wealth effect and businesses because of uncertainty. So essentially, weak growth and more volatility is what it all means.
Right. So, Sonal, when you talk about this kind of uncertainty and volatility, the kind of shifts that will happen in supply chain as well, right? And you're looking at the geopolitical alignments. How do you see India on it? Because clearly there could be some bit of benefits that could come in. So overall, what could they be, number one? And two, its direct impact in terms of the GDP.
Well, the direct GDP impact is actually going to be visible over the next 3 to 5 years. I think in the next 12 months, actually, we will see more of the negative impact of weaker growth, weaker global growth showing up. So I think the medium-term benefits in terms of India gaining on world export market share of specific products where supply chains are moving away from, let's say, China, will be a benefit. Now, specifically on the supply chain shift, the focus of the Trump administration is one, to bring some of the supply chains in strategic products back to the US. And they are also looking to bring about more of a strategic decoupling from China. Now, on the latter is where we think India is likely to continue to benefit. Over the last 5-6 years of trade tensions, India did benefit on electronics, but actually Vietnam has been a big beneficiary in the first round of trade tensions. This time around, the Trump administration is looking to also close the loopholes that were used by firms to bypass China tariffs. And the analysis basically shows that some parts of Southeast Asia and Mexico have benefited from circumvention of China tariffs. So as those loopholes are closed, we think the supply chains will move to newer destinations. And India, which is a strategic ally India, which is a strategic ally of the US, should benefit from the new round of supply chain shift. So electronics, smartphone is one, but we need to think about the other components of the electronics ecosystem. We can move up the value chain. So we do think that in the non-strategic low to mid-tech manufacturing sector, where there is space to compete, India should be a benefit. But like I said, the benefit will reflect in the next 3 to 5 years. The next 6 to 12 months, it's still the global spillovers we need to navigate.
Sonal, morning, Neeraj here. How well does India navigate these pressures through internal policies? Because the one thing that we've seen in the last couple of months at least is this whole monetary easing that the Reserve Bank of India has embarked upon, some budget benefits that the government has given as well. Does that help alleviate the pressures to an extent that we get back to the normal 6.5% average? Or could that be under question mark if indeed the US slips into the recession?
I mean, yeah, absolutely. If the US slips into recession, then 6.5% will not be feasible. So I think we'll cross that bridge when it comes. But currently, as you said, when global growth is slowing down, it is important for countries like India to undertake counter-cyclical policies in order to buoy domestic demand to the extent that we can, to offset the weakness in global demand. So the policy mix we have seen in the last 2 months or so does show that there is a recognition that growth in India is already below trend. Inflation is close to the target already, in our view. And therefore, a more coordinated approach on counter-cyclical policies is the need of the hour. So, and I would say we are seeing that already in terms of the budget focus on consumption, the rate cut, the liquidity easing, which has surprised positively. And of course, the macroprudential easing that the Reserve Bank of India has begun. Now, it takes time for the policies to show up in terms of economic growth, but the countercyclical adjustment has started. On our own forecast, we are expecting FY26 GDP growth at around 6%. On a relative basis, I think, when we look at rest of Asia, which is very open, export oriented, the potential risk to growth there would be a lot more substantial relative to India, which is more domestic demand driven. So this counter cyclical policy is important, needed. But just one more thing is, for emerging markets, we need to strike the right balance on supporting growth without going down the path of macro imprudence. I don't think we have seen that in India. We are actually doing all the right things in terms of focusing on some of the medium-term reforms, giving some counter-cyclical policy to ensure that some of the negative offset from global factors is supported through the domestic demand trigger. So things are still cycling down on growth, but I think we're moving in the right direction on policy front.
Can I just ask Sonal you a question on that? Because a lot of people out here are now trying to think of how is it that global investors are thinking about India on the flows front. I am trying to understand from you, how are people thinking about the policies that India is doing? Because you would be talking to a lot of investors on that front, right? The fact that there's a large economy, yes, went through a growth slowdown, hopefully we'll get back on the growth path, other things remaining constant in the US. At the same time, doing or obeying fiscal prudence in a meaningful way, is that a big feather in the cap or not really? Because we don't see other economies doing that. I mean, Germany is being rewarded for getting on a path of really unbridled fiscal spending, which they haven't done for ages, right? So I'm just trying to understand, how are people thinking about India on the policy front?
Yeah, I mean, Germany fiscal finances were in a very different situation, very low deficit, very low debt. Whereas for India, as an emerging market, our debt, the starting point on debt to GDP, public debt to GDP and deficits are higher. So I think, of course, the evaluation of Germany versus India is very different. So the context is very different. Now, specifically on investors and India, I think there's definitely a positive view in terms of policy making, particularly the countercyclical policy approaches we are starting to see. But I think investors are still looking for more confidence that growth is indeed bottoming out. While the headline GDP numbers, were better in the December quarter, the high frequency data, even until February for the auto sector, GST collections don't actually give that confidence that the worst is behind us on growth, particularly in the global context, also looking more negative now. So I think there's a need to see true bottoming out on the domestic growth front. But I think now it's really the global uncertainty and global factors which have taken over. And the two things that are essentially in focus, one is this US-India bilateral trade agreement. To what extent India, which has been, spotted out as one with higher tariffs and non-tariff barriers, to what extent we can actually strike a deal and not be subjected to higher reciprocal tariff from the US. So there's a lot of focus on that. And second, on these supply chain shifts, this tends to be a more slow-moving change. But I think incrementally in sectors like electronics, there does seem to be a lot of scope for more medium-term growth actually coming through, despite these short-term turbulences. So I think near-term, there's still a bit of caution. Medium term, it's I would say people are looking for when would be the right point to be back in India, and obviously we need to look at all of this in the context of what's happening in China, where there has been investor interest that has come back on the back of the tech rally there.
Yeah. Absolutely. Thank you so much for your time this morning. Sonal Verma, they're laying out the lay of the land, which I think is a tough thing to do right now, but we're going to attempt to ask that question to Richard Harris as well, Chief Executive Port Shelter Investment Management, on the phone line with us. Richard, good morning. Tamanna here. Pleasure to speak with you. It's confusing out there. I just want to understand the rationale, and if you think it's a bit of an, if it's overdone, the fright of a recession. Recession fears have cropped up in the last 48 hours for the United States. Is there any data that is backing this theory?
Well, I think it is very early days in terms of talking about this sort of thing. And yes, there is some data backing up a slowdown. I think because of what we've seen, the uncertainties that have occurred, really since the election, that there is a possibility that we could see zero growth in the U.S. In the first quarter. But, a real recession has to have 2 consecutive quarters of negative growth. And I think it's far too early to say whether the second quarter is going to be the same. But certainly we're in a situation where markets have moved on a long way in the U.S., where tech has moved up significantly. And now, as we saw last night and over the last week or two, it's moving back. So I think we are seeing some correction from high levels that may well lead us towards maybe as much as a 15% fall, because of the concerns we may see some kind of recession coming through.
Saying the recession fears could take place depending on what happens and whether those tariffs are actually put into place. Where does that leave emerging markets, Richard? Because if so far the story was that all roads lead to America at the cost of emerging markets, does the reverse bode well for emerging markets at all?
Well, it is slightly difficult to focus on that because, of course, emerging markets have changed dramatically in the last few years. Most of these emerging markets have become developing markets and into even developed markets over the last 5 or 6 years. So whether we're going to see the same sort of thing happen is not clear. I mean, the U.S. economy can slow down, can decline, and it will have some impact fundamentally on the Chinese economy, on the Indian economy. But those economies now have a very strong domestic base. Exports are only a relatively small portion of the overall GDP of both of those. So you would have thought that those two markets especially would remain relatively robust, even in the face of a slowdown in the U.S. But I think it's fair to say that it would be very difficult for those markets to move ahead if we were seeing recession in the West.
Right. So recession in the West, that's key, and the uncertainty is something which is not letting markets decide any direction as well. Thank you, Richard, so much for joining us on the show and speaking to us at NDTV. But clearly, the impact that we could see in terms of the domestic market is also something we need to watch out for, because overall, in yesterday's session, it was a good start, pretty steady, but it did not really hold up to the opening gains. And in the last 1 hour of trade is when we saw that fall coming in. In fact, Nifty also gave up those 22,500 levels in the last hour. Your broader markets have underperformed the benchmark indices. If you talk about the small cap 250, it's really snapped that 4-day gaining streak. Your mid cap 150 saw a 1.5% fall as well. The breadth overall has been in favor of the declines, and a slip of almost 280 points is what you saw in terms of Bank Nifty. If you talk about stocks, KEI Industries, Kalyan Jewelers, these were few of the top losers in terms of Nifty Midcap 150, whereas 361, Triveni Turbine were the other ones in terms of the small cap 250 as well. Real estate has been an interesting sector to watch out for. One of the top losing sectors in 2025. Yesterday, it was down almost 2%. It was mainly Mahindra Lifespace and Raymond that actually dragged the sector lower. 3 consecutive sessions of losses coming in on that front. You have Nifty Auto as well, which was up for 2 to 3 consecutive sessions, and yesterday it saw that downtick. Out of this, what's an outlier is FMCG, 4 consecutive session of gains that are coming in there. So I think that's going to be a sector we should be watching out for. Very lastly, if you talk about OMCs, they did slip in yesterday's session. Plus, if you talk about Brent as well, that's holding up to levels below $70. So ONGC is the one which is seeing some impact. Yesterday, that stock was down nearly 3%. And metal names like Nalco, SAIL and Hindustan Copper, they were also trading under pressure. So the 5-day gaining streak in terms of the metal index was also taken away. So clearly, I mean, Neeraj, if you see in terms of sectors as well, right now, it's still the consumption pack which is holding up. And that's usually been the case, right? When the others are down, it's consumption which is on the uptrend.
Yeah, but difficult to call out any sectors right now. It's just so difficult. And which is why I think today, much like I've done in the last few days, I'm just kind of pointing out a few things that the sell side is saying right now. MK, for example, did a 100 investors conference in the US. They have some thoughts. Macquarie did an FI meeting with 30 EU investors, and I thought that was very interesting. So using Macquarie and Morgan Stanley to just briefly mention what's happened. So Macquarie is saying that investors are looking to deploy money into the Indian markets post the corrective move. This is across EU investors, by the way. And they say that India is, according to investors, India is a structural story and China has structural issues, and at best is a tactical short-term play. A view of many, if not all, which is interesting. And hopefully at some point of time, this means that flows come back into India. Morgan Stanley's Chetan Iyer, and we'll do a separate Morgan Stanley piece on what the equities team is saying. But Chetan Iyer has written a note today wherein he's saying that why India is best placed in Asia. And he says that the reversal of the unwarranted double tightening of fiscal and monetary policies will help drive the recovery. Monetary easing is hitting full throttle across 3 fronts: rates, liquidity injection, and regulatory easing. He says that India is less exposed to trade tensions on account of its low goods exports to GDP ratio, something that Sonal spoke about as well. And policy support, which will turn around its domestic demand outlook, will allow India to outperform. Now, this is on a fundamental basis, growth basis. Does all of this translate into some gains at some point of time in the future? Sure. And we'll talk about the Macquarie note in detail a bit later on. But I must say that sell side almost unanimously is now starting to say that the valuation pain is starting to feel discounted, and global investors that they are meeting are at the margin are definitely not negative on India anymore. At the margin are selectively turning positive on India. Sure, instances like Henderson don't help.
Yeah.
But
the issue is that if all things were stable, definitely we are in oversold territory, definitely you're at the bottom, but then you have this overnight pain which suddenly comes and whips up. So
and valuations are becoming attractive for India as well, correct?
No, but that's my point here. Valuations are becoming attractive. All things considered, it would have been time for an uptrend. You just don't know what's going to happen on the global end, which is why it's becoming so difficult to predict.
I think people are not really wanting to bet on uncertainty right now.
Yeah, and uncertainty it is. But talking about positive views, I just want to bring in what Lawrence Belanco is saying on price action from CLSA before I get to the top 3 stocks on my radar today. They're saying that the index is showing slowing downside momentum. He's talking about the Nifty. Suggests downtrend off December highs is mature and vulnerable to a reversal. The combination of a slowing downside momentum and support has provided platform for rebound rally, with supports at 23,263 to 23,460 zone and resistance at 24,031 and 24,795 to 24,857 zone. So keep that in mind on the technicals as well. But let's get to the big story this morning, and there is no bigger one than what IndusInd has done. We've been going on and on about IndusInd. It's a thumbs down, clearly. If you have missed the news, let me take you through what's happened. It was already 4% down yesterday because the MD and CEO got just 1 year extension instead of the 3 that was expected. Now, from what they have revealed in the evening, one can understand why. So for one, IndusInd is under the scanner on their derivatives trade. The bank is revealed in an exchange filing, and then they had a conference call as well. We'll play out a clip from that. That internal audits are on losses on their derivative trades. The losses could be up to 2.35% of the bank's net worth. That means the hit could be as high as 2,100 crores on the upper end. Now, this derivative trade was something which was being conducted not just by IndusInd Bank, but for a while by banks, by their treasury departments as a hedge to foreign borrowings by banks. This was stopped in 2023 by the RBI. But even after it was stopped by the RBI due to a circular, the trades continued in IndusInd Bank for 10 months. And now they have figured out 10, 11 months later that this was going on. They have been talking to the RBI about it, but no intimation to exchanges or investors. And now there is an audit going on this entire situation. That's the worrying part. Why was this under wraps? In fact, listen in to what the bank's MD and CEO, Sumant Katpalia, has said on this.
I think very difficult to answer this question. We have done all our due diligence when we've come and disclosed it. I think, it's an estimate right now because the validation is still happening. And as the validation gets completed, we will come and disclose the number. In my view, I think the number should not be so much difference. It should be range bound, like you said, but very difficult to answer that question accurately right now. RBI continues to do thematic reviews in an organization. So they continue to KYC reviews, they continue to do loan asset reviews, they continue to do microfinance reviews, they continue to do credit card reviews, they continue to do corporate bank reviews. So it's an ongoing process with RBI. To say that I think there is nothing material right now which is happening to my knowledge, and I don't think we are to be worried about. That's for the regulator to answer, and I think of course this would have had a bearing because they were aware of this issue. We actually there was some inkling towards the issue, and I think I don't know what is the rationale for them to give me 1 year, but I think they're uncomfortable with the way my leadership skills of running the bank is, and we have to respect that. And I think this is a litmus test that for the bank as well as from a succession point that we see how to take the bank forward. I don't think the BAU of the bank will suffer. I don't think our growth agenda will get off the track, and I think I remain committed for 1 year to the bank. And I think let's see how the process goes. The board will evaluate external as well as internal candidates for the CEO position. I don't know whether they evaluate me or they evaluate somebody else. That's for them to decide.
So what are brokerages saying this morning? They're saying this is another significant negative, that's the word from Macquarie, on IndusInd Bank. Current issues raise questions on internal processes, create questions on the robustness of bank's internal processes and compliance. Believe this could be one of the reasons for the suboptimal CEO tenure extension. Essentially, the CEO got 1 year instead of 3, because this was one of the reasons, is what Macquarie says. Channel checks seem to suggest that such kind of losses are possible when the book is not fully covered. And as per some treasury heads of banks, the new RBI accounting rules cannot solely explain the discrepancy. It has a large market share in NRI deposits and has been offering higher rates to customers in the NRI segments, is something that Macquarie also points out. In fact, the segment of deposits for NRIs is 58,600 crores and rose 39% year on year for the third quarter of FY25. So they're seeing some difficulty there. Morgan Stanley, meanwhile, says visibility on the stock continues to reduce. Over the past 3 months, the CFO has resigned, CEO has been given a shorter than expected tenure, and now we're made aware of a big loss in the derivatives portfolio. So painful, guys, on IndusInd Bank. And then, the question that you pointed out, Neeraj, is this only an IndusInd Bank governance issue? Then the contagion is it's contained.
Yeah.
Then the problem is contained.
Yeah, but difficult to make a case for the bank nifty in such a scenario, right? Cheap stocks, yes. IndusInd Bank 0.9 price to book. But difficult to say if this is the end of it. So, and hopefully it doesn't spread to others. But suffice to say, a lower circuit today on open, and then maybe more.
All right, we have more stocks on our watch list. We'll take a very short break. We'll come back with other stocks apart from IndusInd Bank that you should watch out for, and of course a detailed view on what's happening with IndusInd Bank. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure.
Look at the implied before we move ahead. We've been talking about IndusInd Bank, which is going to be in focus this morning because of some pretty serious disclosures that the bank has made on what's been happening with their derivatives trading desk. Meanwhile, implied open about 108 points down, but that's not just because of one counter. That's what's happening in the global markets as an overhang as well. Nevertheless, some stocks which have good news could move favorably if the market mood changes. One of them is Bharat Electronics, already on an upside after a Jefferies buy call, but a thumbs up today as well. They've received orders worth 843 crores, including for RF seekers, vessel and air traffic management systems. They're of course in the defense space. Total accumulated of orders in FY25 so far is 14,500 crores odd. So Bharat Electronics continues to be one that could see some good movement. Anupam Rasayan has signed a 10-year LOI, letter of intent, with a Korean multinational. Thumbs up for this reason. The deal is valued at about $106 million. That's upward of 900 crore rupees. The partnership enhances delivering advanced chemical solutions and strengthens its presence in high-growth global markets, is what the company is saying. So Anupam Rasayan's the other one on my radar.
Yeah. Just on this one, just keep an eye out. 17% rally in 5 days already.
Yeah.
So, you know, some bit of move has happened. It could be interesting to see how much further on this one.
Absolutely. There's an MK note on it as well. They've maintained an ad with a target price of 800 rupees because they say large part of the capex in Surat and Jagdadia has been completed. So there is more excitement about Anupam Rasayan on the basis of
and don't be surprised if you get a re-rating, because you're already at 790 on the stock, so it's just another $10 in terms of their target price. But apart from that, interesting one is a Syngene International. They've gone ahead and acquired their first US biologics manufacturing facility, and this is in Baltimore. Now, why this is important is because this will increase their bioreactor capacity and strengthen the US biologics manufacturing as well. This is going to mainly operational from the second half of 2025. So it is not really materially going to have an impact on the FY25 financial guidance. EBIT margins are going to be in line with the company's average from FY30. and it will positively contribute to the bottom line as well. There is a minor dilution in terms of operating margins that could be coming in, and this is on the back of the costs that could be incurred as well. So watch out for a Syngene, that's a thumbs up. The second one is a Indoco Remedies on my list. Now the company's Anasafer has completed a 5-day US FDA inspection in Hyderabad. This was conducted between the 3rd and the 7th of March. They've also received one Form 483 and the response will be submitted. That is what they have indicated. So you could see some bit of pressure that could be coming in on this one. And the third one, which is HEG, that's an interesting one because you have Bhilwara Energy, who's gone ahead and approved a fundraise of around 500 crores. Now, this is a company which is an associate of HEG. Singularity AMC, which is led by Madhusudan Kela and Yash Kela, they will be leading the investment with regards to this one. And overall, if you talk about HEG as well, what they've said is BEL will use the capital for growth, new projects and acquisitions. They will be scaling operations and driving innovation through this one. The capex plan of around 3,000 crores has been facing execution risk, but that will be mitigated by the promoter's track record as well. So HEG is another one we should be watching out for as well. A thumbs up on that one, Neeraj.
Yeah, well, let's wait and watch how this one does. Singularity owned by Madhu Kela, and therefore could be an interesting one. I mean, it's more like a PE investment into the subsidiary Bhilwara Energy, but you know, everything energy is looking okay. Let's try and understand what to do in a scenario like this, which is looking slightly wobbly. Amardev Singh, Senior Vice President Research at Angel One, joins in right now with his sense of the charts and the derivatives. And in a bit, we'll also talk about the fundamentals. But Amar, good having you. It's been a while. Thanks so much for joining in. How do you view the structure today? Amar, it was starting to look pretty good last week. Only that this week has started off weak. Today will be bad. Therefore, do we test supports and kind of stabilize there, or does today's move open up downsides?
See, I have been holding a very firm view for almost, I would say, 3-4 months more than that we are definitely not heading higher, and higher levels are being sold into. So it's if you look at, I'll talk about both on the technical perspective and the fundamental perspective. So technicals, the basic advantage is that you've got all the factors actually factored in because the markets are leading indicators. So the indices are leading indicators. So what I see technically first is that the structure of the markets have changed dramatically. We haven't seen this for I would say many years. And when I'm talking about the structure, I'm primarily referring to the intermediate term trend. That is extremely negative. So what is happening is that any pullback is being sold into. It's not that fresh buying is coming in at higher levels. That's something which we need to differentiate. Because when we are in a major uptrend, we see that fresh buying keeps on happening at higher levels also, which sustains the market. And that's not the case right now. What we are seeing is that yes, buying is coming in select quarters, like we saw very good movement in the metal space. Earlier we saw somewhat movement in the banking space. So certain sectors, or I would say, are performing, certain stocks are performing, but more or less they are not able to sustain. And looking at the structure and also the fundamentals which are actually flowing in terms of the GDP growth slowdown, or I would say the earnings slowdown, or the Trump tariff, I would say, fears. And so these are definitely playing on the markets, and it doesn't seem that it's likely to go away anytime very soon. We could witness at least for the next few months at least. And we'll also have to watch out for as to how the US Federal Reserve takes a stance. They have a meeting this month itself on the interest rate cut, whether there's going to be a rate cut or not, and then RBI next month itself. So these are certain factors which are going to play on the market. And I would say that one needs to be very careful at the current levels. Means if you are buying, you should be clear that don't expect a significant rally. There could be a rally, but again, we'll witness a collapse sort of thing, meaning a selling at higher levels. That's what we are witnessing in the index. So if you look at the index per se, if I talk about Nifty to start with, so what's happened in Nifty is that short term, as you rightly said, we witnessed a very sharp move last week, almost a 2% rally last week, despite the US markets witnessing some correction. So there's a lot of buying that came in around the 21,900, 22,000 levels, but higher levels, and that I would say roughly around 22,600, 800, I'm saying on the higher side, that's going to act as a very strong zone of resistance. Because if you look at the major stocks, major be it Reliance or for that matter, major some of the other Nifty heavyweights, we are seeing consolidation there. So I would say one shouldn't really rush into, one should go slow. But yes, the one thing I definitely like to add is that the recent low is something going to be a very important and level to watch out for, because if that is taken out, then we could witness some sharp correction in the indices towards 21,500 odd levels. But that would only happen because of a foreign, I would say, trigger, not a domestic trigger, which I don't foresee in the near future.
Okay. So what then, Amar, would be your picks and what would be your specific strategy? I'm just wondering if this is a day that you go short, if you are a trader. Do you build positions for a longer term? What would be your specific strategy and your top picks? Let's start with your picks.
So in terms of index strategy, I would say selling at higher levels is a better way to look at it. But but at the same time, we see that there is a pullback also. But I would say still go with the trend, because the trend, if I clearly define the trend, what we are seeing is that as far as Nifty is concerned, Nifty's got strong support coming around the 22,300 to 400. That's a very strong support zone. If that's taken out, then we could witness a 200, 300 point correction. As far as the levels, if you ask me what are the good levels to really sell and wait to look out for, then I would say that's the very good level for Nifty, somewhere around the 22,600, 800. That's a level wherein one can sell and then one can expect a significant correction. If one wants to trade a breakout, then trading consistently below the 22,380, 400 mark could also lead to a 60, 70, 80 points correction during the day. Looking at the stocks, if I look at the stocks, some of the stocks which I like is at the current levels is Infosys is definitely one of the stock. It has corrected significantly. We could witness some further correction though, but this is a stock picked from a long-term perspective. Currently it's around 1,700 odd levels, so one can look at buying this stock. If one wants to trade it from a short-term perspective, then also this is a good level to enter. You can expect an upside of say 1770, 1775 levels with a stop loss below 1665. As I said, one needs to be very clear that these are the trend. Intermediate term trend is the most important trend, and that is definitely weak. So if there is a pullback, which we've seen in many stocks, there's likely to be selling pressure also. The other stock to look at is from the FMCG space, and because that's one sector where we are seeing some sort of consolidation, and at least it appears that this sector has formed a bottom. So I think that's where we could witness some pullback here. And ITC is one stock one can look at from an intermediate to long-term perspective around the 400 levels.
Right. So ITC is a stock you should be watching out for from the consumption space. But moving on, the top stock of the day right now is IndusInd Bank, and that's actually fallen under scanner again. The bank has actually been in the news for all the wrong reasons, and this is since Sumant Katapalya took charge in February 2020. My colleague Vishwanath has done a deep research on what has not been working for the bank in the last few years. Vishwanath, over to you. Clearly, I mean, 2 to 3 days, the pain has continued today as well. That's what the scenario seems like. But if you could just put this into perspective for all of us.
Sumant Katapalya can't catch a break. That's essentially what the core of the story is. But see, the fact is that he took over after Romesh Sopti vacated the bank in February 2020, and he was a long-time leader at the bank. Since then, of course, the bank has repeatedly faced problems. Of course, COVID hit nearly a month after he took over, and that was a big hit. On top of that, the bank had also faced whistleblower allegations on its microfinance book. But let me get onto these in a bit. Let me first talk about what exactly does not work for IndusInd Bank. There has been news for all the wrong reasons. There's been repeated asset quality troubles at IndusInd Bank. Whenever something happens anywhere in the economy, IndusInd Bank comes out being the first hit or the worst hit in such a scenario. The bank has also said that it is not likely to meet its internal target of about 18 to 23% loan growth in FY25. That's because this year, of course, most banks have seen the loan growth suffer. What seems to be working under him is the fact that deposit growth has been strong all through. Asset quality in microfinance portfolios have all been relatively safe. So what we are seeing is that a bank that is stable but not really going anywhere.
No, but just one second. Vishy, let's just dial back to what has happened now?
Sure. Okay.
Yeah, I think let's start there because it's important to understand this. So banks are allowed to trade in derivatives, or at least they were till 2023.
No, so banks have always been allowed to trade in derivatives. They can still do it. The Treasury Department of a bank regularly trades in derivatives.
Okay.
The problem is an internal trade, or something that what the bank describes as an internal trade. Essentially, the bank takes on deposits from foreign depositors. A lot of these deposits are shorter term deposits which can keep getting rolled over, and that's completely fine. That's a normal piece of business. Here, in this scenario, IndusInd Bank took longer term deposits where there is limited liquidity. That means that during the 3 years or 5 years that you're holding these deposits, you can't really convert it or trade with it because it's the currency risk is too high. So what the bank does is it converts it into rupees and holds it on its balance sheet. In this conversion, there are two legs of a transaction. Internal, where you swap the currency and just hold that rupees on your balance sheet, and an external, because every time you have a forex exposure, you have to take hedging, and that is a requirement that the RBI requires all banks to do. And this external leg of the transaction, you mark to market. So wherever the market rates are applicable, you have to adjust the cost accordingly. Now, there is a difference between the swapped cost and the external mark to market, which tends to sort of align itself by the end of that contract. So if it's a 5-year contract, then by the end of 5 years, it aligns itself. The problem happens when mid-contract you unwind it. You basically give away those dollars or yen or whatever it is that you're holding, and you get out of that contract. When you unwind, then that difference still remains, and whatever the cost differential is that the bank has to pay from its pocket. Now, RBI in September of 2023 had released a set of guidelines saying that internal trades, that internal leg of the transaction, is not something that you should be allowed. You should continuously hedge or whatever foreign exposure that you have.
Yeah.
Now, that was to be applicable from April 1st, 2024. The bank has found out in October of 2024 that, we have 2,000 crore worth of hit roughly pending on our book, and we can't really figure out what to do with it. Let's try and first find out internally what went wrong, then appoint an external agency to look at it from an independent viewpoint and then validate our findings, and then in Q4 we will take that hit. That is what has happened at IndusInd Bank. The issue is, it is all coming at a time when the RBI has given only a 1-year extension to Sumant Katpalia after the board asked for a 3-year extension for him. And that's just compounding of all bad news together. Now, last evening when Sumant Katpalia held a call with analysts trying to explain what had happened, the analyst did raise a question. Who is responsible for this? Why should you be, who should be actually held responsible for the loss that the bank is going to face in Q4? And according to the bank, they're waiting for that external agency report, which will come in a couple of weeks. Then we'll tell you who's responsible.
Isn't it the top guy?
Yeah, but right now I don't want to say anything.
Okay. Abhizar Divanji is with us, founder at NeoStrat Advisor. Abhizar, thank you for your patience. Just trying to break down and understand exactly what has happened. How do you see this development? Does this prima facie seem like a governance lapse, an oversight, or something perhaps more disturbing beneath the surface? And that's really the question that the street is wondering about.
No, clearly there is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse, because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight, or is it a conscious management decision not to hedge and make some money out of a dollar position, is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved.
Mr. Vanji Vishwanath, the question, while regulation and regulatory sort of lapse, how does one look at it and say that, oh, this is regulatory and this is not governance? I mean, is that even a definitive decision that you can take sitting outside the bank? People inside the bank are probably better placed.
Governance is if nobody knows what happened to that exposure, and because of which the bank may end up losing 1,200 crores. That is a governance issue. That somebody just did not know what was happening. The other issue is a regulation lapse to say that I knew a regulation existed. I knew that there was a position in the bank, and that position was consciously held because I thought the dollar would move the other way. Basically.
So bad math.
So that's how I would differentiate between the two. What is right and what is wrong are again two different issues. But what I would very consciously want to say is that either which way it's a regulation lapse for sure. The governance lapse, I think, is a slightly bigger issue. That if one does not know what is happening in the bank, and that can be linked to the fact that, does a CEO get a 1-year term or a 3-year term? So I'm just trying to, kind of combine both these things and say that yes, banks which are currently trying to deal with profitability, some of them may have taken those decisions within their ambit. Some of them may have been, taken to say that this is a currency position I wish to take over a period of time. And there's an RBI circular which is ultra conservative in a sense that it requires every position to be hedged. And it basically tells the bank not to take any foreign exchange exposures, which may or may not be a correct regulation, but at the end of the day, it's a regulation. The problem is the differentiation we need to make is whether it is a lapse, as in a management lapse, I did not know the circular, or I knew the circular, but I wanted to take a conscious move.
Let me also ask you, obviously this is not a one bank problem, or at least I don't see it that way. Likely that you have skeletons hidden somewhere else as well.
Possible. See, I mean, that's always been the dilemma of the regulator, right? I mean, it happened in the Kotak case, it happened in the HDFC case, and every other case. When one credit card fault was picked up, others went and capitalized on it. And it's not that the other banks may not have had that problem. So yeah, it's, where the regulator catches the goose is the one which faces the heat.
Neeraj here, good morning. Do you reckon that, an incident makes the regulator even more watchful, right? We've seen that in microfinance, in a clutch of other things. Do you suspect, or do you hypothesize increased regulator scrutiny for a lot of banks which might have, similar traits in terms of higher NRI deposits or what have you, happening in the next few months?
Oh yeah, absolutely. See, the regulator is extremely vigilant and careful now because of the way the system is. The banking system is under severe profitability issues because clearly corporate is not fired and will not fire. Retail is firing but lacking. Things like microfinance are kind of hitting the roof. So we are facing an economy which is going to impact the banking sector first, because clearly that is the loans are the repository of where the stress lies. So I think as and when the stress comes up, banks are going to look at alternative ways of figuring out what they can do. So the vulnerable banks, especially the mid-sized banks and the lower-sized banks, are the ones which are going to be under excessive scrutiny, and rightly so.
Okay, Abhijit Diwanji, this was important getting your views this morning. Thank you so much for taking the time out and being with us and explaining that. So, clearly the biggest casualty of the day will be IndusInd Bank. The question only is, I read a few notes, right? Citi's note says that, this is bad, we are cutting the target price, but we maintain a buy with a target price of 1,100, because at 0.8, 0.9 book, how much further? Matlab, aaj agar 10%, 15% it goes down, that's about 0.8, 0.7 book. That's a PSU bank valuation.
I would guess the next trigger, if at all positively, is depending on who the next guy is. It would be the leadership announcement that could work in the interim. Maybe more to see on what these NRI loan deposits have cost them. Because they were very aggressive with those NRI deposits as well.
Yeah. So about 2,000 crore is what they're saying post-tax as of now, the hit.
Pre-tax, I think
pre-tax is pre-tax is 1,500 odd crore, I think, if I'm not wrong, and post-tax is about 2,100 odd crore.
Yeah, that's the range.
But in any case, the point being that there's likelihood that in Q4 you will see a significant profit drop, potentially could end up in the red.
Kind.
But yeah,
100%.
you never know.
They're saying it. No, thanks for that, Vishy. You know, let Sunny Agarwal with us. I just want to ask him if this is going to be an overhang. Sunny, we're not going to give you the easy question of whether IndusInd Bank will be hit. That's a no-brainer. But will you see an overhang on the bank nifty, on the entire space as a result of this today?
Yeah, good morning. I think, yes, definitely to some extent there may be a knee-jerk reaction, but I think again, this is not the first time that such kind of discrepancies have occurred in whether it is an PSU or private bank. If you go back in the history, this has been the regular activity where bank do keep on doing internal audit, or either on their own or RBI force them to do some internal check, and then you find some discrepancies over there. Coming to IndusInd Bank, I think the good news is that already the bank is sitting at one-time price to book. So I think the damage, the negatives are already in the price, although they were because of some other reason, wherein the unsecured lending book, which is microfinance, was under stress, and the bank was grappling with that, and hence the street was assigning value of close to one price to book at the current juncture. So I think today again a knee-jerk reaction, but since it's already trading at a very reasonable valuation, I think post knee-jerk reaction, maybe then a kind of sideways movement which we can expect in the IndusInd Bank. On other banks like HDFC or any other large frontline bank, in case there is a knee-jerk reaction, I feel it's a good opportunity where somebody who is looking for a medium to long-term investment horizon can accumulate those stocks.
Okay, all right. We'll do a very short break. We'll come back with more picks. We know banks are going to have a tough time. We know implied open is down, but are there opportunities to buy in the market? That's what we're going to talk about when we come back. Stay tuned for that and more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American.
Welcome back. You're watching India Market Open. Let's just quickly look at the implied open rate. The cuts of around 89 to 90 points is what is already being indicated. It's actually moved up above 100. So clearly 22,400 is what you're tracking so far. But let me again get across to Amar. Amar, clearly, we've already spoken about IndusInd, but in terms of, investors who are holding the stock, because of the pressure that could be coming in, would you advise sell or would you say hold on?
So I would say that, to a certain extent, things have been factored in, I would say, but this is something which has come off. So there could be some further selling pressure, because if I look at the charts from a long-term perspective on IndusInd, so clearly there is some very strong support coming around the 780, 800 level. So there could be some further correction, but I wouldn't recommend selling in a panic. Rather wait and watch out than just go all out and sell, and then you find that the market reverses, because the stock has corrected significantly. If I go back in time and look at in January of 2024, the stock was trading almost 1700 levels, and currently it's around 900. So we've seen a significant erosion already happening. So I wouldn't recommend exit at the current levels. Rather wait and watch out at least for a couple of days before taking any position. Levels to watch out on the downside is somewhere around 800, 820. That's a very strong support zone. That's roughly around 8 to 10% from the current levels. But one should wait out. But if you ask me about the trend is clearly on the downside. So higher levels will be sold into, and the stock could go in for some consolidation.
Right. So that's with regards to where IndusInd Bank goes. Apart from that, you have auto names that have been in focus as well overall. We will get to details in terms of the Maharashtra budget 2025 changes in terms of road tax. But Amar, again, coming to you in terms of the technical side, very quickly, top 2 picks in terms of the auto names.
First, I would recommend, what I look at is Tata Motors. This is one stock which has corrected significantly. It's down by almost being a Nifty heavyweight. It's a Nifty, I would say, in the Nifty index, it's down by almost 50% or so. We are seeing some sort of consolidation. So from a medium-term to long-term perspective, one can look at this stock, or further correction towards 600, 620 levels could be a good level to look at entry. For an upside target of 740, 750 in the short term. So this is one stock one can look at. And the other to look at, I would say, is the two-wheeler segment. I would say one can look at Bajaj Auto. So this stock has also corrected significantly. It's around very crucial support zones, currently around 73, 7400 levels. So one can look at a fresh entry for a target on the upside towards 7800, 8000 levels. On the downside, the stock is strongly supported around the 7,000, 7,100 level. But one needs to remember that we are expecting some pullback, but higher levels will be sold into, because the structure of the charts clearly indicates that.
Thank you for that, Amar. Great speaking with you this morning. Auto is going to be in focus for more than one reason, and maybe one of the factors could be what was announced yesterday in the budget for the state of Maharashtra, which introduced a revised motor vehicle tax structure. Now, they're saying vehicles priced below 30 lakh rupees will be taxed at 1%, while those costing above 30 lakh rupees, including electric vehicles, will be taxed at 6%. So, big differential there. Puneet, which companies does this impact? Now, break this down with the filter of OEMs, listed auto companies that have big sales in the state of Maharashtra and fall in the above 30 lakh bracket.
Well, definitely, and the reason why this is big, because Maharashtra accounts for roughly 15% of sales across India. So it's a big state in terms of revenue generation as well as sale for automobiles as well. Now, of course, with the largest player being Maruti Suzuki in the country selling over 22 lakh vehicles in a year, we could see some impact there. And because Maruti also sells roughly 1/3 of its vehicles in the CNG powertrain specifically, so 1 in every 3 vehicles sold by the company is CNG. Apart from that, Hyundai also could see some impact. Roughly 15% of the volumes come from the CNG powertrain. Again, Maharashtra and Karnataka and all these states are one of the biggest contributors for them as well. Apart from that, while the tax increase might look minuscule, roughly about 1% increase in CNG and EV vehicles now at 6%. Currently, across India, EV vehicles are taxed at 5% versus 28% for petrol vehicles. So there was a differential there and a 1% increase. So they are expecting 150 crores, which could increase in the state budget specifically for Maharashtra as well. Now, just to give some context, in 2024, roughly 15,000 electric vehicles were sold in the country, in Maharashtra specifically. These also include SUVs as well, and could see one of the key impacts. And I think just when you're talking about electric vehicles, because it's come above 30 lakhs, Mahindra could have some impact because they have the XCV90. But apart from a few of these moves, it could have some bittersweet impact. But the impact wouldn't be as big to just enter in this particular discussion. But could see some impact going forward in the CNG segment, where the affordable segment is for CNG vehicles.
All right. So what is the impact? Mumuksh Mandlesha, research analyst at Anand Rathi Institutional Equity, is joining us this morning for more on this. Great to speak with you this morning, Mumuksh. Thank you for joining in. So on a scale of, okay, slow, medium or high, what is the impact of what has been announced in Maharashtra yesterday from the perspective of auto companies at a time when honestly sales are not on fire? They're still fairly sluggish and everyone's betting on EV.
Yeah, I mean, just to summarize again, going one by one. So, firstly, on the CNG 1% road tax increase, I would say it would marginal impact. So, say a vehicle costing about 5 to 10 lakh rupees, 5 to 10,000 could be the increase in the cost. While for the EV, there's a good increase of 6%, but for vehicles above 30 lakhs. So here, particular Mahindra particular variant gets impact by the change in the tax rate. Then coming to their further two changes, also to note down, there's also 7% increase in the road tax for the light good vehicles and construction equipment. So there, I think it's more notable change in the road tax, and there I think there could be some demand impact. See, I mean, for a Mahindra or a Tata on a larger scale in India level, maybe the impact would be less than a 1%. But yeah, it's a sentiment impact which was unexpected, and this could hamper more of a light good vehicles and the construction equipment segment.
Right. Mumuksh, any thought behind what could be the rationale behind this? Because if you talk about the collection for the state government, not a major number, we're talking about 150 odd crores in terms of FY26. So what could be the rationale behind this according to you?
I think it seems more like a revenue generation only. I mean, across, if you add all the four changes, it seems like more than 1,000 crore of increase. So it seems more like a revenue generation thought process. While I mean, because if I mean, there's no need to increase the road tax for CNG vehicle, right? Government want to push green vehicles, and if you increase the tax on the CNG, it doesn't give a good signal. So it's a little adverse. I mean, little different from the national level policy. Yeah, but it seems more like government want to drive some revenue from out of it.
Right. And Mumuksh, then in terms of stock specific impact, where are you seeing, from the listed space firstly, which companies will be impacted the most, specifically from a volume perspective as well?
Yeah. So, see, I mean, for likes of Mahindra, Tata, Ashok, I think these three in the LCV space, and say in the construction equipment likes of Escorts and East Construction, those could be the impacted. But you have to understand, I mean, say a particular segment in the Maharashtra, say LCV, and this construction falls by 10%, assuming this demand this changes impacts the demand. Then, I mean, overall basis on India level and on the company level, it would be say less than 1% only. But it's more like a sentiment impact rather than so much on the absolute demand impact in terms of volume wise.
Well, we'll have to wait and see. Strange move in that sense, because you have every state which is trying to encourage electric vehicle and CNG, and this is quite the reverse in a very large market. I want to quickly see what MGL is doing this morning. Momoksh, thank you so much for joining us. Let's just quickly pull up Mahanagar Gas, because the addition of CNG vehicles was a big uptick for Mahanagar Gas, and this is going to be a downer in terms of any impact we could see on demand, even if it's sentimental at this point, in just a 1% increase. Sunny Agarwal, you were just talking about autos before we got into this conversation, just on the specific angle of what happens in Maharashtra, and that you're going on taxes on electric vehicles from 0 to 6%. If you look at the rest of the categories, it's a 1% increase. But Maharashtra, Mumbai, important market for an M&M, which has now sold a decent number of pre-booked vehicles for one category in electric vehicles.
Yeah, definitely. I think, the jump is significant when it comes to the price band of 30 lakhs and above. But again, one has to assess whether the customer who is willing to buy a car in a price point of 30 lakhs and above, does the, if I take a net impact of 6%, it will be close to 1.5 lakh rupees. Whether additional 1.5 lakh rupees deter him from buying his vehicle or postpone his buying decision, I think the impact will be minuscule. And on coming to the 1% increase, I think that's again a very minuscule impact in that price band. I think, as I was listening to the earlier conversation, also the impact is predominantly more on a 10% jump on construction equipment space and light commercial vehicle. So that's the main area which will get impacted immediately in terms of volume. So I think, again, as we have seen historically, that whenever there is a price increase by either directly by OEM or due to some changes in regulation or tax, obviously the demand get impacted in short term. But again, over the period of next 3 to 6 months, there is a pent up demand which catch up because of this temporary slowdown in the volume.
Okay. Well, 908 has happened, and the pre-open rates have settled down, and suffice to say, it's not a pretty sight. And quite interestingly, the Nifty IT seems to be correcting a lot more than the Nifty Bank. IndusInd Bank should come up on your screen. Now let's get the Nifty IT, Nifty Bank and IndusInd Bank. IndusInd Bank 10%, Nifty Bank 0.7% if I'm not wrong, should bring that one up for you. And Nifty IT should come up on your screen, 1.22% higher. So clearly a lot of pressure on the IT names individually as well, which is leading to this index looking the way it is. Okay. The key is, even on a day like this, are there some positive notes that have come in? I think that's a key question that we pose, and we'll try and get in the Macquarie view on Adani Ports in moments from now. In fact, I'm told Varsha is ready with us, so let's get her in on this. Varsha, good morning. What does Macquarie have to say?
Good morning. So they've initiated outperform on Adani Ports with target price of rupees 1500. That's 32% of upside potential that we are talking about. Now what they're saying is that company is well positioned to capitalize on India's long-term growth potential due to its business's thematic alignment with the nation's development, and a diversified port and cargo mix support resilience, and the increasingly integrated nature of logistics offering should aid further customer lock-in. Brokerage is also seeing visibility of healthy recurring operating cash flows, which remains high, supported by mix and customers partnerships. Now we all know that company is India's largest port operator and aims to grow twice the rate of country's cargo volume, and a management's target for the company's logistic business, inland transportation, warehousing, is a 40 to 45% revenue CAGR over the FY 25 to 29, which the management has given this guidance, and based on that, Macquarie sees 14 to 17% of increase when it comes to revenue, EBITDA and profit before tax over FY 25 to 27 with 17% of ROE.
Okay. Adani Ports in focus as well this morning. Akshay, view on Adani Ports and of course your picks.
Morning. So first of all, on Adani Ports, if you look at the technical price chart in the last 4 weeks, one thing is clear that the support of 1000 to 1020 is a very firm base building up from a medium-term perspective. So that support is there to hold. And overall, technically, the way the stock is kind of building up a support, the chances are high that from a trading perspective, this might head till levels of 1300 to 1325. So yes, if you have it, hold. or in case you want to buy, you can consider buying with a strict stop loss below 1000. For as far as the trades for the day goes, I have a buy and a sell recommendation. Looking at the current market structure, the buy is in the FMCG space. Here, Hindustan Unilever has seen some recovery from highly oversold zones. There was flow in the FMCG pack, and technically, HUL is the stock which has a significant potential to stage a bounce back. 2324 and 2350 are the two targets one can work with a stop loss of 2152. The second trade is in BHEL, that's on the short side. Here, the technical structure is poised on the downside. There are chances that on the short term, the stock might correct till 180. That's the first target, and 177 also, that can be the second target in case the downside aggravates. 201 is the stop loss you need to place on the short trade.
I find it interesting that HUL was Akshay's call, and Amar earlier gave an ITC call, of course, on technicals. Sunny, when the going gets tough, do the tough, in this case FMCG defensive play, get going?
Yeah, I think yes, few of the companies. So again, we have recommended Imami to our clients yesterday, and we feel that that is the one company which is trading at an reasonable valuation and kind of under owned. So we have seen a very strong quarter by Imami in the December 1, wherein anyway it's a signally strong quarter for Imami being a winter focus portfolio. But again, as per the analyst call and our interaction with the management, we feel that the same momentum will continue for the March quarter also. Trading at a reasonable 25-30 time price to earning multiple as compared to 10-year average of 35 to 40 band. I think undervalued compared to the historical valuation, and when growth momentum is kicking back, I believe there is a fair chance of re-rating as far as valuations are concerned.
Regards to valuations in terms of where consumption goes, very quickly, Akshay, if I have to come to you in terms of names like an Amber Enterprise, Voltas under Crompton, any topics coming in on that front? Because again, a strong summer is what is predicted. Fundamentally, there is some strength, but what are charts indicating?
Yes, you can consider these names, especially Voltas and Amber Enterprises are the couple of stocks which are very firmly placed. If you were to look from a short to medium term perspective, yes, there can be some bit of volatility because markets right now in a rough patch. So you have to deal with this volatility. But overall, there is a strong support which is building up in Amber Enterprises at the levels of around 550-100, and broadly the expectation is that from a medium term perspective with a time horizon of a month, you can keep a stop loss below 5500. On the short term trading perspective, the recovery, you can, if it unfolds, you can expect targets till around 6900 to 7200. And as far as Voltas goes, there has been some long additions in the futures and options space as well. It stayed a good recovery, but a slight dip around 1275 would make it more lucrative buy, with a target of around 1540.
Okay, well, brace for impact. May not be a very large one, but on IndusInd, it will certainly be a large one. But this is how the markets are starting off this morning. About 0.5% on expected lines. Banks 0.6%, and IT 1.73%. So clearly the Nasdaq slowdown or the Nasdaq pushback yesterday is impacting the IT stock sentiment. Mid caps down, small caps down, no respite. I want to pull up the heat map and see if there is any green on the screen. Well, a little. So, interestingly, what is IndusInd's loss is ICICI's and the others' gain. But IndusInd, 10% lower. This will open further in a few minutes, and you'll probably see a further downtick on this one. And with reason, by the way. Then Infosys, Wipro, Tech Mahindra, HCL Tech, TCS. It doesn't matter whether brokerages come out and say that these stocks will do well, high conviction outperform on persistent by CLSA today. Just doesn't matter. Right now, with Nasdaq falling the way it is, IT stocks will be taken to the cleaners. So there you have it. One mid-sized bank and IT doing what it does to the index today. Then, of course, there is a Hindalco, there is an NTPC, Coal India, etc., a few losers. So that's the one. The interesting thing though today, viewers, and Tamanna and Hiral for me is that what is turning, it's not across banking. The market is viewing this as an IndusInd problem because you are seeing gains for even an Axis Bank and an ICICI Bank in the session today. So clearly the street believes that there might be a difference between what IndusInd is going through versus what others might be going through, and what is IndusInd's pain is turning out to be some gain for some of the others. I'm not saying this will last through the day, but for now the street is voting with its verdict.
It's actually a silver lining if you look at it, Neeraj, that there is no fear of a contagion with what's happening with IndusInd Bank. As far as IndusInd Bank is concerned, that's a wrecking ball to the stock. Let me pull up the Bank Nifty for you very quickly before we get to the broader markets. Just want to see what the rest of the Bank Nifty is doing, and if we can pull up the components as well, that would be nice. About over a 0.5% down. I'm not surprised, but if we can just pull up the components of the Bank Nifty, because right now the Bank Nifty is in line with everything else in the market. ICICI Bank is the lone ranger. So, you know, we need to look at it a little more carefully. Is ICICI Bank's positive reaction in response to what's happening to IndusInd Bank, or is there more? By itself, IndusInd Bank, perhaps not enough weightage to pull that entire segment down, but a deeper dive into which banks have how much exposure in this space might be interesting. All right, let's look at the sectoral heat map very quickly, because broader markets not doing too much better. Only the VIX in the green. That means you have a tough morning. Look at the Nifty small cap 250. I think this is the worrying part to look at, and I don't know if you can pull up the intraday chart this early, but 1.5% on small cap is not great. Nifty IT, I mean, what do you expect to happen if the Nasdaq is closing down 4% over 700 points? That's what you see on the Nifty IT. Relatively, finance, healthcare doing okay. Not a spot of green here except for the VIX, which is only showing higher volatility and nothing really else. Let's take a look at specific stocks this morning. I'm going to start with IndusInd Bank just to see if it's fallen any further, whether it's on a circuit, what has happened with that stock. We told you it's going to be a tough morning and difficult to come back from this anytime soon. There will have to be some very clear measures being given from the management to reverse this situation. 10% down on IndusInd Bank. Aadhar Housing Finance I wanted to pick because stock was buzzing yesterday on its open offer, now under pressure this morning as well. Auto taxes have been increased in Maharashtra on CNG and electric vehicles. MGL, let's look at what's happening there. M&M not too bad actually, 1% down, MGL about 1.5% down. Tata Motors likely to also be impacted. What's on the positive? Anupam Rasayan was on top of my watch list this morning because of a 900 crore order win, managing to hang on in the green just about though. Adani Ports has an outperform rating from Macquarie, just about 0.5% up. BEL, 843 crores worth of order wins. Has it helped the stock? Barely. Hitachi Energy has launched a QIP. Nothing much happening there, completely flat. I suppose flat is good in this market. Syngene has an acquisition in America, just about 1% up. Tough to spot green. I don't know if you're having better luck, Hiral, but it's a tough morning.
It'll be a tough morning, except I think Anupam Rasayan, in spite of positive news for a few of the other names, I think you are seeing that downtick that has continued, because if you talk about Indoco Remedies, a 6 to 7% is the kind of cut that you're seeing on the back of the US FDA action on that one. Hindustan Zinc is under pressure. Apart from that, Ashoka Buildcon, Aditya Birla Capital, Premier Explosives, that stock is seeing cuts of really 4.5% as we speak. So again, I think, Neeraj, the key over here is, I think streets are not really enthused with good news, but the negative news is actually beating down the counters, and that's the trend that has been continuing, I think, for weeks now.
Yeah. You hit the nail on the head, Hiral, and that seems to be the tally for today, and maybe for the near term as well. The question only is there merit in buying into the weakness? Because as, for example, CLSA today said that they have upgraded Persistent to a high conviction outperform, double upgrade or thereabouts. I'm sure it's not having an impact on the stock. Oh, actually it is. It's
just flat.
In a bad IT day, Persistent is flat in trade. Let's get in Sunny Agrawal's view on these. And Sunny, what about businesses like Persistent, Coforge, etc.? Are they standing out, or right now with Nasdaq slipping, it's better to stay away from IT?
I think selective IT names, as you pointed out, Persistent, Coforge, which are a clear outperformer in terms of delivery on sales and earning growth. So if you look at tier 1 companies growing in the band of 4-5%, whereas all these smaller companies like Persistent, Coforge, or for that matter, First Source Limited, growing in the band of 14-15% with a very good growth trajectory for next 3 to 5 years. So I feel that outperformance from these players which are growing in mid-teen will continue. although the valuation may appear to be expensive, but obviously the street will like to give a higher valuation to the companies which are reporting a consistent growth over the period of next 3 to 5 years. So again, we continue to remain selectively bullish on IT companies which are growing in mid-teens. So like obviously in that category, companies like FirstSource, Persistent and Coforge, these are the few names which fall in that category.
Right. So that's IT. Another sector I want to point out towards is real estate. Clearly, I mean, it's the worst start to the real estate sector in 14 years. The index is down almost 23% on a YTD basis. And I think a similar kind of cut was back then seen in 2011, where the sector was down around 26%. Now, clearly, the approvals is something which is lacking. There have been delay in launches as well. So probably there could be a miss in terms of the FY25 guidance. Sunny, coming to you, how are you looking at the real estate space and taking the concerns into consideration right now and the performance? What would you advise investors to do?
Yeah, coming to real estate, I think affordable segment is under stress. That is what we have observed there. But the mid-size as well as the premium portfolio continue to do well. So again, we will be selectively bullish as far as real estate sector is concerned. So few of our ideas which we are recommending our clients to accumulate on these are basically Macrotech, which is an Lodha developer. We feel that the Palava city is something which has the value is going to unlock significantly because of certain infrastructure development around that. At the same time, a smaller player from Mumbai, Suntech Realty, where we find that the pre-sales number continue to do well, so trading at a reasonable valuation. Going to the Bangalore market, I think a player like Shobha Developer, where we are again, they have recently forayed into Dubai, which is the premium end of the property market. And at the same time, we have seen buying by the promoters also through the open market. So Shobha Developer. And if I have to go by the mix of residential as well as commercial, then Phoenix Mill is something which is a kind of play on urban consumption story. So Phoenix Mill is something which we are recommending.
Okay. Akshay, opening thoughts, IT, banks, small caps, all of them reeling under a bit of pressure.
Yeah, so the pressure is going to mount during the day, especially on the IT and the banking pack. But here, selectively, if you were to nibble at opportunities, banking, it's pretty clear in the opening trades, at least, that IndusInd Bank is the target of selling. So really, the flow is shifting from IndusInd to other private banks, as I see right now in Axis and ICICI. So from a short to medium term perspective, I think technically, broadly, these the technical charts are still promising. So I would be looking at opportunities in ICICI and Axis Bank from a medium term perspective. These would be good opportunities to look forward to. IndusInd Bank, yes, further selling might see this stock moving for levels of around 950 or 960 for the circuits await as the day progresses.
IndusInd Bank and the lower circuit. I'm wondering, Akshay, what would be your take on a BEL and an Anupam Rasayan? Would you say that there's a further up move here that you could see?
Yes, definitely. The price structure of BL is very strong. It is just that, from a short-term trading perspective, it's going to be a challenge in the market. But really, if you look at the price structure of BL from a week or a month perspective, there is a very strong support which has been built at the levels of 240 to 250 zone. There has been long additions. Volumes are picking up 240, 250 odd levels. And broadly, as the chart structure suggests, that this is one of the best names to be in the defense pack. Clearly, if the market does give a support to the broader space, I think 325, which is the swing high which we have seen a few months back, that should be in the making back again. So BL is one of the names with the strongest technical setup in the defense space, and one should be invested in this name.
Okay, so BEL, you remain invested. Any of the autos that you would pick up right now, Akshay, while this period of flux is going on?
Yes. So auto space still with the news which has hit the sector yesterday, there is going to be some further selling interest in this from a short-term perspective. Most of the price charts are heavily oversold, but still there is no evidence of a clear support in place. If you are interested in bottom fishing candidates, then I think Tata Motors somewhere should probably bottom out around the levels of 620, 25 odd levels. So from a buy and hold perspective, in anticipation that the stock should bottom out around 600, 625 zone. This would be a good bottom fishing candidate. Some time may be needed for its recovery, but these are good levels from a technical perspective to get in. Target still 755 to 780 should be in the making.
Okay. Macrotech buzzing this morning. They are expanding into another suburb of Mumbai called Jogeshwari. They have tied up on a plot there. That stock doing well. HEG has a new operation in Bhilwara that they have announced. That stock 4% up. We're trying to pick winners for you this morning. Paytm. Is Paytm in that list of stocks that will see some buzz? Akshay, I'll come to you on the technicals first and then I'll come to Sunny.
Well, technically, it's a bit early. The day has played out well, at least for the names which you have mentioned, but still there is no firm evidence as yet that these would be basing out levels. As after checking all the three names which you mentioned, I think Paytm is one stock which has some potential of trading recovery. 680 is where it trades right now, highly oversold on technical charts, on the technical short-term charts, and a recovery can ensure a target still 730 to 740. So this is more of a trading bounce back. Really nothing much to read in the names you mentioned. All are in a weak trend. Paytm is the best bet if one is looking forward from a short-term trading perspective.
Okay. Sunny, Paytm, I spoke about Macrotech, HEG on fundamentals. Any of these that you find interesting?
Yeah, definitely. I think Macrotech, as discussed earlier, we find a lot of value in the company. So if you look at Macrotech, two things that is playing out for Macrotech is basically diversification, where you see that Dombivli, which is a Palava city, continue to do well. Today's Jogeshwari news, at the same time, they are venturing into the different cities. So the risk diversification is something which is playing out for Macrotech. And at the same time, if you look at balance sheet, debt repayment is a strategy which company has adopted aggressively, and the balance sheet is getting leaner every year. So again, that plays favorably for a Macrotech developer. I think the fair value of Macrotech is close to 1,300 rupees if somebody has got an investment horizon of 6 to 12 months. So I think Macrotech is one of our top pick as far as the real estate sector is concerned.
Sunny, thanks for that. Before I get to the next piece, just want to mark a couple of things. And of course, Akshay, thank you so much for joining in today as well. Really appreciate your time, gentlemen. Before we get in, Manishi Ray Chaudhary, just a quick mention. Tamanna was talking about how we are trying to find spot into strong names. We just put out a small piece of development that has happened on Laurus Labs as well. Analysts have told NDTV Profit that they've done some solid export booking in Jan and Feb, as a result of which that stock is up in trade. So watch out for that one. Tata Communications, I believe, is up in trade as well. So that one seems to be doing okay for itself too, about 3.5% higher. So there are some individual winners in the session today that you shouldn't ignore. And while there is a fair degree of pessimism around, before I go to Manishi Ray Chaudhary, I want to bring out what Macquarie has said in its note. Now, of course, they have done this EU or European Union roadshow with 30 EU investors for financials, but there is implication for market wide as well. And let's bring up the snapshot of the Macquarie FI meet. So this is a meeting with 30 EU investors. They say that investors are looking to deploy money into Indian markets post the corrective move. They go on to say that while investors may cut current underweight stance, overweight is still some time away, which is actually good to know, because this is not a switch. This cycle is slightly different, and therefore investors are being rational. But the fact that they are not underweight is a big thing. And they say, the most important thing to my mind, they say that India is a structural story. China has structural issues and therefore is a tactical short-term play. Now, they also speak, global investors talk about the Indian domestic investor. They say that the key worry, according to those EU investors, was how domestic liquidity could get impacted post the recent correction. They are closely monitoring this, keenly tracking the monthly SIP flows and overall MF inflows. And I think they said that if there are dip in inflows, it could be the biggest risk derailing recovery in the Indian markets, not the economy, the markets. Having said all of this, are they preferring something So the Macquarie goes out and says that the financial stocks that had the most interest, HDFC Bank, ICICI Bank, Kotak Bank had the most interest. So bear this in mind. They say that many investors hold Bajaj Finance and they are happy with the recent rally. There are a lot of interest emerging in Shriram Finance as well as a fintech player, which is PB Fintech. Interest after the recent 35% correction is what Macquarie says, but they are underweight some of the others and low interest in Axis, life insurance companies, PSU banks and NBFCs. So keep all of this in mind. And just before we get to Manishi Chaudhary, just want to pull up IndusInd Bank once again and see what that one is doing today, because quite unlike ICICI Bank and some of the others, this one was correcting. So this is the Macquarie view, of course. IndusInd Bank 15% down, lower now on a lower circuit. So this one continues to struggle. Let's get in Manishi Chaudhary to talk about all of this and more. Manishi, great having you. Thanks so much for joining in. Before we talk about the wider India interest, Manishi, or the lack of it right now, would love to know what you made of this whole IndusInd saga, if I can call it that. I mean, if you've heard of the news, because in case you haven't, I mean, there is a declaration that they have done which has a 1,600 to 2,000 crore post-tax or pre-tax impact on net profit, which will be accounted for in Q4. What do you make of such a development?
Well, I mean, I wouldn't comment on this specific case, but I think it's a perennial problem with some of these second-tier banks, or even some of the non-banking finance companies that we have seen earlier. So, it is something that investors have to be mindful about. I have seen commentaries where, some analysts have said that IndusInd Bank is the next Yes Bank. So it's I think some kind of a generic problem that arises from time to time as far as the second and third tier banks are concerned. Earlier, it used to be a problem with the public sector banks. Now it's kind of, over the last few years, it has kind of come to the fore with the private sector banks also. So I think in these circumstances, it is preferable to stick to the large cap frontline banks, which have way better asset quality than the second and third tier banks.
Manishi, hi, good morning, Tamanna here. I think that's a very interesting observation when you bracket second tier banks, because today you're seeing an ICICI Bank responding positively, but I know you might not want to get into the specifics. Let me get the overview. What we're seeing is the aftermath of what is shaking up the US markets right now, and of course that's playing out in quite a strong fashion in India as well. Do you think that this pain continues for us? We remain relatively unscathed, and the idea and the sense prevails that the domestic Indian equity market has its own factors, not just necessarily needs to be rocked by what's happening in the US.
Right. Let me summarize what's been happening. In fact, the current narrative is that of a potential US recession. How did it arise? Because investors are most concerned about the recent, the narrative of the Trump administration, that they may not be too concerned about a short-term turmoil in the economy and the market. Earlier, everyone was expecting that, okay, the US administration is business-friendly, they're market-friendly, and therefore, if they see the possibility of a serious market downturn, they would possibly provide a backstop. They would maybe temporarily back away from, the kind of tariff war that they have unleashed. But it does not appear to be so right now. And that is the biggest concern. That, this whole uncertainty about the way the tariffs are going to be implemented, the kind of retaliatory pressures we are seeing, the counter punches, they would actually likely continue for some time. And if that is indeed the case, then the next hurdle, the next timeline to be watched out for is April 2nd, when the reciprocal tariffs kick in. And these reciprocal tariffs have an implication not just for Canada, Mexico, and China, but for all US trading partners, including India, where I think potentially the calculations show that the tariffs can go up by about 15 to 16%, and that's significant. So this time around, the tariff net is being cast much wider. they're also much higher compared to the 2018 episode. In the 2018 episode, throughout the year, we saw S&P 500 decline 15%. Asia ex-Japan declined 25%. Of course, at that time, it was more China and Korea. India relatively didn't suffer. India declined only about 6 to 7% in that episode. This time around, it may be different because India is also being dragged into this tariff net, as we can see. So, near term would be volatile. There are hardly any hiding places, apart from high yield bonds, maybe US treasuries, and so on.
But even there, I think, Manishi, of course, what we've seen yesterday, right? With the markets correcting how they have, the cohort of people who wanted to move to safe haven have put in money on this policy sensitive 2-year treasuries, right? And where the yields have dropped quite significantly as well. Are you, who's got the option of investing across multiple markets,
right,
currently staying away from equities, Manishi? Is that what I'm hearing right now?
For the next month or so, I will certainly do that. I will possibly stay away from equities. My overweight positions, both personally and, kind of recommendations to our clients, they have been in favor of the relatively cheaper markets in North Asia, particularly Greater China. There are, some policy stimulus in favor of consumption that are emerging in these markets. Some of the Chinese tech platforms, they're also doing much better than the US Magnificent Seven. And we think it's likely to be so because the recent experience of the Chinese LLMs have shown that Chinese technical capabilities are monetizable, which was possibly not quite anticipated to this extent even a few months ago. So, I think, domestic consumption, some of the tech platforms, internet platforms, these are the ones we like in this part of the world. India incrementally is actually looking interesting after this 15 to 16% correction that it has suffered. Particularly in case of large caps, a few sectors, let's say financials, the frontline banks, I would say, some of the industrial names, they've actually corrected to such an extent that, some incremental inflow could come back there. But it still remains a very careful stock selection market. One can't really paint it with a broad brush at this stage.
Fair point. Okay. Manishi, there is this tilt or shift, if you will, in India towards consumption from the government side as well, right? After years of capex push. Not to say that capex is dead, but there was a push given to consumption. So therefore, my question is, if you're starting to see India interesting, large caps as it may be, is the bias different than the previous 3 years? Are you betting on consumer themes, discretionary staples, what have you? Or are you doing a mix with a tilt towards maybe economy and capex?
Right. I think the incremental tilt has to be towards consumption, particularly consumer discretionaries. Because, think about the kind of the bracket of the population which has got this tax benefit. This rupees 1 trillion tax benefit is going to the taxpayer, basically, up to 12 lakhs in India. And their incremental spending would likely to be in discretionaries, not so much in staples. So, I think automobiles, other consumer discretionary household appliances, these are the ones which one would have to take a look at very carefully, particularly those which have a strong earnings growth story and at the same time are reasonably valued.
Okay, Manishi, and sorry if I'm repeating this, but I would love to know. Let's assume somebody's got limited capital, right? And actually, not let's assume, everybody's got limited capital, right? Within consumption, is it towards discretionary, which a lot of people are saying could benefit by virtue of the tax cuts this time, then the pay commission hikes that come in Jan 2026, so on and so forth, right? So is discretionary the overarching favorite, or do staples come in as well? Because, staples have this issue, right? The growth is not very high, regional competition is stepping up. why do you pay them 45, 50 times multiples?
I agree with you there. In fact, my overwhelming preference, if I were to disaggregate these two segments, would be in favor of consumer discretionaries.
Okay.
Discretionaries in preference to staples. There's no doubt about that.
Okay, and sorry, just trying to simplify this, Manish, so that people get a takeaway. And I'm not asking you to name stocks here, of course, but by discretionary, would it be air condition manufacturers? Would it be mobile back-end manufacturers, the EMS players? Would it be some of these financiers? How do you go about playing discretionary?
Oh yes, of course. I mean, I would include that in that definition, the entire supply chain. So yes, household appliances. As you said, the manufacturers, the mobile back-end manufacturers, or even automobiles, auto components. So that's a very broad canvas to play from. But I think pretty much all of them would benefit from this consumption push that the government has implemented.
Okay, so I just want to go back to what you said, Manishi, about the equity fast for the next 1 month, so to speak. Just stay off equity for a bit. And for our viewers who are watching from an Indian perspective, then what are the best asset classes and options right now? Because let's give them something that helps, make that decision. What at this time when equity is looking a bit painful should you do? Should you sit still, keep the faith, look at other asset classes? What would you say?
Well, I think about a month ago, I was possibly on your channel and a few other peer group electronic media. I did talk about gold at that point of time. Gold has been a favorite for a while now, and you've seen how, gold prices have behaved. But I would think in the current uncertain period, that would gold and silver, possibly that should still be one of investor favorites. We're also seeing currency-related, turmoil, currency-related concerns, and in times like these, those hard assets they tend to do better. They're also seeing significant interest from governments with various central banks in terms of purchasing bullion. Second, I would think that in times like these, cash is king. Money market funds, some of them have decent yields, maybe 4 to 5%, or maybe even higher in some cases. I would also talk about dividend yields. Dividend yields are difficult to come by in India, but there are lots of options and very good options in East Asia. Where I sit right here, there are state-owned enterprises, the SOE banks, some of the oil companies in China, which are yielding in the range of 6 to 9%. So there are options, no doubt, for capital preservation, which I think would be the supreme interest in the kind of situation that we are living in.
Very interesting. Manishi Rai Chaudhary is saying that gold is looking, good right now. Gold is the exciting bit. From just on the tariffs perspective, and this is crystal ball gazing, knowing that things are changing every 24 hours. But if the Trump tariffs do come to pass, we see a full-blown trade war. What does this mean for the way the Indian economy is structured and the impact for us?
You see, I think as far as the Indian economy is concerned, the negative impact would be more on sentiment than on actual fundamentals. So there is a lot of research on this. Possibly the most prominent is by the Yale, budget lab, as they call it. And so they have talked about the potential increase in tariffs if the reciprocal tariffs come into implementation. And by their calculation, average Indian tariffs would increase by about 16%, which is one of the highest. So for China, that's slated to increase by about 13%. But Chinese tariffs have already increased by 20%. So in case of China, the worst may be behind us. So if the average Indian tariff for exports to the US increase by about 16%, that's a pretty strong outcome. But at the same time, if I look at India's total exports to the United States, that is hardly about 2 to 2.5% of the economy. So I think rather than the depressing impact on the economy, it would be more of a depressing impact on the sentiment. Both sentiment as far as the financial markets are concerned and sentiment as far as corporate investment behavior is concerned. And that is what we have to contend with.
The negative sentiment is what we have to contend with. Unfortunately, no dearth of negative sentiment right now. Thank you so much, Manishi Rai Chaudhary. Great to speak with you. As always. Well, the big story of the morning is what's happening with IndusInd Bank, and we are on top of it. Time for an NDTV Profit mega exclusive. Vishwanath Nair joins us in the studio for more on this. Now we're getting perspective from the other side, so to speak, Vishy, on what exactly they were doing, because that's the big question, right? As we see that stock plummeting, that did they not know? Was it a lapse? Was it deliberate? And what really happened?
So here's what we understand from sources, understanding what exactly happened at the bank in the run-up to the issues that have come out. Now, what the sources are telling us is that the bank runs very large treasury operations, so it went under the radar, sort of. That's the kind of commentary that's coming in. What we also seem to understand here is that as soon as the bank discovered that there is a gap, that was in October of 2024, as soon as they discovered it, they immediately started their checks and their own findings. Now, at the time, they were not aware what the size of this hit is likely to be for the bank, so they started doing their own checks. And alongside that, they also appointed an external agency. Now, what sources are telling us is that PwC is the entity that has been appointed by IndusInd Bank to conduct the external validation of the findings that the bank has come up with. During this period, that is since October till last evening, when the bank actually announced what the issues were, the bank has conducted its own investigation, has found the amount that is going to be likely the impact on its balance sheet. The external agency is likely to submit its report in about 2 or 3 weeks, and then finally there will be some amount of hit that will come in during Q4. Widely expected that the bank will report a loss in Q4 because of the size of the impact here. We're talking about 1,500, 2,000 odd crore. What is important also to note here is that last evening's commentary involved the Reserve Bank of India's decision to give 1 year to Sumant Khatpalia. Now, according to what sources are telling me is that the RBI has not communicated any specific reason for this 1 year extension, but the message seems to be clear. Now, if you give shorter extensions for 2 consecutive periods, then it's very, very clear that there is an issue that the RBI does not like the way the bank is progressing at this point in time. The current CEO of the bank, they don't appreciate his leadership, and that's probably why they're giving the shorter extensions. And now it's up to the board to figure out what exactly they need to do.
The other interesting piece, and we'll go to the next management in just moments from now. Yeah. But I read one of the flashes that we're putting out, that the size of the discrepancies relative to the overall size is very small. Yeah. But our back of the envelope calculation seems to suggest from a Q4 perspective that it is immediate and
exactly. So the treasury book, of course, has active transactions that have been going on for years on end. So cumulatively it will be a very large amount, and of that, about let's say 2,000 odd crore is going to be relatively small. But that's really not, that's a fig leaf of a defense. You can't really hide behind that as a reason. That's why you do audits.
Yeah, no. So Vishy, just on the part of how it's becoming about the personality and the MD and CEO, and you also mentioned that, and he said it in his thing, that I don't think the RBI likes me. Yeah. So that stood out for me, and I found it very strange, because at the end of the day, it's about what the bank is doing, and you're assessed on that.
Yeah, exactly. So any CEO, since time immemorial with private banks, your CEO's position, their salary, their bonuses, everything is decided on how the bank actually performs, right? And if there is an issue with the bank, and it's a sizable issue which is going to affect one quarter's results, then the CEO is going to be on the dock for sure.
Yeah. But okay, so that's coming in 19% down, 18.5% down on IndusInd Bank. Tough to even look at that screen right now, but thank you for that, Vishwanath Nair, with that exclusive perspective. Sources telling us that IndusInd Bank's hit on their treasury is a smaller part of their entire book. All right, let's turn our corporate focus now to Kalpataru Projects. The director at Kalpataru Projects is with us, Amit Uplenchwar, joining in. Mr. Amit, thank you so much for speaking with us on the show today. I mean, we want to speak to you about the order wins that you've announced, but I believe there's not too much detail you can share on that. Having said that, that's what's been exciting for the street. New order wins were 2,306 crores. What are you comfortable sharing with us on this?
So, well, thanks for having me here. We've always given order wins by segment, and I think as we spoke at the beginning of the year and also after our Q3 earnings call, our transmission sector and our building and factories segment looks very, very robust. And both these orders are in these segments, which add up to the new order wins that we just declared.
So, anything else you can share? Because I know your T&D, your transmission and distribution, has been robust. It's about close to 40% of your order book. Is that what is going to be the big winner for you going ahead and you're adding on there, or is there more diversification?
So, as you know, we are diversified across 5 or 6 large segments. However, both India and overseas, the next 4 to 5 years in transmission and domestic space looks very, very attractive. As you know, in the Indian context, the transmission and domestic opportunity till 2030 to get all of the evacuation from all the large and far-flung places for renewable needs to come to the main grid. So I think the next 4 to 5 years, India has, if I'm not mistaken, 3 to 5 lakh crores worth of opportunities, and that certainly will augur well for us. Internationally, Africa, LATAM, all are looking very, very encouraging. If you look at our numbers at the end of Q3, both our subsidiaries in Sweden and Fastel are showing unprecedented growth. We've had large order book in terms of percentage of growth there, and that seems to continue as well. Our building and factories also, in India, there's a huge surge over the last couple of years with RERA coming in, quality developers, hence large ticket real estate projects being announced, and they want good quality developers, want good quality contractors. And I think we've been a recipient of those orders, and I think that trend would continue over the next 4 to 5 years from looking at the market the way it is today.
Amit, good morning. Neeraj here. Now, you've got a fairly large order book. The book to bill could be 3x right now. I heard you speak about a very large opportunity until the next 5 years as well. Based on your assessment of what the order inflows likely could be for the sector at large, and therefore you bag a particular percentage as the case may be, and the execution that you guys have mapped out, do you reckon this will be the sweet spot, 3x book to bill, or could the book to bill go up from these levels as well?
So, Neeraj, a very interesting question and a good one at that. We are sitting at 3x order book. If you look at our last year's revenue profile, we had, and we've discussed this, we had a slowdown in the water sector, especially in our, the government central schemes under the Jal Jeevan mission. And, we always need to keep a healthy order book because you can have these, unplanned sort of events that just pop up. And I think a 3x order book thereabouts is a good order book to keep for a business like ours so that you can take care of, some of these unplanned events that may occur. So we are quite happy at 61,500 crores order book. So we, typically a 2.5 to 3 times order book is what we would like to be at. Of course, there's no rule book to this, but that's where we would like to be comfortable in terms of meeting our guidance for the year.
And okay, let's assume that meeting the guidance for the year is not as big a deal. Trailing 12 months, you're about 21.5 or 1,000 crores in terms of revenues as it is. What do you reckon, Amit, could be the growth path for you, considering that T&D itself is looking so strong and the other sectors are, even though the government has shifted its focus to consumption in some fashion, it's not that CapEx, power CapEx, some of the other segments are really hurting. There is growth there too. So how do you map your own growth for the next 2 or 3 years? At the start of 2025, let's say, how do you see the next 3 calendars, if you will?
So, Neeraj, without getting specific for next year, I think as a general comment, we had started at the beginning of the year with a 15% thereabouts growth numbers. And I think at console level, we are not that far off, considering that we had a big dip in our water revenue, which was temporary because our order book is far in excess of 10,000 crores. I think, but looking at where all the sectors are firing, there's a huge focus, as you correctly mentioned, on urban infra, on water. We are still looking at 10 to 12 lakh crores of investments every year for the next 3 years. I think anywhere between 10 to 15%, because we are, remember, at a very large scale, base. I think between 10 to 15% growth for the next 3 years should be absolutely a fair ask and something that we should work towards delivering.
I'm just wondering, in terms of TND, and sorry, coming back to that because it's an important segment, Amit, what do you think the international exposure will be going forward? Because it was fairly robust, and if you can share details on that for transmission and distribution. Do you see that demand continuing, staying steady in terms of what is happening globally? Do you see any impact there? Just trying to understand if there is any impact at all for you.
So, I mean, if you look at our markets in TND, right, a large part of our order book comes from Africa, Latin America, and India. All these are, developing economies, and I don't see the demand for power, transmission networks, etc., slowing down in the next couple of years. And so we are quite comfortable in that markets that we operate in. And we don't see that and overtly concerned about what's going on in the world today to affect that. Of course, there can be cyclical things here and there, but the long-term trend does remain intact for us. And to answer your question, I don't see that as a challenge, at least in the transmission sector.
In terms of capex for the next financial year, we're almost at the end of 25, but for 26, what do you have penciled in? Give us the sort of 1 year outlook, Amit, on what is looking exciting and what goes ahead.
So I think, it'll be, I don't think I can put down a number for next year capex. We still haven't worked out. We are still in the process of building our budgets, etc. for next year. It's a process that happens for every company at the end of Q4. And whilst we'll be happy to share that number with you once we've frozen towards the guidance next year when we're done with our budgeting exercise.
Okay, thank you for that. That was Kalpataru Projects International. Don't want to talk too much about their latest project, which they have bagged, but that is something which has the street excited as well. So Kalpataru in focus, talk about 1.5–2% down, which is not half bad on a day like this. But the stock which is up and buzzing is Laurus Labs. Export data trends are showing that the company is heading to a blockbuster Q4. Look at that stock, about 2% up now, off its highest point of the day, but not doing too badly. Varsha has the details.
Thank you for that. So as you rightly said, the stock is buzzing on the back of export data. So Laurus Lab exported $98 million in the first 2 months of this quarter, significantly exceeding the $75 million of average for the last 3 quarters. This suggests a strong increase in the export activity. Now, as per the past trends, if you see, third month of the quarter is the strongest quarter for exports for all of the companies, including Laurus Lab, and this suggests that Laurus is well set to report a good Q4 quarter as in line with the management commentary. During Jan-Feb, analysts are estimating that Laurus has booked at least $35 million of CSM revenues, that is custom synthesis and manufacturing revenue, with bulk of sales to Pfizer, and more than 50% of this increase is in value of Revlimid, that is a cancer product. So the more than 50% is increase in the Revlimid exports year on year, suggesting sharp increase in the volume allocations to calendar year 2025. And lastly, just to give us perspective, company is anticipating API growth returning next year with a positive order book, and FY26 is expected to be good year for Laurus Lab, considering the CDMO business and the further growth anticipated beyond FY25. And lastly, they have given a guidance, or rather I would say they are maintaining a guidance of EBITDA margin of around 20% in FY25.
Well, thanks a lot for that. It'll be interesting to see if indeed the margins shore up for Laurus. They did do well in Q3, but in order to meet their earlier guidance for FY25, they really need to bump up in Q4. Remains to be seen if they do. But for now, stocks which are doing well on a day like this clearly deserve a mention. Laurus is one. We spoke about a few others as well. As we speak, IndusInd Bank is off the circuit limits was down 20%, has just inched up a little bit, if you will, but under some serious pressure. You know what? Before we take that break, Tamanna, it's very interesting. These days, bad news which is not liked, 20% happens like this. Happened with IndusInd Bank, happened with Polycab, KEI, RR Kabel. Bad news are really getting smashed.
But I would say this is worse because KEI and RR Kabel, I would say, was reflective, right?
Yep.
Because big player coming in. This
Most
is
certainly.
Very specific IndusInd Bank problem. Really look at ICICI Bank. I find that interesting. ICICI holding up. Quick break. So much more to discuss. What's happening in the markets right now? What's buzzing? What's not? What are the big stories apart from IndusInd Bank and the big view on Talking Point? All of that after the break.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Open, and arguably the biggest story at this point is IndusInd Bank. What's happening with that stock is really something to watch, is all I could say. That staircase that you're seeing is just leading up to a 20% down on the stock right now. Now, here's the reason, the quick recap before we get to our first few guests. IndusInd Bank revealed last evening that an internal audit is on into their derivative trades. The hit could be about 2.35% of the extent of their total net worth, and the hit could be as high as 2,100 crores. So that is where the concern comes. But it's also coming just a day after their chief, MD and CEO, Sumant Katapalya, who was expecting a 3-year extension of his tenure from the Reserve Bank of India, got just 1 year. So that's the sort of context to start this conversation. To speak more on this, I'm joined now by Sriram Subramaniam, MD and founder of InGovern. I'm also speaking with Digant Haria, founder at Green Edge Wealth. Welcome to both of you, and thank you so much for your time with us here on NDTV Profit. Digant, I'm going to start with you first on what you make of the entire situation of what's happening with IndusInd Bank. Now, what the management is saying is that it's not such a big deal. They're trying to underplay it. They're saying it's a very small part of their entire derivatives portfolio. They're the ones who found it. They're doing an internal audit. And now an external audit is asked for as well. So nothing to see here. Move on. Do you agree with that?
Morning, Tamanna. Very difficult to agree that it's a small issue. And then see, it's a 7-year pattern. Like in 2018, they started with problems in their wholesale portfolio. Then problems came in their deposit. Then problems came in their microfinance franchise. Then personal loans. Then the MD CEO RBI. Now this treasury losses. So it's all just pointing to one thing, that it's a bank which is not very, very tightly run. And bank is a complex business. If you don't have very, very tight systems and controls, such things keep happening. Now 7 years, 7 different events. So there's hardly a reason to believe that this is a one-off and it will just not matter. I think this is where investors lose trust, and one-time price to book always tells you that okay, we do not trust you enough. So the stock has gone below that one-time price to book mark as well.
Okay. So I'll come back to it. So yeah, one-time price to book is where the stock is gone. It's a reflection of the lack of trust. But is that lack of trust fair? Sriram Subramaniam, when you're looking at the facts as they are, now there could be 2 points here, right? There could be a governance lapse. They could be knowingly not having figured out what or the size and magnitude of the problem is. Which one does it seem in your view?
This specific instance seems to be a rogue trade or a trade gone wrong. Something in the books, in the treasury operations, they couldn't risk manage it properly. Probably reporting was very late. Something went wrong. Especially the RBI norms seems to have changed since April 1st, 2024. So from that perspective, their recognition, this could be a long duration trade, and so they could not recognize it earlier. So while it is, this is an impact, as Digant said, banking is a business of trust. So counterparties could be hesitant to take trades with them. Clients could be hesitant to deal with IndusInd Bank going forward. And that is the reason why there is a huge impact. So I think it is not the past instance where they have already provisioned or they have said that this is a 2,000 crore impact. But the impact on the going forward business, whether clients will trade with them, whether counterparties will trade with them, whether there's confidence in the numbers and the risk management that the bank has, I think those are the more important points.
Okay, Mr. Subramaniam, good morning, Neeraj here. Is this bordering on a governance issue, or is this an oversight and a lapse? Because both are bad, just that a governance issue is terrible, right? So do you foresee this to be a governance issue or not really?
As of now, it doesn't seem to be. As Digant said, it seems to be something where risk management is gone. The control systems in the bank don't seem to be tight enough. Governance is something where the management knowingly is hiding things. That doesn't seem to be the case. The moment they seem to have recognized it or found it out, they seem to have highlighted it to the board and then come forward and disclosed it to the markets. So I hope it's not a governance issue. I mean, we've at all, at least from the news that is out there, from what the bank has put out, it's not. It seems to be just a trade that's gone wrong, not a governance issue. More of risk management, more of bad trades, etc.
Now, Digant, please come in and tell us, how would you look at it from a valuation perspective? 0.9 book yesterday. Now, this lapse brings down the book value, but the price correction kind of takes care of that. FY26, if I were to look 1 year forward, it's probably trading anywhere, I mean, and it depends on whoever's guess and estimates, but anywhere between 0.7 to 0.9 price to book. Does a private sector bank, with its share of issues, of course, trading at that multiple become attractive, or does the street say that let it remain attractive for a while? There are other banks which are maybe not as cheap, but certainly cheap relative to what they have traded in the past, and let me go there.
So morning, Neeraj, it will always be the latter, because see, banks is a leveraged business. It's 8 times leverage. Your debt to equities are very high. So whenever such problems happen, the trust is broken. For the trust to rebuild, it takes a long time. those who have positions who thought, okay, this bank just has temporary problems of, say, a microfinance portfolio which is not performing well, or a diamond portfolio which is not performing well. These are business issues, but now what has happened is like a process issue. So then what do you base your investment argument on? If you are very confident on the process, then you will say, okay, business issues, the cycle issues in microfinance diamonds, they will go away after some time. But we are not at that stage. So I don't think the trust is coming back. 0.7, 0.8 times, Neeraj, you will find tons of banks. Ratnakar Bank is below that. DCB is below that. South Indian is, Karnataka is. IndusInd was once upon a time a better franchise, but now they have to prove that they are better. A lot of hard work. I think it's better to look for greener pastures. It'll be too premature because next 2 quarters you will see microfinance and diamond portfolios of this bank also giving a lot of pain.
So what are those greener pastures, Digant? Two-part question. One is, what are those greener pastures? And secondly, what is, for example, going to be the turning point for IndusInd Bank? Could it be if there is a change in leadership? That seems to be the next logical step.
Yes, Tamanna, I think, IndusInd, I think it's a hard work. Nothing can turn around in 2 days. The new leadership comes, they identify what were the loose ends of the processes, they tighten it up. So it's a long battle. I think it's best to let the bank fight their own battle. So I think turning point will still be quite away, maybe 2 quarters away when microfinance pain is off, diamond pain is out and off, and these processes get tightened. So it's a good 2 quarters away. Till then, I think, the greener pastures, as, you asked me, I think something like an Axis Bank in the private bank trading at like 30-35% discount to ICICI, such a discount is probably not warranted. So maybe Axis Bank is, if so to say, a greener pasture. Maybe something like an SBI, the largest bank in PSU. They are growing at 12%, faster than an HDFC, faster than an Axis Bank. So maybe that could be one greener pasture. Then there's insurance sector, which is also probably turning around. So yeah, there are a lot of greener pastures, but I think this is the battle zone where, we can think of after 6 months, not immediately.
Just one point, Sriram. Yes, this is now something that the company itself has come and told investors. RBI is obviously in the loop. We know that from the company itself. But is there need for a further probe on the simple point that if there was an internal audit going on for several months, why is this being revealed to investors only now?
I would think that the bank took its time to report to the board, and the board subsequently met yesterday and out of turn, or it was not a regular board meeting, and they seem to have disclosed it to post that earlier. But obviously, they would have reported it to RBI. That's the process. And I would think the moment they got to know, they would have reported it. If they have not done it, that becomes like a governance issue. I would think at least let me give some credence to the management saying that they could have done it at the earliest possible. They have done it at the earliest possible moment.
Got it. Well, this is a fruitful conversation in more ways than one. And gentlemen, both of you, thank you so much for taking the time out and being with us and giving us your sense of what this is. And nobody's quite excited. And I think the way Digant put it as well, that there are countless other opportunities available for those valuations and maybe at the current point of time, better managed banks. So lots of options for investors, and which is why IndusInd being shunned today, down 20% and staying on a lower circuit, rightly so. As a stock, this should ideally have met this reaction, and it has. Let's see if there is a change later on. For a broader conversation, Harsha Upadhyay Johnson as well, CIO Equity President, Kotak Mahindra AMC. Harsha, great having you as always. Thanks for taking the time out. And I wonder if valuations alone provide the muscle for the markets to do well at a point of time when there are these small idiosyncrasies in Indian markets coming up, but more importantly, concerns around US growth coming up as well, Harsha. Is this market attractive because the valuations are good, or is this market a wait and watch because there are a lot of uncertainties?
Good morning, Neeraj. I would say it's a mix of both. While in the very short term, the markets seem to be oversold. So to that extent, we may find a short-term bottom. However, the external environment is very, very volatile. There are a lot of unpredictable things that are happening around the globe. So, to that extent, we may not have seen the end of volatility, I would say. And at the same time, we have been seeing deceleration in terms of the earnings trajectory for Indian corporates. So, there are many factors that are impacting markets today. So, unless all of them kind of turn around, or you reach a situation where valuations completely discount all of those negatives, very unlikely that you will see a very, very sharp pullback in the market.
Got it. Okay. Harsha, I wonder if there could be a growth, how do I say, not a scare, but a pullback from expectations, because the belief, rightfully so, was that we will have the uptick that we saw in Q3 will continue well into Q4, and if indeed the capex drive continues, then and the consumption chips in, then FY26 will not be a bad year. But if US growth is sulking, could it have ramifications for a market like India, or are the measures, regulatory and the Reserve Bank, monetary and etc., that are being done by both the Reserve Bank and the government help growth stay stable?
See, in isolation, India has been doing quite better than global markets even today, and that would continue. However, if external environment is conducive, then that adds to the growth momentum and the confidence of market participants. That is where I think the current situation is not lending much support. One, there have been so many policy statements which have come and gone. There have been flip-flop as well. There are more to come. So that's where it becomes quite unpredictable. However, the government has taken right steps, I would say, both from a fiscal perspective as well as from a monetary perspective. We are seeing right set of policies coming in place. So impact of that would be seen over the next couple of quarters, and gradually you're going to see a recovery in Indian growth as well. However, is that good enough to really take the markets back to the kind of bullish phase that we had seen earlier is the question. And I think that's where we need to be a little cautious. It's not going to be such a dramatic shift in sentiments immediately. We will have to continue facing this kind of a up and down kind of a market for some more time.
Harsha, hi, Tamanna here, and great to speak with you. I'm wondering if this is an exciting period for you or a tough period for you. When you have to go out there and continue making investments, look for opportunities, does it get easier when everything is at bargain basement rates? Or is there fear and trepidation? I'm asking because obviously at a much larger scale, this is something you're doing, but this is something which will resonate with all of our viewers.
Tamanna, to be honest, I don't think everything is at bargain prices. We just have seen some pullback from the kind of rally that we have seen for the last 4.5, 5 years. Yes, we do agree that the large caps offer quite a bit of valuation comfort, but one can't really say that the valuations are so attractive or so cheap that it's a blind buy at this point of time. So I think the caution is still necessary. It's not going to be a one-way market, even at these valuations. The sectoral moves are not going to be uniform. So you need to be very, very bottom up in terms of your evaluation and selection of stocks into the portfolio. That's what we have been trying to do at this point of time.
So when you're looking at that bottoms up approach, Harsha, what are the filters that you're now applying? Is it sticking to the safe and tested territory? Is it largely large caps? Are you looking at other pockets, and where are you seeing those opportunities?
Tamanna, if you have seen our portfolios for the last several quarters, we were tilting more towards large caps, and that continues. However, there have been certain names where earnings have not really seen any downtrend. However, the valuations have corrected from the peak levels. And if our analysis shows that even going forward, the earnings are unlikely to really be tested, and we are going to probably see better earnings growth from that particular set of companies vis-a-vis the market earnings growth, which itself has shrunk. Then I think at certain valuations, we would be looking at increasing our exposure in some of those names. By and large, I think there are not a sector-wide choices that we have in terms of just pure valuations. Purely looking at valuations, probably the large banks are the only bucket where you will have valuation comfort. Other than that, in each and every sector, either there is a business headwind or the valuations have not corrected completely. So to that extent, you need to be very, very careful in terms of making those bottom-up choices.
Okay, so large banks, let's narrow it down further. I mean, we've seen what's happened with an IndusInd Bank today, and I'm sure you would not want to comment on it. But are you sticking to private sector? Are you looking at PSU banks, the larger names? Are NBFCs making the cut anywhere?
Tamanna, mostly our exposure is in large private sector banks as well as public sector banks, and we have stuck to that for the last couple of quarters. Clearly based on the valuation comfort that we have seen in this particular subsegment within BFSI. As far as NBFCs are concerned, we have been very, very selective. We have just a few names where the businesses are very well diversified, where there is a strong parentage, where there is a track record of managing cycles in the past, etc. Otherwise, we have not been very, very positive on many of the other subsegments of NBFC or some of the segments which are really under some sort of stress, for example, the MFI, etc.
Okay. Harsha, a question on IT and how do you think about it? Because yes, there has been a corrective move. If the US markets were to correct and Nasdaq continues to slide, maybe there is a further pressure on IT names. But the larger question is, while valuation may be a lot more reasonable than what it used to be, if the US were to slow down, then IT has a growth issue out there, right? So what wins? The growth issue overhang on IT names currently, or the fact that the valuations may be a lot better than what they have been in the last 2 or 3 years, maybe?
Neeraj, what we have seen up until now is the volatility that's coming mainly because of what's happening in the US economy, right? If tariffs are imposed and if growth falters there, what's going to be the impact on some of the IT services companies that are catering to US companies is the question that most people are asking today. What we have seen up until now is one or two policy segments that have been focused by President Trump and the administration, which is of tariffs. But they have also spoken about deregulation of the financial services sector. They have also spoken about planning for tax cuts for American corporations, etc., which could be somewhere down the line. Whether they happen or not, we still do not know. But looking at what they have done until now, it seems that they would take up some of these measures as well at a certain point of time, which would be more positive for US corporations and their spend on IT services. So our view is immediately, yes, there are concerns in terms of what's happening to US economy and hence what will be the business momentum for Indian IT services. And along with that, since this was an outperforming sector, we have seen some profit booking coming in as well. But however, if you just step back and look at medium-term positives that could come in from the Trump administration, probably those will outweigh some of the interim volatility that you would expect in this sector. So as far as our portfolios are concerned, we are somewhere around equal weight to slightly overweight on IT services at this point of time, and we would continue with that positioning even at this point of time.
Okay. Harsha, take a moment to thank you for joining in and giving us that perspective. By the way, Donald Trump is buying a Tesla to help Elon Musk. You are in the mood for buying one, Harsha, if it comes to India?
No, not at all. I'm happy with my existing car.
Fair call. Okay.
You can get zero tariffs here in
Zero
India.
tariffs here in India, yes. Indeed.
But if it's in Maharashtra, then 6% charge on EV. That is a different thing. Oh, interesting times. We should actually pull up what Donald Trump is saying. I find this interesting also from the perspective Tesla stock has corrected 15%, I think, in the last 4 sessions.
In one day?
In a day, yeah. And Elon Musk responded to it saying it will all be fine in the long term. So here's Donald Trump standing up for his buddy, saying Elon is doing a fantastic job, all caps. But the radical left lunatics, as they often do, are trying to harm him and illegally and collusively boycott Tesla. I didn't know it was illegal to not buy a car that you didn't want to, but okay. He's one of the world's great automakers. In support, he's going to go out and buy a Tesla.
Yep, he says that in any event, I'm going to buy a brand new Tesla tomorrow morning as a show of confidence and support for Elon Musk, a truly great American. Now, does this revive the fortunes of Tesla? Let's wait and watch. It'll be interesting to see what Tesla does tonight, by the way, in the American time. But yeah, this is quite stunning, really. Okay, so Tamanna, will you buy a Tesla?
No, I don't want to pay the 6% electric vehicle
That's a good answer. That's a good answer.
No, one way or the other. All right, that's a wrap on India Market Open. But stay tuned. Up next is Ask Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Hello and welcome. You're watching Ask Profit on NDTV Profit with me, Soumit Sarkar, and my co-anchor Punit Javeri. The market seems to be flat, right? Punit, not much of an action here.
Yeah, nothing too much, and it has been dragged down by one specific Nifty stock that's taking the momentum downward. That is IndusInd. But let's quickly put up the Nifty 50 as well. We have seen some recovery from the start. It was a down start about 120 to 130 odd points. Let's look at the Nifty 50 contributors as well. And while we know one of them definitely, which is on the downside, specifically IndusInd contributing roughly 29 points, Infosys is also taking the Nifty down today with some positive aspects in terms of ICICI Bank as well as something on Sun Pharma as well. Sun Pharma has been doing well in terms of the new acquisition that they announced yesterday as well of Checkpoint. In terms of better prospects going forward, let's also look at the mid cap and the small cap indices as well. That's something in the market that's also not been doing too well, down by 0.5%, which is the mid cap 150. The small cap 250 also down by 1.4% actually in trade today. And while there was some recovery it's seen some recovery right now, it's not as meaningful as expected. And before we go ahead, let's also look at the Nifty 50 contributors as well, because we do know that IndusInd has not been doing well, but and we can get the heat map as well if we can see all the 50 stocks together. And specifically, we are seeing HDFC Life giving some positive momentum, Trent as well as BPCL on the downside. IndusInd is down now 22%, while Infosys is down about 3.3%. Let's look at the Nifty 500 to end the market check specifically. We've seen roughly about 6% down in terms of Sapphire Foods as well. Bandhan Bank again down on 5.2%, while on the positive side we have some positive momentum on HEG Tube Investments as well as Tata Communication. But Soumit, one stock that has been taking the Nifty down as well as the whole momentum down is definitely IndusInd.
Well, as before addressing IndusInd, viewers, please check the number that is flashing on your screen. That's where you send your queries on WhatsApp. So please do send in your queries. We'll address them as soon as possible with our guest on the show. And when it comes to IndusInd, yes, it was stuck on the lower band of around 20%, but right now the band has opened. It's down 22%. In fact, the stock for a brief period fell below the 700 rupees mark, which is the lowest that we have seen since 2020. Now, if you look at the market cap loss that we are seeing for IndusInd Bank, it's more than 15,000 crore rupees, and this is because of a 2,100 crore accounting discrepancy that has come in, which will hit the profitability of the bank by around 25% as per Citi. They are saying that the hit on earnings will be around 25% because of the derivative positioning, which will knock out the earnings and the net worth of the bank. They are also saying that the recent developments have raised the risk perception and impacts disclosed borrowing cost as well. And they're also saying that the bank trades below the FY26 book value, and this is because of the near-term uncertainties that we are seeing. So there are multiple headwinds that are now coming in for IndusInd Bank. Firstly is the fact that the CEO tenure expansion was lower than what the street was estimating. The street expected 3 years, but it came in just 1 year. Then this net profit hit that has come in because of an accounting discrepancy. Then analysts are also pointing out the fact that the credibility that IndusInd Bank has lost because of these factors is something which will take much longer time for the bank to regain from the market. And again, there is the MFI issue, which will lead to elevated slippages in the fourth quarter, which will lead to asset quality issues as well. And there are multiple queries on IndusInd Bank as well coming in from our viewers. First one to address is from Shivam from Kolkata. He's holding around 110 shares of IndusInd Bank at a value of around 1,043 crore rupees. He wants to know whether should he add after the downtick of 20% that we are seeing this account seeing a 20% after seeing the 20% downtick in the counter, or should he just exit IndusInd Bank at this moment? So firstly, let's go into our fundamental guest, Astha Jain, the senior research analyst from HAIM Securities. Astha, what is your view on IndusInd Bank? Do you think one should continue to hold IndusInd Bank after the 22% downtick that we're seeing in trade today?
Hi, good morning to all of you. See, talking about this counter, I think now the way this news has come, it will have an impact on its net worth also. And we have seen that the earnings will definitely going to impact. And there can be earnings, cut also, because the way this news has come, definitely it will impact their net worth by 2.5%, and relatively it will have a earnings impact also. So I think going ahead also, this bank will, the stock will continue to move in the southwards trajectory. So idea here is to take out the partial losses and remain invested in the partial quantity, because here the losses are high. So I cannot advise to book all sort of loss, but partially loss booking can be done at the present moment of a time, because the kind of downgrades are coming. I think definitely going ahead also this financial performance will get a big hit, and that will impact the stock price momentum in the future outlook also. So all in all, partial exiting and partial staying invested in the stock price is recommended at this point of time.
So, Astha, when you're suggesting that partially one should continue to hold this counter, does this mean that there could be a possible upside on the share price going forward?
So what we are expecting that some management clarification should become in this regard, because it is ultimately the clarification from the management side which can give some sort of relief to the stock prices. So just on that belief or just on that hope, we are recommending to remain invested in this counter, because maybe if some clarification come, then definitely the stock price can again move in, or may move some sort of upside momentum can be seen. So I think then those can be the level where one can exit fully. But right now, in such kind of a downward momentum where the stock prices are already down by 20%, there is no logic to exit the whole quantity.
Coming to you, Swati, our technical guest for the day from Nirmal Bang, how are you looking at the charts? Obviously, the charts might be a bit, might not be giving you a right picture at this moment, given the 20% downtick that we have seen, right?
Correct. Yes, you have rightly pointed out on today's intraday basis itself, the stock is down by more than 20%. And I believe such kind of a fall will likely to be continued in the near term. But for the today intraday purpose, we have already seen a huge losses in this particular stock. No need to book the losses at the current market price. As Astha also said, we are looking for the management talks, clarifications. And I believe the downside is limited from here onwards. If the positive news comes from the management side, I believe 680, 670 levels can be seen as a maximum depth on the downside, and from there onwards we're likely to witness some sort of a reversal after some consolidation phase. So no need to worry. The long-term horizon or the long-term client should definitely hold on this particular stock. Let the stock settle down, let it digest some negative news, and after that you can take a call about the exit the positions, but not at the current market price.
Got that view, Swati. Now we're getting our first caller for today. Kantesh Reddy is calling in from Karnataka. Kantesh, good morning. What's your query?
Good morning, sir.
Yeah, please go ahead with your query.
Yes, sir. IDFC First Bank, sir. I have a holding of 500 shares of IDFC First Bank.
Okay.
At the price of 80 rupees, sir.
Okay. And you want a long-term view on the stock?
Yes, sir. Long-term view, sir. But company was not providing any dividend also till now.
Right.
That's why Ujjivan and small finance bank somehow giving 2-3% of a dividend also, but is not giving any.
Right. Yeah, I mean, so for long-term view, Astha, let me come to you first on, IDFC First Bank. All the, the middle sector banks have not been doing very well. Any kind of outlook that you have, and specifically on IDFC First?
So IDFC First Bank, if I talk about this counter, first of all, the MFI stress, definitely stress on the books can be visible from their financial performance. Secondly, the way ROA and ROE should improved, they have not improved in that way. But management is continuously keeping its guidance intact, so that can be a relief for this counter. But overall, I think in the near term, we cannot expect the stock prices to move to the level of 80 where the cost price is. But yes, this stock has a potential to move till the level of 60 to 63 odd levels. So I think there, if stock prices reaches those levels, because the guidance given by the management is still looking fine. So if stock prices reach those levels, then again query can be reviewed. But as of now, I think stay invested in the counter is a better choice.
Right. Stay invested is the advice coming in for IDFC First Bank. The next query is from Rohit from Hyderabad, and it's on Asian Paints. He has around 30 shares of Asian Paints bought at a price of 2,250. He is planning to hold this counter for the next 2 to 3 years. Astha, what would be your view on Asian Paints? Should one continue to hold this counter given the fact that competitive intensity continues to remain high when it comes to the paint industry?
So I think but rural demand is definitely can play a positive role in the company's demand outlook. This is what we can see. And now the companies, some new products which company is rolling out has also started grabbing the market. So I think that is also can be seen as a positive point as of now. So I think these are some of the few points which can make the stock prices momentum to go in the upwards direction. So if one can take a risk, then definitely one can continue his or her holding in the stock price in this stock, as the stock prices are expected to move till the level of 2350.
Our next query is actually a calling query from Hyderabad. Dheeraj is dialing us with a stock query. Dheeraj, good morning. What's your query?
Good morning. My query is regarding CDSL.
Okay. And
So
you
I'm
want
holding 120 shares of CDSL at 1120 rupees.
Okay, okay. And are you looking for a
Should I add
long-term
more
view?
at current levels? Actually, for the next 2 to 3 months.
2 to 3 months. Okay. Swati, let me come across to you for CDSL. Any kind of view that you have on the stock?
Yes, as of now, the short-term view is a little bit cautious, but definitely whatever the rally we have seen from the 2023 from almost 500 to 2000 level, then the stock has already retraced its 61.8%, which is the golden ratio of the Fibonacci retracement. So downside, it might find a support nearby 1040, 1030 levels. Up to that level, we are likely to witness some sort of a selling pressure, but there onwards, we are likely to witness some sort of a reversal after some consolidation phase. So I will suggest to hold on this particular counter. Definitely a positive momentum can be seen, and which might take a counter towards to 1200 to 1250. So it's all from my end at the current market price.
Right. Well, a lot of queries coming in from Hyderabad. In fact, the next one is from Chaitanya. He's from Hyderabad. He's holding 30 shares of Sun Pharma with an average price of 1659. He needs to know the long-term perspective on Sun Pharma because he plans to hold this counter till 2028. So Astha, how are you looking at Sun Pharma? The recent acquisition, I guess, the company had done seems to be quite strong for the company. In fact, the street is quite bullish about this acquisition, right?
Right. So I think this counter is looking strong to us, and we are recommending a hold on this counter because some of their products are also working very well. If I talk about their specialty products, then they are really working well. And definitely, this acquisition can also play an important role in improving or providing a strong financial performance to the company. So overall, recommending a hold on this counter with the initial price target, which can be set at around 1750 to 1800 odd levels.
Got that, Asta. Well, another query coming in from Hyderabad, the South supremacy going on. Ajay is dialing us with a stock query. Ajay, good morning. What's your query?
Good morning, sir. Hello, am I audible?
Yes, you're audible. Please go ahead with your query.
I want to know about Paradeep Phosphates. I'm holding 1250 at the rate of 107.5. I want to know about both fundamental and technical analysis for long term as well as short term. Whether I can add 2000 more like that.
Got that. Swati, let me come across to you first for a short-term view. Anything specifically on Paradeep Phosphate that you're picking up on the charts?
Yes, as of now, the stock is under formation of inverted head and shoulder formations. Also, the interesting fact that it has formed the multiple or say the double bottoms nearby 81, 82 levels. And from there onwards, we are witnessing some sort of a pullback rally. At the current level, I will not suggest to take more fresh buying positions. But if you're getting any tips towards to 82 and so on levels, you can add on the fresh long positions. Upside, it has a very strong resistance at around 97 to 98 levels. If it surpasses that levels on the closing basis, a positive momentum can be seen into this particular counter in the near term, say 2 to 3 months, up to 120 to 125 levels. So it's a hold from my end and wait for the fresh long positions on every dips towards 282.
Hold, I think just getting a fundamental view as well, Samit. Asta, specifically on Paradeep Phosphates, would you concur with Swati's view for holding at the moment?
No, I would even agree with the Swati that definitely this counter is a whole at this point of a time. The reason being good financial performance posted by this counter, although the element of other income was high in the Q3 of FY25 earnings, but still on the operating level, they have posted the growth of around 19 to 20%, which seems to be very strong. And the revenue were also high by more than 20-30%. So on the year-on-year basis. So I think on the basis of a good and a decent financial performance posted by this quarter, this counter, definitely it is a hold from our side. Initial price target which can be set at present level is around 105 to 110 odd levels.
All right. The next query is coming in from Shivani from Mumbai. She has around 100 shares of BHEL holding for nearly a year now. She bought it in July 2024 at a price of 319 rupees per share. She wants to know whether should she continue to hold this counter for the next 6 months. Coming to you for your technical query, how is BHEL looking like on charts, Swati?
Sumit, as of now, this particular counter is trading in the oversold zone, and we are witnessing that it's continuously under the formation of the low tops, low bottom formations, which gives a little bit cautious sign on the technical charts. I believe that the stock has a very strong resistance nearby 200 levels, which is provided by a resistance provided by its downward sloping trend line. As long as it trades below that level, the view will remain a cautious. A trend will be changed once the stock manages to give the breakout of 200 levels on the closing basis and sustains at least for 1 to 2 trading session. Then a positive momentum can be seen in this particular counter, which might take the stocks towards to 220 to 230 levels. But at the current level, the depth is limited. I will suggest to hold on the long positions at least for an outlook of 3 to 6 months for a target of 220 to 240.
The next caller query is coming in from Shweta from Hyderabad. Good morning, Shweta. Thank you for calling us. What's your query? You can go ahead.
Hi, good morning. I have a query regarding KPI Green.
Right.
I am holding 277 shares at 414 rupees. I want to know, is it okay to hold it, or is it going into a consolidation phase for a long time?
Any time period that you can mention, till when can you hold this counter?
I can hold it for 1 year.
Right. So Astha, coming to you, do you track KPI Green? Any views on that counter?
Yes, the counter is looking decent to us on the back of the recent financial performance which has been posted by this company, that is KPI Green. Now, if I talk about the financial performance, they have posted the bottom line growth of more than 50%. That is almost a 68%. That seems to be very strong in this kind of a earnings environment. Especially if I talk about the Q3 FY25 earnings environment, the earnings were not so much positive. So whereas this company has been successful in posting very strong set of a numbers, so I think there is no harm in waiting and keeping the stock in the portfolio for 1 year time horizon. The price target which can be set for this counter at the initial level we are talking is around 420 to 430.
Got the view. Now KPI Green, roughly 420 to 30 levels to watch out for. Next query that we have is from WhatsApp. Pallavi from Hyderabad asking for fundamental view on Samvardhana Motherson, and if it's the right time to buy the stock. While she hasn't mentioned her time frame, she mentioned about fundamentals specifically. So Astha, the Samvardhana Motherson, bearing the brunt of the tariff impact, do you see any kind of buying at this point in time in this particular stock?
I think maybe later on buying can be done, not at the present moment of a time. Although if I talk about the business performance of this counter, the business performance seems to be resilient. If I talk about the weak macro, so that is one of the reason that we are just recommending it to hold for a longer term, but not buying at this point of a time. Maybe the stock prices, if they are available at around 115 to 110 odd levels, then they are the good levels to make entry into this counter, but not at present moment of time, definitely.
The next caller query is coming in from V. Murli from Bangalore. Sir, you can go ahead and ask your query.
Good morning. This call is to a fundamental analyst. Thank you for taking up my query. I want to buy PNB Housing Finance. The current market today's fall, considering that there's a low PE and low book value, low price to book value and a good management team. I have already holding Can Bank and Hudco. So can I go and buy PNB Housing today?
Right. Astha, coming to you with this query on PNB Housing Finance, do you think the valuations are quite attractive? And if Murli sir is already holding Canfin Homes and Canara Bank in his portfolio, then should he go ahead and buy PNB Housing Finance as well?
So PNB Housing Finance is looking strong to us. First of all, the reason for its strength is that good set of numbers, and management has also guided a strong growth in their credit book. So I think that really play well for this counter. So this counter seems to be strong at this present moment of a time, and I think yes, one can continue holding this counter. Although price targets can be not very high from present levels, because what we are seeing right now, the markets are not in good shape. So maybe that can act as a dampener for the stock prices in the short term. But yes, in the long term, the stock can move till the levels of 850 zone. So idea here is to stay invested in this counter, and don't worry if some sort of a downfall come, because due to market conditions only, we can expect some more downfall, but that does not seems to be a cause of worry, because in the longer term, the stock can move up from levels of 810 to 850.
Katav Vivastha, the next query is actually on WhatsApp, coming from Dinesh from Gurugram. He's asking whether, he's a long-term investor holding 30 shares of Kaplan Point at roughly about 1,000 rupees per share. Of course, sitting at a handsome gain right now. He's asking if you should add, hold or sell across his holdings. Swati, let me come across to you on chart specifically. Any kind of outlook that you have on Kaplan?
Yes, the overall long-term view is definitely positive, because whatever the correction we have seen in the market, this particular stock has holded its strength comparative to another counters. At the current level, since the client is earning a good amount of money, I will suggest to book the partial profits, because why so? On the monthly charts, it's just showing the formations of the low tops, low bottom. So over a period of time, we are likely to witness some sort of a profit bookings on every rise towards to 2000 levels. If it gives the breakout of that level, then more momentum can be seen on the high side towards to 2250 and 2300 levels. But at the current level, my view is little bit cautious. Book your partial profits. Another partial you can hold on by maintaining a strict stop loss of a 1780 on a downside. If it's break that level, the momentum can be comes on a seller side, and which might drag a counter towards to 1600 and so levels. So try to book your profits on every rise.
Moving on, the next caller query is coming in from Jagdish from Bangalore. Thank you, sir, for calling us. You can go ahead and ask your query.
Hello, namaste, good morning. Sir, I purchased Tata Steel for 180 rupees. And it is running around 150 to 153 rupees. Can I hold it or can I sell it one? Can I hold it for some time?
Sir, can you define some time? Can you hold? Do you want to hold this counter for the next 6 months, for the next 1 year?
Next year, 6 months, 6 months.
Right. Swati, coming to you, any technical views on Tata Steel? Jagdish is holding 500 shares, bought at a price of 180 rupees.
Yes, my view is definitely positive in this particular counter, because last year was not a good year for the metal packs. We have seen a continuous falls from almost 180 to 130 levels, and after that the stock is showing some sort of a reversals on the positive sides. The interesting fact that whatever channel we're witnessing a downward sloping channel in the last 1 year, the stock manages to come out that particular channel, which indicates that there is a change into the trend. So slowly and steadily the stock is moving in the northward directions. I believe it has a very strong potential to reach up to 175 to 180 levels. So definitely you can hold on this long positions. Downside, it has a very crucial support at around 135 levels. As long as it's mentioned that holds that support level, my view will remain a positive for a target of 175 to 180.
Got the view, Swati. The next query again coming in from Nama Bengaluru. Sushant is dialing us with a query. Sushant, good morning. What's your query?
Yeah, hi, good morning. So I bought Axis Trade Technologies at 517 level, which is 40 shares. So if I hold 2 or 3 more months, it will be a long term. So should I book the profit or should I hold it for long term?
Swati, I'm not sure if you tracked the stock. Any kind of view that you have currently on Axigates?
Right, exactly. I'm really very positive on this particular counters. Why so? Because on the monthly chart, the counter has given a channel breakouts. The interesting fact, on the daily chart, it has given the flat pattern formations breakouts. In this kind of a market, the counter is trading at all-time high. The overall structure on the technical charts are really positive. I'm looking forward that very soon we are likely to witness some sort of a very strong move, which might take a stock towards to 4-digit levels up to 1100 to 1200 is my target that I'm looking forward. So it's a definitely hold on this particular counter. If you want to add on, if you're getting any dips to 700 and so levels, it's definitely a buy call for a target of 1100 to 1200 in the near coming few months as such.
Well, Axis is seeing some good momentum as well over the last 6 and 12 months as well. But Swati as well as Asta, stay on. Time for a very short break, viewers. More stock queries on the other side. Stay tuned to Ask Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
welcome back to Ask Profit right here on NDTV Profit. Viewers, keep sending us your queries on WhatsApp and you can dial in for a stock query as well. We have Swati as well as Astha answering all those particular questions. Next query we have is on WhatsApp. Akib is asking a question. He's from Kashmir. Tata Technologies at 1171 rupees per share. He's been holding 22 shares since the listing day, and it has not been a very pretty journey for this particular investor. Astha, let me come across to you for Tata Tech. An initial very big boost from the issue price about 500 all the way to 1300, but then we've seen correction constantly since listing. Any kind of view that you have on Tata Technologies?
So first of all, listing was very, very strong. At the time also our view was a subscribe to the IPO, and we have recommended our client to book some sort of profit also because it got listed at a huge premium. Now talking about this counter, this company has a prowess in ICE to EV, conversions. So that is the major their prowesses. But right now the way we are thinking and way we are seeing the pressure in the auto sector, I think that is also not going well with the company, and we are seeing there is a pressure in these stock prices. So right now the fundamentals, they really need to show some more improvement in the financial performance front also to take the stock to the higher level, which is not reflecting in the financials as of now. My idea here is to stay invested in this counter because the management pedigree is strong, the group is strong. The only problem is with the fundamentals about the kind of product they are into and the kind of business they are into, and that's why I think one can remain invested in the counter till the next results come.
Right. The next caller query is coming in from Ray from Bangalore. Good morning, Ray. You can go ahead and ask your query.
Yeah, hi. So I'm holding 15 shares of TB Fintech at 2097 per share, and this was bought around January this year. So just want to know the outlook over the next 6 months to 1 year, and is it the right time to average it out as of now?
Astha, coming to you first, do you think it's a good time to average out PB Fintech shares if the person is ready to hold for the next 1 year?
So their core health, their core strength is in the health business, and they have shown a strong performance across their, insurance platforms also. So I think it's better to stay invested in this counter because the financials and the fundamentals are looking to be very strong. But right now, making entry or averaging at this point of time is not suggestible because we feel that the stock can fall a little bit, maybe till the level of 1400 or 1380. So those are the good levels to make an entry or make a average in this counter. Right now, just wait and watch.
Right. And Swati, what's the technical view on PB Fintech?
As of now, this counter is just trading in the oversold zone. We are witnessing that the stock manages to maintain the support of 1350 levels, and from there onwards, we are witnessing some sort of a consolidation phase. Whatever correction we have seen the price correction. Now the time correction is going on. We are likely to witness some sort of a consolidation phase within the range of 1500 to 1350. Once it gives the consolidation breakout, then more positive momentum can be witnessed, which might take a counter towards to 1650, then 1700 levels get open. So at the current levels, definitely the risk reward is favorable, downside is limited. You can hold on the long positions. Immediate target will be 1600, and about at level 1750 can be seen.
Got the view, Swati. The next query that we're getting is on WhatsApp. Satyan is writing into us for Godrej Industries for a fresh long-term view. Astha, any kind of outlook that you have on Godrej Industries?
So here one want to make a fresh entry, I suppose. And for that reason, right now, I think it's better to wait for some more downfall to come and then make an entry or a fresh entry into this counter. Maybe at around the level of 1080 to 1090 are the good level to make entry into this counter. So idea here is not to make entry at this point of a time. Let the stock fall till those level and then make entry.
Right. The next caller query is coming in from Venu Srirangam from Telangana. Good morning, Venu. Thank you for calling us. You can go ahead and ask your query.
Hello, sir. I have purchased JASH Engineering, JASH Engineering,
right.
Water theme. Can I hold for long term? I have purchased it for 600 rupees, 20 shares only, but I have got a long term look.
Right. Astha, any views on Josh Engineering for long term? The caller is holding 20 shares bought at a price of 600 rupees.
So here the long-term view is positive on this counter on the back of the 30 to 40% growth which has been posted by the company in the financial performance of Q3 of FY25. Now, if I talk about the other fundamental of this counter, they are into the water control gases. Basically, this is an engineering company which is engaged in the manufacture of water control gases, maybe flat walls, etc. So the kind of business they are into, the kind of financial performance they are posting right now, I think it is seems to be a decent counter to stay invested in. So idea here is to hold this counter for the price target of somewhere at around 620 to 630 odd levels.
Got the view, Astha. That's on Josh Engineering. The next query that we're getting is from WhatsApp. Raghubir from Chennai is asking his question on Sterling and Wilson Solar, holding roughly about 1900 shares at 414 rupees per share. Now, currently sitting on some losses, definitely over 3 lakh rupees. He's asking if should I book losses now. I'll take both your views, ladies. First, let me start with Swati. Swati, on the charts, Sterling and Wilson, what does it suggest?
Yeah, the charts really looks fixed because whatever the rally we have witnessed within the span of the last 1.5 years, already the 100% retracement has been done and it's just trading below that level as well. I believe the stock will try to find out a support nearby 200 or 220 levels. Up to that level, more selling pressures can be seen. After that onwards, we can witness some sort of a reversal. But at the current level, my view is little bit cautious. Don't book the losses because already the counter is trading near the oversold zone. So depth is limited, not to book the losses at the lower ends. Keep the patience, let the stocks find out the support nearby 200 and level, then you can just take a review once back. On the technical front, bounce back rally can be witnessed up to the 300 and so level. So as of now, my view is cautious, stay sidelines from this particular account.
Astha, would you concur with Swati's view on Sterling and Wilson?
So if I talk about this counter, I think this counter has shown very good performance, especially if I reduce the other income element, because in this quarter, that is, I'm talking about Q3 of FY25, their other income has reduced considerably. Despite the fact of reduction in the other income, the company has been successfully able to post the growth of more than 20-30% in their bottom line. So the financial performance seems to be very, very strong. And my idea here is to stay invested or hold this counter. Long-term price target can be set for this counter is 250 to 260.
Well, Sterling Wilson definitely seen a lot of correction. The next query that you're getting in the South Supremacy continues from Pratap. He's dialing in for a stock query from Bangalore. Pratap, good morning. What's your query? Pratap,
Hi.
am I audible to you?
Correct. Am I audible to you?
Yes. Please go ahead, sir.
Okay, fine. Right. So here the fact is, I am holding the share called Reltel at the price of 300, and I am holding quantity 330 quantity. So my query is, should I hold? If yes, then how many months? And what could be the tentative price in next 3 months?
So short term view. Swati, let me come across to you for Railtel. Anything on the chart suggesting any kind of upside over the next 3 months?
Definitely the view is a little bit turning into the positive side. Why so? Because on the daily chart we are witnessing a positive divergence. Also the interesting fact that the stock is forming the inverted head and shoulder, and it's on the verge of forming the right shoulder of that formations. The neckline comes nearby 305 310 levels. If it surpasses that level, the positive move can take a counter towards to 340 350 levels. So the short term view is definitely positive. We are likely to witness uptick rally. Any move above 300 and 305 levels. So it's a hold from my end. Downside, it has a very good support levels at around 275. So as long as it holds that support levels, we are likely to witness a positive momentum on high side.
The next query is coming in from Venugopal. He's holding 1,000 shares of Ola Electric bought at a price of 72 rupees per share. He wants to hold it for long term. Astha, any views on Ola Electric from long term perspective?
So long term is looking good to me, and I think from those perspective, definitely it's a hold from my side. But in the short term, we really need to see how the company is performing, because in fact they have some good, very good product pipeline was there, and now how the performance will be, we really need to see. But I think in the long term, definitely it will perform. short term can be a question mark, just on the base of the news which are coming, because sometimes the news can act as a dampener on the stock prices also. In the past, we have seen. So in the short term, we might see some sort of correction, but in the longer term, I think stay invested is a better choice for this counter.
Got the view, Asta. The next query is getting another caller from Bengaluru. Chetan is dialing us with a stock query. Chetan, what's your query? Good morning.
Good morning. This is Chetan. So my question is, like, I'm planning to buy Jupiter Wagons or Titagarh.
Okay.
Which one is better to buy? And some of my friends are holding like both of them, but I'm just planning to buy either of them. Like, which one is like good in the future perspective of this?
And government. And Chetan, what would be your time frame for holding any of these particular stocks? Is there a short-term view that you're looking for?
No, short term basically.
Okay.
So a bit of like long term on
long-term view.
Couple of years.
Got that.
Not very long term as well. Yeah.
Got that. Asta, Jupiter Wagons or Titagarh, any of the stocks that you're favoring currently?
So we would like to go with the Jupiter Wagons as of now. So Jupiter Wagons is looking better to me. If I compare it with the Titagarh train system or Titagarh wagon, because in the Titagarh we have seen the stock prices were not supporting, just on the back of the not so good financial performance. In the Titagarh we have seen that the financial performance was dented, and it was a 20% degrowth which we have seen in their bottom line. So definitely Jupiter Wagon takes an edge over the financial performance and would like to go with this counter.
The next query is coming in from an international viewer of NDTV Profit from Vivek. He's a long-term investor from Thailand. He is holding around 500 shares of Bajaj Finance, bought at an average price of 3,671 rupees. He wants to know whether should he continue to hold this counter for long-term. Astha, any views on Bajaj Finance?
Yes, one can remain invested in this counter for the long term. The only problem right now is that the markets are not in good shape. So maybe some sort of volatile move we can expect in this counter. So be ready for that. But I think in the long term, definitely this stock can move in the short to medium term 9,500 level. This is our initial target, and then 9,800 level also. Now talking about the fundamentals, their quarterly 3 of FY25 performance was good. And in fact, if I talk about their AUM also, the AUM has seen a good growth. So I think on the back of macro environment which is going on, the company is performing good. They are expecting the credit cost to lower gradually also. So I think that can also be act in the favor of the company. And we think that in the rural markets also we can see some sort of recoveries that can help the company in performing very good performance going ahead. 9,500 can be set as an initial price target for this counter, and remain invested in this counter is a recommendation from my side.
Remain invested from Asta, and you know that stock query, roughly over 20 lakhs, 23 lakhs in terms of profit. So very good investment, very good price to get in as well. So Vivek, kudos to you on that. The next query is also a call coming in from Odisha. Krishna is dialing in with a stock query. Krishna, good morning. What's your query?
Good morning, sir.
Yeah, please go ahead with your query.
I am holding NoSil Limited.
Okay.
75 shares at the rate of 292.
And you're looking for a long-term view?
As the stock has drastically corrected, I want to add more. Is it advisable or not?
So would you be okay with holding the stock if, I'll get a fundamental view as well on this. So Astha, any kind of outlook that you have on NoSil? Stock has seen some correction. Any view on this particular counter?
So I should tell the reason why the stock has seen a good correction, because the financial performance posted by them was not up to the mark. It was weaker. First of all, financial performance was weaker, and that too it was weaker than what we were expecting or what street was expecting. So that is the major reason for the stock prices not to perform good. But going ahead, because we have seen the volume were also on a decline, and performance was not good, and the company is continuously able to see some sort of pricing pressures. But I think in the longer term, the company can overcome all these problems, and they will post good set of a number. So in the longer term only, that means here the time horizon can vary from 6 to 9 months. One can remain invested in this counter rather than booking losses at this point of the time. So remain invested in this counter, and this counter can see the price level of more than 200 in the coming months if what we are expecting from the financial performance comes on the mark.
The next caller query is coming in from Neeraj Kapoor from Kolkata. Neeraj, thank you for calling us. Good morning, and go ahead and ask your query.
Yes, sir. Sir, actually, I was holding 6,000 shares of KPR Mills, bought around 9 years back. But now I'm having around 5,000 KPR left. So, what is the technical aspect like? I bought them 9 years back at the rate of 60.
Firstly, congratulations on a very solid profit on this counter, that is KPR Mills. Swati, coming to you, how's KPR Mills looking like on charts?
Yes, first of all, congratulations, Mr. Neeraj. You have just tried to hold on this particular counters from a very long period of time, very attractive buying price. On the technical front, definitely the view is positive. Why so? Because the counter is just came about the oversold zone, and interesting fact that it has just came out of the downward sloping channel also. A positive momentum has been witnessed from the last week, and with a very decent volumes. I believe that the stock is likely to carry this momentum towards to 950, and beyond that level 1040 levels can be seen. So definitely so you can hold on the long positions at the current market price. If you want to keep any profit stop losses, 825 is the crucial support levels. As long as you hold that level, the view will remain a positive for the mentioned targets. So try to hold the long positions by keeping a strict stop loss of 825 levels on the downside.
Got the view, Swati. The next caller is coming in from Hyderabad. Prasad is dialing up with a stock query. Prasad, good morning. What's your query?
Very good morning to you, sir. Hello?
Yes. Yeah, go ahead with your query, Prasad. You're audible.
Yeah, I have purchased the Dixon Technologies yesterday morning around for some 13,680 here. And after that, it has drastically come down this morning. When I saw it, it went up to beyond less than 13,000. So I just wanted to know, is it because of the regular thing, or is it further taking any correction? Because sometime back, I heard as per the PE and all, they said that it will be somewhere 12,860 or 12,500 will be the right price. So will it correct itself, or will it have an impact?
Prasad, do you have a long-term view on the stock, or are you holding it for the short term?
Short term, yeah.
Sorry, short term you said?
Yeah, short term.
Okay. Swati, Dixon Technologies has seen some correction, backed also by high PE multiples, over 100 times its current price to earnings. Anything on the chart suggesting for Dixon Technologies going forward?
Puneet, we have already seen a very strong rally in the last one and a half year, from almost 5,000 to 17,500, beyond that level. So a profit booking cannot be denied after such kind of a steep rally on the one side as such. Now the interesting fact is that from the oversold zone, this particular counter has given the negative divergence signal. That's why we are witnessing some sort of a selling pressures, or say the profit booking, and it's likely to be continued for in the near term future as well. I believe that the stock may continue this falls towards to 12,500 to 12,200 level. Up to that level, we are likely to witness some sort of a selling pressures, but not a one side in the pattern of the higher tops, higher bottom, low tops, low bottoms formations. So I believe that if you're getting any rise towards to 1400, 14,500, that will be the attractive level to exit the long positions. Or if you want to take a again fresh long positions, try to hold on this particular counter. If you're having a view of a long term period, any move above 14,000 levels will change the technical view or the particular patterns towards on the positive sides, which might take a counter towards to 14,800 to 15,000 levels. So for a short term period of time, my view is cautious, but a longer term horizon, definitely after some period of time, we are likely to witness a positive move in this particular stock.
Right. The next query is on a very highly liquid and highly volatile stock, that's Vodafone Idea. The query is from Rahul Vadar from Kolhapur. He wants to know whether is it a good time to buy or wait for some downfall when it comes to Vodafone Idea. Ask the first coming to you on the long-term prospects for Vodafone Idea.
So I think wait for more dips to come in before making a new buy into this counter. This is what I believe. And I think better to make entry at the price level of around 7 rupees or 6 rupees 80 paisa. Now, what I believe that we have seen that there was a rise in the tariffs, and that can help the company in posting good ARPUs. But still, we have to see how their balance sheet seems to be like, because the balance sheet is leveraged. So we really need to see how much leverage is the balance sheet as of now, and what steps the company will be taking in order to reduce the debt. So that is the major concern, and that's why we are not outrightly saying just make an entry into this counter. Let the counter fall till those levels and then make an entry to this.
Quickly, how's Vodafone Idea looking like on charts?
See, I'm agree with the Asta because the chart is not looking that much attractive. I believe 6.5 level is the attractive level to take a fresh long position, not at the current market price. Or if you're getting any move towards to break out of 8.50 rupees, then some positive momentums can be seen. So either wait for a downside or wait for the breakout level, but not to take a fresh long at the current market price.
Got the view, Swati. The next query is coming in from Chennai. Sankaran is dialing out the stock query. Sankaran, good morning. What's your query?
I bought IRFC at 117 price.
Right.
Can I hold now or I can sell it now? What is the suggestion here?
Asta, let me come across to you for IRFC. A very high retail interest stock. Any kind of outlook on the same?
Yes, so I think one can remain invested in this counter rather than making a exit at this moment of a time. Now, the reason behind it why we are saying hold this counter, because what we have seen that the financial performance was not poor, although it was not excellent or a very strong, but they have shown the decent rise in their profitability as well as their operating profit. So I think on that basis, and in fact, we are positive on these counters going ahead also. My idea is because the kind of orders which all the railway companies are getting, that will also help this company in posting good set of numbers going ahead. So there is no harm in holding this counter, but a fresh entry cannot be made at this point of a time. Let it fall more and then make a fresh entry. Otherwise, hold is a strategy from our side. Price target can be set at around 125 to 130.
The next caller query is from Harish from Vizag. Good morning, Harish. Can you please go ahead and ask your query?
Good morning. I am having 300 shares of REC at 494.
Right. So would you want to hold this counter for long term or for short term?
Long term. Can I average the share?
Right. Astha, would you advise Harish to average REC share prices at current levels? He's holding 300 shares bought at a price of 494.
So I think quarter was good. One should remain invested in this counter. They have shown very strong disbursements. And what we have seen that there was some sort of minor hiccups in the financial performance, and that was due to some sort of delay in the repayment, etc. But I think going ahead, this quarter was good for the company, and they have posted very strong side of numbers. I think one should remain invested in this counter, and price target can be given at this point of a time is 430 to 440.
Got the view, Astha. Now it's time for a rapid fire segment where we take stock queries with a guest, and Swati as well as Astha request you to keep your answers very quick. We'll try to get as many queries as possible. The first one we'll take Yash from Gurgaon. He has a query on Natco Pharma at 1540 rupees per share. He's asking if he should average at this current price. Astha, any kind of view that you have on Natco?
So I don't recommend averaging because I believe that this stock can fall more till the level of 680, 670. So don't average at this point.
The next query is from Murli. He's holding 70 shares of Gensol bought at a price of 687. Astha, should he continue to hold this counter or exit?
Unless some more news come, I think it's better to hold this counter and then again review the query.
The next query is from Neha from Bangalore. Chambal Fertilizer is the view that she's asking for. Swati, she's holding on 15% profits. Any view for the next 3 months?
You can hold on this particular profits with a stop loss of a 545 downside. Upside can be seen up to 590.
The next query is on Apollo Hospital. It's from Gul. He's holding a few shares of Apollo Hospital bought at a price of 6,266. Swati, any technical view on Apollo Hospital?
My view is a bit cautious. If you're getting any rise towards to mark 6,300 and so levels, you can try to exit the long positions.
Well, the next query is Easy Trip Planners. Our viewers holding roughly 10,000 shares on a stock that's not done very well. Astha, any view that you have on Easy Trip for someone who's already holding a lot of shares?
Try to exit from this counter at every higher level is what I can recommend.
The last query is from Sunita from Hyderabad. She's holding 120 shares of Castrol bought at a price of 235. Swati, how's the stock looking like on short-term levels?
The view is definitely positive. Momentum can be seen up to 260 levels. So it's a hold from my end by keeping a 225 rupees as a stop loss.
One last query for the day. EIL is the stock that viewer is asking for. She holds 200 shares from Bangalore. 246.92 is the price. Asta, any kind of outlook that you have on EIL?
Looking very strong with a very strong growth in the bottom line of more than 70-80%. Remain invested in this counter. Price target can be set at 180 to 190 at the initial level.
With that, we're completely out of time. But Astha as well as Swati, thank you so much for joining us and taking us through all the host of the queries. We look forward to our next conversation. Thank you so much for joining us today. But with that, viewers, we're completely out of time on this edition of Vast Profits. Stay tuned to NDTV Profit for more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we're taking a little bit of a path, rather detour, and we're actually talking about a large cap, well-known bank, and that is IndusInd Bank. We've had some updates which are concerning, and that's also the reason why IndusInd Bank has actually taken a sharp knockdown by as well over 20% on an intraday basis. We're going to cover a lot of aspects, but because this is KYC, we want to, as usual, start with what this particular bank does. So it was incorporated back in 1994, and the founder, of course, is Srishant Hinduja. The bank currently has about 4.2 crore customers, and it has a network of about 2,600 branches across the nation and well over 2,900 ATMs and cash recyclers nationwide. Now, in fact, IndusInd Bank, as being a part of the Nifty at one point in time, it's a bank which everyone knows about. And of course, a lot of our viewers could have potentially also banked to win IndusInd Bank. But in terms of its product mix currently, about 25% is a vehicle finance, microfinance comprised of another 9%, and of course gems and jewelry with about 3%. But most of it is still with corporate and retail banking, and that's as far as its operations are concerned. Let's move on and talk about a handful of the other factors in the bank. Let's move on and talk about the handful of the other factors. This is just a part of the product mix. There is a lot more to this than just the vehicle finance and microfinance. But as we always do, we consider the various metrics of each and every other bank, and we talk about the fundamentals of the company. So along with that, we consider the balance sheet, the income statement. In cases of banks specifically, we actually take up the balance sheet and then we consider the income statement. We also discuss the operational metrics and, of course, not to forget the asset quality as well. And then, of course, we move beyond the shareholding and talk about valuations, street credentials, and street coverage as well. So as usual, let me take up the aspect of the balance sheet. And in terms of that, firstly, we'll start off by looking at the advances and, deposits for the bank. And over a 3-year CAGR, it has done quite well. That should be up for you on your screen soon. Yeah, there you have it. So firstly, when it comes to advances, we've seen about a 17% CAGR. And deposits at around 14.5%. Are they spectacular? No, but they are reasonably strong in terms of the growth that we are seeing for this particular bank. And CASA also moving up around 10% in terms of CAGR. It has a reasonable capital adequacy ratio, but this one has come off quite a bit over the course of FY24 through the first 9 months of FY25. So it has fallen quite a bit. But do remember that the quarter gone by wasn't just that, but the quarter before that as well, had led to a lot of precipitation, and there were a lot of challenges with respect to capital adequacy as well, among many other factors and challenges, which is why this particular capital adequacy has come off to a certain extent. This is as far as the balance sheet is concerned. So when it comes to some of these aspects, again, most of it is pretty steady, and we're giving it a thumbs up given the kind of size at which the bank currently operates in. So, which is why we felt that these operational metrics were good enough for this particular size. So, it's going to be a thumbs up there. Let's move on and talk about the income statement now. And when it comes to net interest income, that has also seen a steady 15% CAGR over the course of the last 3 years. Its operating profit has grown about 10%, but its net profit has grown around 45% CAGR. Why is this the case? Well, obviously, we're looking at the provisioning which has come off. So in terms of these metrics, the bank looks a lot more positive. And especially when it comes to your top line, that is your net interest income, growing at around 15% over the last 3 years. Of course, notwithstanding the numbers that we're seeing for 9 months FY25, that stands around 16,000 odd crores. Now, we are not entirely certain as to what it is going to throw up for the whole of FY25. And based on that, we could potentially see a little bit of a slowdown in the net interest income as well. And naturally, we could see a consequential impact on profitability, and hence your 45% CAGR could also be a little bit on the moderated end, towards the end of this financial year. And we're just about, 80, 19 odd days before we come to the end of this financial year, and we'll have a better idea of how IndusInd Bank does. That's, of course, notwithstanding the current challenges that the bank is currently facing. And, because of that, and we're going to talk about that in a lot more detail. In fact, that's the reason why we took this up on KYC today. So this as far as your income statement is concerned. We move on and talk about the operational metrics now. And with respect to costs of deposit, that's remained steady, but with a little bit of an increase in the third quarter of FY25, that stands at around 6.6%. Your net interest margins have also come off from well over the mark of 4%. It has now dipped to below 4%, 3.93 to be precise. And cost of income, again, rising to around 52.5% against 47.5%. So some of these metrics are not exactly, I would say, desirable. And return on assets has also fallen quite a bit. While we've given it a neutral stance right now, this is bordering on a negative right now. But we wanted to give the bank a little bit of a benefit of a doubt, of course, notwithstanding it's the latest that we've had. That said, let's talk about asset quality. Asset quality has certainly worsened, and we've seen at the end of 9 months FY25, we've seen gross NPA ratios rise to 2.25%, and for FY25, that stood at around 1.92%. Similarly, if you consider the net NPA ratios, those also rose to around 0.68% against 0.57%. Now, on an absolute basis, this bank is one in which, one might expect these ratios to be relatively higher, but they are not. We'll take that into consideration, but the fact that we are seeing a rise in NPA ratios is the reason why we're going to give this one a thumbs down. This is as far as this financial statements go. Let's go beyond, talking about this and perhaps address the shareholding as well. And shareholding has been very, very interesting over the course of the 1 year. While promoter holding remains steady at around 16.3, 16.5%, the FII holding has completely reversed. And in fact, FII holding has come down considerably, significantly over the course of the last 1 year. And as of December 2024, FII holding stood less than 25%. And, when it comes to DII holding, that of course shot up. But naturally, if FIIs are selling in such large quantities, domestic institutions naturally will have a part in buying some of that bit, which is why domestic institution, holding for IndusInd Bank has risen to around 42.4%. Based on this particular aspect, we're going to give this a neutral stance, a neutral rating on the shareholding. So this is as far as the banks are concerned. And now, want to talk about the valuations. Firstly, we must remember that the bank has corrected significantly over the course of the last 1 year. In fact, reducing by 55% in the last 12 months, which is why we are looking at the valuations at a significant discount to some of its other peers on the Nifty 50. So while IndusInd Bank trades at around 0.7 price to book, 1 year forward price to book, we are looking at HDFC Bank, Axis Bank and ICICI Bank, all of them trading at well above the mark of 1.5. And of course, for likes of HDFC Bank and ICICI Bank, over 2.5 times. This gives you an idea about the preference and the holding of shareholders as well, and whether or not they would in fact want to assign IndusInd Bank a higher price to book ratio, and that is certainly not the case. At this point in time, it does certainly look like it's an undervalued stock just based on its price to book. But there is a reason why the stock is in fact below the mark of 1. And for the many aspects that we are going to draw your attention to, notwithstanding the last 9 months and the kind of challenges that the bank has seen in terms of its earnings, in terms of growth, in terms of its asset quality and worsening asset quality. But of course, in the latest that we've had, the latest update that we're going to talk about in just a bit, where does that leave us when it comes to street credentials? As I was mentioning, that we have seen a sharp correction, a sharp 55 correction in the IndusInd Bank, as against Nifty Bank remaining flat over the last 1 year. So that's the other aspect here. So it's been a clear case of underperformance for IndusInd Bank. And, in the last 12 months, it's not the first time that has fallen well over 18-19% in one single day. Now, we move on to talk about the street view. What is the street making of it? Well, I wouldn't make too much of what the street holds in terms of IndusInd Bank, because this very morning, we've had a whole slew of downgrades coming in, which is why for now, we're just going to hold on to it. However, for now, given the updated calls that are coming in since morning, we now have more number of holds and sells as compared to buys. The total number of buys in the consensus stands at around 25%. On the other hand, if you take 17 holds, which doesn't make up for much, and another 7 buys, that comes out to around 24. So it's nearly 50-50 for those who are currently favorable and for those who are, well, on the fence to selling the bank. So, that's as far as the street view is concerned, which is why we're going to give this one a neutral stance as well. That brings us to the total rating of the bank based on what it has been. So if you consider how things have panned out over the course of the last few years in terms of its income statement, its balance sheet, its operating metrics and asset quality, moving on, if you consider some of the other aspects like shareholding, valuations and street coverage, overall, a lot of these factors are not boding well for the bank, and hence we're getting a substandard 4 out of 8 rating for IndusInd Bank. Now, this is as far as the ratings are concerned. And as I was mentioning, the reason why we wanted to take this up is because of the latest issue, the elephant in the room. And that is IndusInd Bank has found an accounting discrepancies in its derivatives portfolio, and this amounts to 2.35% of the bank's net worth. My colleague Vishwanath Nair is now joining us to tell us more. Vishwanath.
So busy morning for IndusInd Bank. Of course, during the trade on Tuesday, the IndusInd Bank stock has hit about a 20% fall in its stock price. This was largely because of a discrepancy that the bank has found in its portfolio, in its derivatives portfolio, which is likely leading to an impact of about 2,000 odd crore. Now, let's explain the story, how exactly it happened. Monday evening, the bank comes out with an exchange notification saying that it has found certain discrepancies in its derivatives portfolio, which will lead to a financial impact. This financial impact is estimated to be about 2.35% of the bank's net worth as of December 2024. The amount here works out to between 1,500 to 2,000 odd crore. And this will be taken as a one-time hit during the fourth quarter results whenever the bank announces them. Now, what exactly happened and what are these discrepancies? That's what we need to understand. The first step to understand that is to know that a bank regularly accepts foreign currency borrowings as part of its normal course of business. Now, over the last 5 to 7 years, a certain type of internal trade has become the norm amongst the treasury departments of various banks. In IndusInd Bank's case, such internal derivative trades were undertaken for foreign currency borrowings, long-term foreign currency borrowings, which typically do not have a lot of liquidity outside of what the bank currently holds. Typically, in these long-term foreign currency borrowings that the bank undertakes, it converts these foreign currencies into domestic currencies, that is rupee, and holds it on its balance sheet. Now, in the course of doing its business, what the bank essentially does is that it swaps the foreign currency into Indian currency and then buys a hedge against this conversion from the external market. Now, the internal leg of this transaction is done at a swapped cost basis, which is the cost of swapping the two currencies, and the external hedge that they buy is taken on a mark-to-market basis, which on the prevailing market rates, there is a cost that is estimated, and typically the swapped cost and this mark-to-market cost are different. Now, because it's a long-term contract, 3, 5 to 8 years, the expectation is that by the end of the contract, these two costs will converge and the bank doesn't have to actually shell out any money on top of it. This is an estimate that the bank does depending on the market conditions, and it's reading on what future liquidity is going to look like. This is what happened at IndusInd Bank, and this was normal business practice. That is till September 2023, when the Reserve Bank of India came out with a set of guidelines which prohibit the bank from taking on any of these internal trades that the banks were typically doing. Now, according to those guidelines in September 2023, by April 2024, banks had to get rid of these internal trades from their balance sheet. What IndusInd Bank found in October last year, actually, is that some of those trades were still active on its portfolio, and that to unwind these transactions, you would have to end up paying a lot of costs, and that cost is what the financial impact that the bank is describing is roughly 1,500 to 2,000 crore. And this is why IndusInd Bank is currently on the dock. It is also coming at a time when IndusInd Bank's CEO, Sumant Katpalia, has only been given a 1-year extension by the Reserve Bank of India, as opposed to the board's request of a 3-year extension. And this is adding up, all of these negative news points are adding up and resulting in the stock falling about 20% during the day.
And following the announcement, IndusInd Bank, through a con call, issued a clarification last evening. And here's what MD and CEO Sumant Katpalia had to say. Listen in.
I think very difficult to answer this question. We have done all our due diligence when we've come and disclosed it. I think it's an estimate right now because the validation is still happening, and as the validation gets completed, we will come and disclose the number. In my view, I think the number should not be so much difference. It should be range bound, like you said, but very difficult to answer that question accurately right now. RBI continues to do thematic reviews in an organization. So they continue to KYC reviews, they continue to do loan asset reviews, they continue to do microfinance reviews, they continue to do credit card reviews, they continue to do corporate bank reviews. So it's an ongoing process with RBI. To say that, I think there is nothing material right now which is happening to my knowledge, and I don't think we are to be worried about.
My colleague Vishy, in fact, spoke to the sources within IndusInd Bank who clarified that the discrepancies, while confirming that it took time to conduct checks. Vishy, can you give us more details here as well?
Okay, so what sources are telling NDTV Profit is that, well, IndusInd Bank is a large private bank, and as part of its normal course of business, it conducts large treasury operations on its book. Now, according to Q3 disclosures by the bank, the cumulative notional value of derivative contracts, foreign exchange contracts, and well as options adds up to about 15 lakh crore. Now, remember that this is only a notional value. The risk-weighted assets against this notional value is only about 17,000 odd crore. Essentially, what the bank has said is that the size of the discrepancy that was found and the size of the trading book that it holds is not comparable at all, and the discrepancies are actually very, very small. And this is probably why the bank was not able to detect these discrepancies sooner than it did in October of 2024. And now that it has found these discrepancies, what the bank is actually doing is that it has already informed the RBI about the discrepancy. B, it had undertaken an internal review which concluded recently, and that is why the bank is able to tell you what the financial impact is. And the third part of this transaction, the third part of the moves that the bank has done is that it has appointed an external agency to validate its own internal findings. The external agency, which is PwC, that is what sources are telling NDTV Profit, PwC will submit its report on its findings by the end of this month, and then the bank can come out with further details if necessary. The bank is widely expecting that the impact of this entire transaction, that it is estimating about 2,000 crore, that is unlikely to change by a lot, maybe marginally here and there. That is roughly around 2,000 crore worth of an impact is what the bank is expecting. Because of this, Q4 is likely going to be a very bad quarter for IndusInd Bank, and the bank is expected to report a net loss. That is what analysts are estimating at this point in time. Sources are also saying that while the RBI has not given any direct instructions on why exactly they gave Sumant Katpalia only 1 year versus 3 years that was sought by the board, the very decision of altering this extension points to the fact that the RBI is probably not appreciating Sumant Katpalia's leadership at the bank. And now it's up to the board to decide whether they need to look at any external candidates or internal candidates as potential successors for Sumant Katpalia at IndusInd Bank.
Right, Rishi, thank you so much for getting us all those details. But needless to say, brokerages have issued ratings downgrades on IndusInd following the announcement of the fiasco, and while others have issued steep cuts in the price target. Mika is joining us to give us more details. Mika.
So we've had a slew of brokerages that have downgraded the ratings. Kotak from a buy to a reduced, Prabhudas Leeladhar from a buy to a hold, Nuvama from a hold rating to a reduced rating, and MOSL from a buy rating to a neutral rating. Even other brokerages like ICICI, DAM Capital, Elara Capital, Aquarius and Anurati all have downgraded the stock. We've also seen a 23 to 39% cut in target price. The lowest target price has been set by Nuvama at 750 rupees, while Kotak has it stated at 850 rupees. And it's just key to note that the current stock price of the stock is lower than even the reduced target price. Now, lastly, what are brokerages saying? Well, Citi has also cut their earnings estimate for IndusInd Bank by 25%. The derivative position discrepancy could knock the earnings as well as net worth for the bank, and the recent developments have raised the risk perception. According to Macquarie, the current issues raise question on internal processes as well as the robustness of the bank's internal process and as well as compliance. And lastly, you have Morgan Stanley, which has stated that the visibility on the stock continues to reduce. They do see downside risk to the numbers post the company's disclosure and await for further clarity on the discrepancy.
Right, Mega, thanks for getting us all those updates with respect to what brokerages are making. But earlier in the day today, NDTV Profit also spoke to Neostrat's Abiza Divanji, and here's what he had to say on the bank's turmoil. Listen in.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight or is it a conscious management decision not to hedge and make some money out of a dollar position? Is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved. Governance is if nobody knows what happened to that exposure and because of which the bank may end up losing 1,200 crores. That is a governance issue. That somebody just did not know what was happening. The other issue is a regulation lapse to say that I knew a regulation existed. I knew that there was a position in the bank and that position was consciously held because I thought the dollar would move the other way. Basically. So that's how I would differentiate between the two. What is right and what is wrong are again two different issues. But what I would very consciously want to say is that either which way it's a regulation lapse for sure. The governance lapse, I think, is a slightly bigger issue. That if one does not know what is happening in the bank, and that can be linked to the fact that, does a CEO get a 1 year term or a 3 year term? So I'm just trying to kind of combine both these things and say that yes, banks which are currently trying to deal with profitability, some of them may have taken those decisions within their ambit. Some of them may have been, taken to say that this is a currency position I wish to take over a period of time. And there's an RBI circular, which is ultra conservative in a sense that it requires every position to be hedged. And it basically tells the bank not to take any foreign exchange exposures, which may or may not be a correct regulation, but at the end of the day, it's a regulation. The problem is the differentiation we need to make is whether it is a lapse, as in a management lapse, oh, I did not know the circular, or I knew the circular, but I wanted to take a conscious move.
And that is all that we have for this edition of KYC. Stay tuned in for more. We'll be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm your host Malika Mishra. Let's take a look at how the markets are doing at the moment. Now, the benchmark indices, if you see on your screen, they're currently trading flat with Nifty down close to 0.24% at 22,430 levels, and the Sensex is down around the same levels and is hovering around 73,946 at the moment. Now, let's also take a look at how the broader markets are faring, and you would see that there's not much difference on that front as well, where you would see that, the Nifty small cap 250 is down 0.97%, and the Nifty mid cap 150 is almost flat as well. So not very different from how the benchmarks currently are faring. What's adding the most pressure to the stocks, to the index at the moment, there are stocks like IndusInd on the back of negative news flow with regards to accounting discrepancies. And you can also see Infosys, which is down by over 30 points. And, the IT sector especially is breathing in pain due to recessionary fears in the US. And we will talk about it later in the show as well. Then there are other counters as well, like M&M, Axis and TCS too are adding negative weight to the, main benchmark. On the other hand, you would see stocks like ICICI Bank, Bharti Airtel, Sun Pharma, ITC and RIL are holding up the index. And right now it looks like a fair divide between the reds and the greens. And if you look at the sectoral heat map, you would also see that, as I said, it's like a fair divide where almost we have equal number of sectors in the green and sectors in the red, but most pressure is being seen with IT and auto and bank and media actually dragging down the index, while you would see realty, oil and gas and finance standing tall and upright. Let's also take a look at the advanced decline ratio to get a sense of how the market is breathing at the moment, and you'd see that it is largely skewed in favor of the decline, so just over 600 stocks advancing at the moment and over 1,500 stocks in the reds. But today we are going to talk about the pharma sector, and I'm now being joined by my colleague Varsha, and the pharma sector expert who tracks the space really closely. And it's an important conversation that we're going to have to deep dive into the various nitty-gritties of the pharma sector. There's too much to talk about, and we have Vishal Manchanda, Senior VP Institutional Research at Systematics Shares and Stocks, joining us for this conversation. Good evening, sir. Thank you so much for joining us in this conversation. And I'd like to kickstart with a very basic and very basic question that Indian companies hold approximately 46% of the US generics market, and data says that we export close to $8 to $10 billion of drugs annually to the US. If Trump tariffs come to play and this happens, although we do not know the exact way in which this is going to unfold, but how do you think this could impact us? And in that scenario, what are some of the stocks that you would be bullish on?
So good afternoon. So we have been discussing Trump tariffs for quite a while. We are yet to see action around that. To me, I think imposing tariffs on pharma would be a tough decision for the US. And if you look at US, what's important for them in pharma is more of the patented drugs. So 90% of the money they spent on drugs goes towards the patented drugs, and almost 10% goes towards the generic drugs. While by volume, it's the other way around. 90% of the volume is generics and 10% of the volumes are the patented drugs. So my sense is while Trump is focusing on tariffs on pharma, they would rather look to focus more on the innovator drugs rather than the generic drugs. But if they do impose a tariff, I think it will be inflationary for the US markets, because Indian companies do not have the capacity to absorb the tariffs within the existing prices. They'll have to pass on the tariffs to the consumers. While I don't think US has in-house manufacturing capacities to replace supply that is coming from India. So I don't think they'll have a differential tariff for Indian suppliers versus other countries. So if that is the case, probably China can benefit if India probably gets a higher tariffs. But that is against the trend that we are witnessing. We are witnessing a China plus one trend where US wants to diversify their presence away from China to other countries. So I think net on net, pharma is unlikely to face an adverse situation. If tariffs are imposed, they'll be passed on to consumers.
Okay, so I understand from your answer that you're saying the generics segment of the pharma market might not be that impacted as how much we're sort of anticipating. And therefore, this brings me into the first question that I asked you. In such a scenario, which are the 2-3 stocks or more, as you may go ahead and mention, that you are bullish on?
Right. So I think in the space, our bias is to be kind of more aligned with the companies that have less US exposure. So among the large companies that have relatively less US exposure are Sun Pharma, Cipla. So these are two players with relatively lower US exposure. Their exposure to the US is around 30 to 33% of the sales. While if you look at Lupin, Zydus or Dr. Reddy's, their exposure is between 40 to 50% of sales. So the reason to kind of prefer companies having higher presence outside the US is because US as a market is not growing. The demand is saturated. You don't have generic penetration is already at 90%. There is no volume growth happening in the market. If at all, it's only low single digit volume growth that we are witnessing in the market. So hence, I think US is on a high base. If you look at the earnings of Indian pharma companies, a significant part of the earnings is now coming from the US. So being on a high base, delivering growth on this is also getting challenging for companies.
Got it. Hi Vishal, this is Varsha this side. So let's put this conversation. Let's divide this conversation. Then we'll have a chat around pharma, then diagnostics and hospitals. So starting with pharma. Now we all know that Revlimid has been the growth driver for many of the companies, and now because of the expiry of the product, what is your view when it comes to Revlimid, and can GLP-1 substitute Revlimid for companies? Because currently the hot topic is these GLP-1 products, which you have Sun Pharma, Cipla, Dr. Reddy's, all, even Biocon, all these companies going into this product. So any view on that?
So I think GLP-1s are unlikely to substitute Revlimid immediately, while in the long term, the opportunity will be very large. But there is uncertainty as to which player would probably dominate here. And again, there'll be a different set of players who would be dominating the regulated markets, and there'll be a different set of players who would dominate the India market. So I think GLP as an opportunity would ramp up, say from 2026 to 2031 over the next 5 years, from starting 2026. But I think from a size standpoint, the GLP-1 can be anywhere between $1 billion to a $2 billion market. We have to understand even innovators would want to participate in this opportunity given the size. So innovators, when I say, I mean Novo Nordisk and Eli Lilly. So far, they've been facing supply issues. Hence, they have been kind of not getting into the India markets. But as these supply issues get sorted, even they would want to participate for a share. So it's going to be competitive. My sense is the winners, we again should side with the larger players like Sun, Cipla, because they have a presence here and they are probably better placed to execute on the opportunity. So, but I think the impact of Revlimid will be very imminent and steep. So that we'll see some pain for a while.
Got it. So that's with regards to Revlimid and GLP-1. Now, Vishal, everybody, there's no doubt on that CDMO as a sector is growing into double digit and will continue to grow on the back of China +1 policy and everything. But now, considering the valuations, so Divi's is trading at 15x price to sales. You have Suven, which is trading at 20x price to sales. So are the valuations of CDMO justified at this juncture? Any views? Any views on, because everybody, so whoever I speak to many people and investors, and they are so bullish when it comes to CDMO, but I don't know about the valuations. I want your views when it comes to valuations of these companies.
Yeah. So I think very true. These valuations are very difficult to justify. 15x sales, 20x sales. So while there is growth coming in, double-digit growth coming in, but probably we'll get that kind of growth in other spaces too. So even within India Pharma, you can get double-digit growth, but at uh, much lower valuations.
So,
and again,
please.
you don't know whether the growth is structural. Maybe that there will be a transition of demand from China to India for a few years, and then we probably would be on a large base, and this growth may not be structural as we would want it to be.
Yeah, and I think CDMO itself is a lumpy business to be in. That also point has to be taken. But
Right.
are you any CDMO companies that you are bullish on, considering the valuations into perspective? Because I believe that the domestic CDMOs, you have Windlass Biotech in Innova, then Acom Drugs, which are people are actually also bullish on when it comes to domestic CDMO companies as well. So your view with respect to, are you bullish on the CDMO companies, the likes of Divi's and all that, and plus considering the domestic CDMO companies?
All right. So while I do not have a coverage on pure CDMO, so Divi's is one that I cover among the pure CRAMS player, but I have a sell view there considering the valuations. It's a good growth story, say around mid-teens growth opportunity, but considering the valuations, I have a sell there. I have coverage on companies like Jubilant Pharmova and Shilpa Medicare, which have a part of their business coming from the CDMO space, but the exposure is not that large for them to be qualified as pure CRAMS player.
Got it. Now let's shift our focus to diagnostics. Now again the same story, double-digit growth. Then people are betting where all these there's been shift from unorganized to organized market. But one concern that I found here is, do you see more competition shaping up in diagnostics, because you have all those pharma companies like Lupin and all, and hospital companies coming into diagnostics, and maybe so pharma companies are actually approaching doctors for recommending their diagnostic services as well. So will the likes of Dr. Lal or Metropolis and the pure play diagnostic companies that we were expecting to grow on the back of double-digit growth in the sector, and of course post-COVID we have seen the jump in these diagnostic services, what is your view regards to competition that these companies will be facing from pharma companies and also hospitals?
Right. So I think diagnostic business was a very attractive business maybe 3 or 4 years back, but since it was that attractive, we saw many new entrants coming into this space. And slowly, I think the business is losing its charm. So primarily because competition is growing, pricing is moving downwards, and then the growth space. So not the ones that the listed ones have limited presence in segments which are high growing. So like the molecular diagnostic space, they have limited presence in those categories. They are specialized players who have presence in those growth areas. So I think looking at the valuations, I'm not very convinced about the story around the diagnostics. I cover only one stock here, Krishna Diagnostics, which is more of a B2G play, business to government business, rather than a B2C play like other diagnostic companies. But they are high growing. The challenge for them is to generate ROEs comparable to the private counterparts.
Right. Vishal, my last question before I let you go, on hospitals. So now the idea is, or that people are, or rather investors are more bullish on hospitals where there's more brownfield projects versus greenfield projects, and many brokerage houses are actually giving the buy recommendation to Max and Apollo, considering more brownfield projects. Your view when it comes to hospitals, number one. Number two, we also saw this news wherein, Adani had is into partnership with Mayo Clinics to, get into healthcare, affordable healthcare services. How you think this will affect hospitals per se?
Right. So Varsha, I don't have a coverage on the hospital space as such, but I'm watching it in the sense looking for a better entry point. Basically, looking for the valuations to cool down before I start covering this space. But as you said, brownfield expansions are something that probably will help you expand your margins from where they are currently. So probably I think the top line growth in this space is somewhere in the double digit and with margin expansions also coming through. I'm not sure whether there is headroom for the valuations to re-rate further from here. And if the valuations sustain at current level, we can see a compounding return on the hospital stocks.
Okay, got it. And Mr. Vishal, I would want to also understand I would want to get your concluding remarks on the fact that if I as a viewer wanted to know whether or not the Indian healthcare system or the services that we're currently, so Indian healthcare is a big space. Foreigners come to India to avail healthcare services from India. Going ahead in the next 2 to 3 years, because of how Trump's administration is so volatile with its policies, do you think it could be expensive or become expensive, or is it going to be moderate and manageable?
So I think medical tourism will kind of put pressure on the put upward pressure on the pricing basically, because the premium hospitals will probably will try to encourage more of the high value customers. So, but I think if that happens to a greater extent, we'll see some regulatory forces kicking in. Because this is a space which becomes a bit of politically sensitive as well. So I think over time, I think tariffs will probably and again looking at the way hospitals are expanding capacities, new players coming into this space, we'll see the demand supply not getting too much skewed from where it is today.
Okay, got it. Thank you so much for talking to us and giving us your holistic views on the pharma space. We hope to see you soon, and thank you so much for joining. And Varsha, another pharma stock, right? Laurus Labs, the stock is up 6% today.
Yes.
And export data trends have shown that the company is heading towards a very good quarter, strong quarter. What's happening with the stock, and give us an overview.
So, Malika, finally, I think from Q3 onwards, finally good days are coming for Laurus Labs. But let's see what's the reason behind. In such a market, the stock is up almost 2%. If you see, so the export data had come out wherein Laurus Lab exported $98 million in the first 2 months of this quarter, significantly exceeding its average, that is $75 million for the last 3 quarters. This suggests a strong increase, in export activity. Now, as per the past trends, third month of the quarter is the strongest quarter for exports for almost all companies, including Laurus Lab. And this suggests that, Laurus Lab is well set to report a good Q4 in line with management commentary. If you see that during Jan to Feb, analysts are estimating that the Laurus has booked at least $35 million of CSM, that is custom synthesis manufacturing revenue, with bulk of sales to Pfizer. And more than 50% of it is increase in the value of Revlimid, that is your cancer product exports year on year, suggesting the sharp increase in volume allocations for calendar year 25. Now, if I were to talk about the guidance or what Laurus Lab is actually projecting when it comes to whole FY25, one is they're anticipating API growth returning next year, that is FY26, with a positive order book. And FY26 is expected to be good year on the back of CDMO, with further growth anticipated beyond FY25. Now, consider Laurus Lab as a company which after 2 to 3 years down the line will be called as a CDMO company, because they are betting big when it comes to CDMO. And for the entire financial year FY25, they are expecting 20% of EBITDA margin, to which Q4 margin should actually bounce back, at a very good rate.
Got it. Thank you so much for that view on Lotus Labs, Varsha. And moving on, viewers, let's look at the top story this morning. IndusInd Bank has found accounting discrepancies in its derivative portfolio, and this amounts to 2.35% of the bank's total net worth. My colleague Vishwanath Nair is joining us to give us the whole picture right now.
What sources are telling NDTV Profit is that, well, IndusInd Bank is a large private bank, and as part of its normal course of business, it conducts large treasury operations on its book. Now, according to Q3 disclosures by the bank, the cumulative notional value of derivative contracts, foreign exchange contracts, and well as options adds up to about 15 lakh crore. Now, remember that this is only a notional value. The risk-weighted assets against this notional value is only about 17,000 odd crore. Essentially, what the bank has said is that the size of the discrepancy that was found and the size of the trading book that it holds is not comparable at all, and the discrepancies are actually very, very small. And this is probably why the bank was not able to detect these discrepancies sooner than it did in October of 2024. And now that it has found these discrepancies, what the bank is actually doing is that it has already informed the RBI about the discrepancy. B, it had undertaken an internal review which concluded recently, and that is why the bank is able to tell you what the financial impact is. And the third part of this transaction, the third part of the moves that the bank has done is that it has appointed an external agency to validate its own internal findings. The external agency, which is PwC, that is what sources are telling NDTV Profit, PwC will submit its report on its findings by the end of this month, and then the bank can come out with further details if necessary. The bank is widely expecting that the impact of this entire transaction, that it is estimating about 2,000 crore, that is unlikely to change by a lot, maybe marginally here and there. That is roughly around 2,000 crore worth of an impact is what the bank is expecting. Because of this, Q4 is likely going to be a very bad quarter for IndusInd Bank, and the bank is expected to report a net loss. That is what analysts are estimating at this point in time. Sources are also saying that while the RBI has not given any direct instructions on why exactly they gave Sumant Katpalia only 1 year versus 3 years that was sought by the board, the very decision of altering this extension points to the fact that the RBI is probably not appreciating Sumant Katpalia's leadership at the bank. And now it's up to the board to decide whether they need to look at any external candidates or internal candidates as potential successors for Sumant Katpalia at IndusInd Bank.
Right, Rishi, thank you so much for bringing us those details. Now, NDTV Profit also spoke to Vizir Divanji of Newstrat Advisors to understand the implication of this entire saga on the economy. Let's hear him to take his advice and his views on what's happening.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight or is it a conscious management decision not to hedge and make some money out of a dollar position? Is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved. Governance is if nobody knows what happened to that exposure, and because of which the bank may end up losing 1,200 crores. That is a governance issue. That somebody just did not know what was happening. The other issue is a regulation lapse to say that I knew a regulation existed. I knew that there was a position in the bank. And that position was consciously held because I thought the dollar would move the other way. Basically. So that's how I would differentiate between the two. What is right and what is wrong are again two different issues. But what I would very consciously want to say is that either which way it's a regulation lapse for sure. The governance lapse, I think, is a slightly bigger issue. That if one does not know what is happening in the bank, and that can be linked to the fact that, oh, does a CEO get a 1-year term or a 3-year term? So I'm just trying to, kind of combine both these things and say that yes, banks which are currently trying to deal with profitability, some of them may have taken those decisions within their ambit. Some of them may have been, taken to say that this is a currency position I wish to take over a period of time. And there's an RBI circular, which is ultra conservative in a sense that it requires every position to be hedged. And it basically tells the bank not to take any foreign exchange exposures, which may or may not be a correct regulation, but at the end of the day, it's a regulation. The problem is the differentiation we need to make is whether it is a lapse, as in a management lapse, oh, I did not know the circular, or I knew the circular, but I wanted to take a conscious move.
Let's shift focus. Amid tariff uncertainties, the government is aiming to fast-track incentives under export promotion mission to support exporters. And my colleague Rishabh is joining us to tell us what he's exactly gathering from his sources. Rishabh, over to you.
What we've come to learn from sources in the government is that the government is pushing for the implementation of the incentives that it announced in the budget within a month. This comes as the US tariff imposition becomes more and more volatile as the April 2 deadline approaches very, very fast. We're seeing that the government had already announced these incentives. They wanted to facilitate access to credit. They wanted to support MSMEs, especially with respect to cross-bordering factoring, as well as support to tackle non-tariff measures. So these are some of the few. Apart from that, there's also the interest equalization scheme that the Commerce Ministry and the Finance Ministry are in talks with to implement very, very soon, especially for MSME exporters. We are seeing, and sources have told us that exporters are holding back a bit due to the uncertainties around the Trump administration and the tariffs that it has been imposing. And exporters don't want to send shipments out and then have duties be imposed on them. So that is a point of an issue. Some impact might also be seen in the February numbers, in the February trade numbers that will come out very soon in the next 4 or 5 days. And barring petroleum as well as gems and jewelry, there will be some impact, though the numbers will hold up is what we're learning. So more to track on this.
Thanks for that, Rishabh. And viewers, that's all the time we have on the show. But do stay tuned to NDTV Profit for more news and updates.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Rucha Somaya. Good morning, Rucha. But first up, let's quickly look at the top headlines at this hour. IndusInd Bank leads market declines as the lower band is revised to 23%. Sources tell NDTV Profit that the bank has appointed PwC to review its internal investigation.
Benchmarks trade flat at Nifty remains above 22,400 and Sensex hovers around 73,955.
And Nifty IT is the top sectoral loser in trade, falls close to 1.5%. The Infosys the lowest one.
Pharma stocks are in focus. ICICI Securities upgrades Sun Pharma to a buy rating from hold. Syngene International acquires its first US biologics manufacturing facility in the US.
And Indian exporters refrain from sending goods to the US on tariff fears. Sources say the government is considering implementation of incentives under the export mission scheme within a month. But first up, if you see in terms of what markets are doing, let's quickly pull up Nifty 50 on the screens and see what's happening at that front. Pretty much flat, so there has been a good recovery from the day's lowest levels that has come in. Overall, we've hit a high of around 22,485, I beg your pardon, but that's still below those 22,500 levels, and that's an important level that the Nifty still needs to hold on to. If not, sell on rise is the kind of strategy it seems that the street is watching out for. Let's quickly pull up Bank Nifty on the screens as well, because it's an interesting move. Like the way you did see a downtick on an IndusInd Bank, you still had a ICICI Bank and an Axis Bank that were holding up. Still, you're seeing 0.7 to 0.8% of a cut kind of that's coming in terms of Bank Nifty as well. Let's look at the PSU Bank Index and then look at the individual components. If you can just give me the PSU Bank Index as well, there you go. That's pretty much on the positive side, but I mean on the borderline, I would say. Trading flat, but there is some bit of positive momentum there. So there's no contagion effect of an IndusInd Bank that's coming in terms of other peers as well. Let's look at the heat map in terms of various sectors, because last couple of trading sessions, it's been FMCG that has been holding on to gains. Currently, you've seen a bounce back that's come in terms of Nifty real estate. That's an interesting one because this was the worst start year of the year in the last 14 years. And I think 2011 is when Nifty real estate had seen a cut of around 23%, and that's now coming again. Apart from that, you have healthcare, which is trading in the positive, oil and gas, infra. These are few of the names which are bucking the trend. What's losing is the private banking space because of an IndusInd Bank is down around 1.4%. IT index, that's seeing the pressure built up as well. I mean, you have Infosys, which has been one of the trending stocks today. And if you talk about NASDAQ, that impact is coming in with the fears of a US recession. And that's being mirrored on Nifty IT index with cuts of 1.3% coming in there. Auto seeing cuts of almost 0.6%. And this is probably on the back of the Maharashtra motor vehicle tax that has been increased. So overall, it's an interesting day of trade in terms of individual sectors. But let's quickly look at the top gainers and losers on Nifty 50 as well as we speak. If you see in terms of contributors which are pushing Nifty lower, Infosys, IndusInd Bank, M&M as well as a TCS. But what's holding on is a ICICI Bank, Bharti Airtel, Sun Pharma and a Trent. So these are interesting names that we have been watching out for. But from here on, Rucha, if you see in terms of broader markets as well, what's happening is, I mean, you know, because that's where the rout has been over the last couple of trading sessions.
Yeah, I mean,
and people are betting big on the large caps, and there's no confidence with regards to broader markets yet.
Yeah, you're right, Hero. But if you look at the intraday movement, there has been recovery in the mid-cap 150 and small-cap 100 indices as well. If we can pull up, yes, there you go, down about 0.2%, mid-cap 150. The small-cap is largely trading 1.5% down. So that's huge for small-caps as well. Let's also look at the kind of names which are pulling the index upwards. In terms of mid-cap 150, we have the likes of Tata Communications, which is up about 8% after ICICI Securities came out with a note on the stock. Tube Investments, Paytm, all doing well in trade in such a market actually. But the ones which are not doing well is Bandhan Bank, BSE. BSE has been the one which is drilling down since last couple of sessions on the back of all SEBI taking actions on volume trading data, etc. But also let's look at the small cap constituents, small cap 100. If you can have a look at the constituents, we'll see Triveni Turbine, Alok Industries, Swan Energy, Zensar. All these are down about 4 to 5% in trade. And the ones which are pulling up the index are Graphite, MRPL, up about 5%, 3% in the trade. So maybe stock specific strategy is what people are focusing here right now, Hiral. But if you talk to me about the broader market, still I think they are yet to come back to the levels at which they were.
Absolutely. So these are going to be interesting ones. In fact, you have a lot of brokerages which have come out with their strategy in terms of India. If you talk about Jefferies and Morgan Stanley, let's understand what Jefferies has today. The key point over here being is Jefferies saying that the Indian stocks are looking attractive at this given point in time, and it's a stock pickers market that is unfolding from here on. Probably a likely positive shift in fundamentals is something which is not in the price yet. They're expecting India to recover the lost ground versus the peers, and this will happen through 2025. Q4 may produce upside surprises in terms of earnings, so that could be a key positive because Q3 has been a downer. And it's the financials that have outperformed. Valuations are looking attractive across the market cohort. So that's with regards to Morgan Stanley. Apart from that, you have a Jefferies as well, where they are saying that India is poised for a near-term bounce. They do prefer banks, NBFCs, auto, power to play the same. Overall, they've trimmed their pharma weight on the potential US tariff concern. And this is also as premium valuations are sticking out given the weakness in the dollar index and US, they bring IT to an underweight. Moving from there on, if you see in terms of what Lawrence Blanco had to say, that's the CLSA price action. What he's saying is that the index is showing some bit of downside momentum and suggesting that the downside or downtrend of December highs is mature and vulnerable to a reversal. This combination of slowing downside momentum and support has actually gone ahead and provided platform for rebound rally, which sees a support coming in at 23,263 to 23,460. That's the zone that they're picking up, and resistance at around 24,031 and 24,795 and 24,857. So that's the resistance band that Lawrence Balanco is picking up from CLSA as well. So clearly, good moves coming in terms of the analysis and what could be expected from India from here on. But also let me welcome in Raghvendra Kedia, founder at Prosperity Advisors, before we go ahead and listen out at what Manishi and Harsha Upadhyay had to say. Raghvendra, good afternoon and welcome to the show. With all that's happening across the market, clearly, the moment you see an upside, there is sell-on rally. That's the action that we are seeing so far. What is the sense that you're picking up? Because valuations are seeming to be pretty reasonable now. There is attractiveness in the market, but that uncertainty is something which is keeping the investors away. What would you advise and what is your view?
Good afternoon, Hiral. Broadly, we believe that market would continue in a range-bound manner and a seesaw movement in the overall Nifty index would continue. This said, this could happen with a negative bias. So we are of the bearish camp where we believe that the downward momentum is slightly heavier than any kind of attempt for a recovery. So it's a sell on rise market. And if you see levels of around 22,700, 22,800 on the Nifty, where there is some exits could be done. There is some comfort in terms of valuations specific to pockets of large cap. But even if you look at beyond large caps to mid caps and small cap, even on the valuation front, in spite of a 40% broader correction in that small and mid cap space, we still believe the valuations have some kind of room for a further correction. So avoid any small cap, mid cap fresh entries. And our comfort lies in financials, banking sector, with private banks being outperforming the overall broader market. And we believe large cap could be areas where you can still put some fresh money as the valuation have come to a comfort. But broadly, market could continue with a range-bound negative bias move.
Okay, well, thanks for that. But moving on, while speaking to NDTV Profit, ace investor Manishi Rai Chaudhary says that the Indian markets are looking attractive with a 15 to 16% correction. Listening to the slice of the conversation.
India incrementally is actually looking interesting after this 15 to 16% correction that it has suffered. Particularly in case of large caps, a few sectors, let's say financials, the frontline banks, I would say, some of the industrial names, they've actually corrected to such an extent that, some incremental inflow could come back there. But it still remains a very careful stock selection market. One can't really paint it with a broad brush at this stage.
Well, another word coming in, markets may see bottom soon, is the word that comes in from Harsha Upadhyay of Kotak Mahindra AMC. Well, you also added that given current scenario, the markets may not see a strong comeback as yet. Listen into the slice of this conversation as well.
In the very short term, the markets seem to be oversold. So to that extent, we may find a short-term bottom. However, the external environment is very, very volatile. There are a lot of unpredictable things that are happening around the globe. So to that extent, we may not have seen the end of volatility, I would say. And at the same time, we have been seeing deceleration in terms of the earnings trajectory for Indian corporates. So there are many factors that are impacting markets today. So unless all of them kind of turn around, or you reach a situation where valuations completely discount all of those negatives, very unlikely that you will see a very, very sharp pullback in the market.
Right, so that's with regards to commentary coming in from market experts as to what they are expecting. But let's move on to the big story of the day. IndusInd Bank has found accounting discrepancies in its derivative portfolio. Now, this amounts to almost 2.35% of the bank's net worth. If you see the stock seeing cuts of nearly over 25% as we speak at the day's lowest levels. My colleague Vishwanath Nair joins us to tell us more about what has happened, why it has happened, and how does it impact. Vishi, over to you.
What sources are telling NDTV Profit is that, well, IndusInd Bank is a large private bank, and as part of its normal course of business, it conducts large treasury operations on its book. Now, according to Q3 disclosures by the bank, the cumulative notional value of derivative contracts, foreign exchange contracts, and well as options adds up to about 15 lakh crore. Now, remember that this is only a notional value. The risk-weighted assets against this notional value is only about 17,000 odd crore. Essentially, what the bank has said is that the size of the discrepancy that was found and the size of the trading book that it holds is not comparable at all, and the discrepancies are actually very, very small. And this is probably why the bank was not able to detect these discrepancies sooner than it did in October of 2024. And now that it has found these discrepancies, what the bank is actually doing is that it has already informed the RBI about the discrepancy. B, it had undertaken an internal review which concluded recently, and that is why the bank is able to tell you what the financial impact is. And the third part of this transaction, the third part of the moves that the bank has done is that it has appointed an external agency to validate its own internal findings. The external agency, which is PwC, that is what sources are telling NDTV Profit, PwC will submit its report on its findings by the end of this month, and then the bank can come out with further details if necessary. The bank is widely expecting that the impact of this entire transaction, that it is estimating about 2,000 crore, that is unlikely to change by a lot, maybe marginally here and there. That is roughly around 2,000 crore worth of an impact is what the bank is expecting. Because of this, Q4 is likely going to be a very bad quarter for IndusInd Bank, and the bank is expected to report a net loss. That is what analysts are estimating at this point in time. Sources are also saying that while the RBI has not given any direct instructions on why exactly they gave Sumant Katpalia only 1 year versus 3 years that was sought by the board, the very decision of altering this extension points to the fact that the RBI is probably not appreciating Sumant Katpalia's leadership at the bank. And now it's up to the board to decide whether they need to look at any external candidates or internal candidates as potential successors for Sumant Katpalia at IndusInd Bank.
Okay, thanks for that, Rishi. But NDTV Profit also spoke to a series of banking analysts regarding the IndusInd Bank fiasco. Now, this includes the likes of Avizar Divanji and Digant Haria and Sriram as well. Listen into the slice of the conversation.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight or is it a conscious management decision not to hedge and make some money out of a dollar position? Is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation, is always going to be a debatable issue, which I don't think will get resolved. Governance is if nobody knows what happened to that exposure, and because of which the bank may end up losing 1,200 crores. That is a governance issue. That somebody just did not know what was happening. The other issue is a regulation lapse to say that I knew a regulation existed. I knew that there was a position in the bank, and that position was consciously held because I thought the dollar would move the other way. Basically. So that's how I would differentiate between the two. What is right and what is wrong are again two different issues. But what I would very consciously want to say is that either which way it's a regulation lapse for sure. The governance lapse, I think, is a slightly bigger issue. that if one does not know what is happening in the bank, and that can be linked to the fact that, oh, does a CEO get a 1-year term or a 3-year term? So I'm just trying to, kind of combine both these things and say that, yes, banks which are currently trying to deal with profitability, some of them may have taken those decisions within their ambit. Some of them may have been, taken to say that this is a currency position I wish to take over a period of time. And there's an RBI circular which is ultra conservative in a sense that it requires every position to be hedged. And it basically tells the bank not to take any foreign exchange exposures, which may or may not be a correct regulation, but at the end of the day, it's a regulation. The problem is the differentiation we need to make is whether it is a lapse, as in a management lapse, oh, I did not know the circular, or I knew the circular, but I wanted to take a conscious move.
As of now, it doesn't seem to be. As Digant said, it seems to be something where risk management is gone. The control systems in the bank don't seem to be tight enough. Governance is something where the management knowingly is hiding things. That doesn't seem to be the case. The moment they seem to have recognized it or found it out, they seem to have highlighted it to the board and then come forward and disclosed it to the markets. So I hope it's not a governance issue. I mean, we've at all, at least from the news that is out there, from what the bank has put out, it's not. It seems to be just a trade that's gone wrong, not a governance issue. More of risk management, more of bad trades, etc.
Very difficult to agree that it's a small issue. NNC, it's a 7-year pattern. Like in 2018 they started with problems in their wholesale portfolio, then problems came in their deposit, then problems came in their microfinance franchise, then personal loans, then the MD CEO RBI, now this treasury losses. So it's all just pointing to one thing, that it's a bank which is not very, very tightly run. And bank is a complex business. If you don't have very, very tight systems and controls, such things keep happening. Now 7 years, 7 different events, so there's hardly a reason to believe that this is a one-off and it will just not matter. I think this is where investors lose trust, and one-time price to book always tells you that okay, we do not trust you enough. So the stock has gone below that one-time price to book mark as well.
Well, Raghavendra, that's what we had from the experts that we spoke to. But coming to your opinion, for sure, this is not an easy call for you to make. So therefore, I will not ask you whether this is a good time to get in or not. But my crucial question to you will be around the banking system regulations. Suddenly such event happens and the stock is down about 25% in a day, and actually even more. So what are your thoughts on the kind of system regulation that is going on in the banking space? And do you think that the overall market will now still take more time to gain investors' confidence back and give at least decent amount of returns this calendar year?
Well, good afternoon, Rucha. Broadly, this seems to be a very one-off case specific to a particular bank which has been there since more than 2 decades. So it's not a new bank or a small bank. And this would actually bring more confidence in the overall global investment and domestic investor fraternity into RBI's strict compliance, into India's strict regulations, which has a great oversight in terms of regulations, in terms of compliance and the high financial hygiene they would expect any small, mid or large cap banks and NBFCs to maintain. So broadly, I would come out with this as where such events, if are there, are penalized heavily by the regulators and also by the secondary market. So IndusInd Bank, being a large cap bank which has been there for many decades, could have avoided it. The bigger concern to us would be that if it's just a regulatory issue or a governance issue, and if it is a combination of both, where there has been significant MTM losses and there is some intent where these were kind of known or governance issues related to that, then even at the price to book value, it is still an avoid. We usually have an approach where we avoid catching a falling knife, and we would continue this way. It's a wait and watch overall right now with this instance, but broadly, this overall, the sector would come out as a more cleaner, add some confidence into the investor fraternity in a longer term horizon.
For IndusInd is what I understood, but can you just come back on the kind of sectoral level impact that you just mentioned? My point is about the investors' confidence on the banking fraternity as a whole.
Well, Rucha, this where details are yet to be come out in terms of its derivative reporting error, an MTM mark-to-market error, or was it an accounting lapse in terms of the bank's reporting systems. So broadly, we would know that there was an inquiry which was already going on in progress, details of which have partially come out, and there has been a significant penalization on the stock price to the stock. So we believe that as details would follow, it would emerge as more clarity. RBI would also take it as a point in case other banks, without having any notices or compliance issues, would actually pull up their socks and avoid such issues in a mid to longer term horizon and maintain a very strict, cleaner financial hygiene in terms of their derivative P&L books reporting, in terms of their global exposures, in terms of their dollar rupee book reporting. So broadly, we believe that such instances, when they get exposed or come to light, it is a message, positive indication to all other banks, especially globally, to pull up their socks and get their house in order.
Absolutely, Raghvendra. I mean, these are some things where you will need further details to come in. But let's also look at what brokerages make out of it. Mika, over to you. What are brokerages making out of what's happened with an IndusInd Bank?
Well, it's a negative stance across the board. You've seen multiple brokerages downgrade their ratings. Something like a Kotak, previous buy rating to a reduced rating. Prabhudas Lilladher has downgraded the stock from a buy to a hold. Novama from a hold to a reduce. And MOSL from a buy to a neutral. Other brokerages like ICICI Securities, DAM Capitals, Elara, Aquarius and Anand Rathi all have downgraded the stock as well. We've also seen some steep target price cuts in the range of 23 to 39%. The lowest target price was set by Novama at 750 rupees, followed by a Kotak at 850. But the stock, at least right now, is much lower than any of the target prices that were reduced. Now, in terms of what brokerages are saying, well, Citi has cut its earning estimates for the company as well by 25%. The derivative position discrepancy could knock out the earnings as well as net worth for the company. And the recent developments have raised the risk perception, is what Citi is saying. Macquarie has stated that the current issues have raised questions on internal processes, robustness of bank internal process as well as compliance. And Morgan Stanley says that the visibility on the stock continues to reduce. They see downside risk to the numbers post the company's disclosure and await further clarity about the discrepancies.
Right. Thanks, Mika, for getting us the details. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
Welcome back. You're watching Profit Buzzers. Now, what's interesting today is what we're doing with real estate as a sector. Instead of it being the top losing sector of 2025, there is good recovery that's coming in today's session. But let's understand what has dragged the real estate sector so far. Anushi is joining us with the details in terms of the past performance, as well as what are the factors that are impacting the sector and what one should be watching out for going ahead. Anushi, over to you.
One sector which is in focus this year is Nifty Realty, and now if you look at the year-to-date performance, it's been on the weaker side. The index has seen about a 23% of a drop so far this year. In fact, if we compare the last 14 years also, it has been in its worst performing start to the year in the last 14 years. Let's just see some of the declines that we've seen over the course of years. So 2025, we are seeing at a 23% of a decline, 22, 2020, but some of the other years we've seen about a 14 to 13% of a decline. But the double digit in the 20s that we are seeing is something that we'd last seen in 2011. So it's a steep decline that we are seeing in Nifty Realty, and this is after a year in 2024 we had seen a very strong start for the Nifty Realty. In fact, it had gone upwards in some majority of the stocks had clocked in more than 90% of returns. But so far there has been correction, and let me point out some of the stocks which are there. Prestige Estate is the top one over here with a 32% of a dip in its stock price of, if you take the year to date in consideration. Along with that, we have something like Godrej Properties, Ajmera Realty also seeing about a 28 to 29% of a cut in their stock prices. launches. Prestige Estate is also on account of their guidance which they have given, which the analyst and the expectation is that there would be a miss on this guidance if they do not accelerate their pace of launches in the fourth quarter. But we'll discuss more about that. Let's see how the real estate sector has performed and what are some of the key concerns which are there. Suntech, Brigade, Signature Global are some of the other factors as well. Firstly is lack of approvals. Now in the second quarter, third quarter, what we've seen is a slowdown in terms of approvals from the RERA side, which has resulted in a slower pace of launches. And even though the sustenance sales is there, but the newer launches have been affected. So far, we've seen a 49% dip in the third quarter. So this slower absorption would also lead to higher supply going forward. So even if the demand-supply dynamics continue to be on a healthier side, it would pose risk onto the acceleration of launches and thus affect the FY25 guidance given by majority of the companies given the kind of launches that are expected over the course of year. Let's just see the overall picture in terms of where the companies are faring in terms of their FY25 guidance. So if you can pull that table out, we can see that Prestige Estates, which has accomplished about 42%, 33.6% of their guidance in the 9-month FY25 picture. So more than 60% or rather 67% is something that they have to achieve in the fourth quarter itself. For AB Realty and Prestige is the number that we are looking at. If you look at something like Sobha and Ajmera also, Sobha has seen about a 52% of its guidance achieved. So fourth quarter is something that some of these companies have to accelerate their launches to maintain their FY25 sales guidance, because if they miss their sales guidance, if we take that into consideration and the valuations in consideration, then there would be further downgrades that we can expect in the some of these counters that are there. But also let's pull out some of the positive factors. What are the positives on the realty that we continue to see? So balance sheet debt reduction is something that the companies have maintained. They're seeing a rise in their debt reduction. They're seeing a rise in the overall fundraisers also and the internal sources also. So that is one healthy indicator. Also higher business development with the kind of QIPs that the companies are making. So that also remains on the healthier side. So overall, this is the picture that we are building up for the real estate space. What are some of the key concerns that are seeing, and how the index is down about 23% year to date, making it one of the top sectoral losers of the year.
Thank you, Anushi, for getting us the details, and that actually is a reality check for the sector and with what's happening across. But let me also welcome in Sarvendra Srivastav, market strategist, along with Raghvendra. Sarvendra, let me come to you. In terms of charts, you have seen pressure with regards to real estate. Fundamentals, a lot of things moving around. Any topics taking into consideration the kind of downtick that's already happened, or are you seeing further pressure?
Very good afternoon. I think it's aptly, as we were discussing, it's an apt reality check for the market and also a reality check for the index, reality index itself. I think, when you start something in an even year, which we were discussing last show also, that usually there are deeper corrections on the index. Once you start it on the fourth quarter in an even year, on an average 25 to 30% is what Nifty corrects, and this has happened almost 14-15 times on an average earlier. So it's not that it's a very rare phenomenon. It's a regularly 2-4 year repeating phenomenon where the indices correct 25-30%. But this being a high beta, it's already done 25%, where Nifty possibly is still like a 15% correction still. So I think there's more headroom in the Nifty as well. And since being the Nifty reality being an high beta, I think there's headroom on the downside there itself. So I think that the Nifty reality index itself, I think the key numbers to watch out, and my targets would be in the region of around 680, 690. So at around 800, 810 right now, I think still I see another 10 to 15% downside of the Nifty real estate index. Stocks can remain slightly high beta or slightly low beta in the index. So that will depend stock to stock. But broadly, you can say that another 10-15% on the sector is still pending on the downside.
Right. So that's a technical perspective coming in there. Raghvendra, how are you looking at real estate as a whole? Because mid-size, affordable is a downer. Luxury, though, is doing absolutely strong. How would you look at it, and any topics coming in your way?
So broadly, we would continue to avoid realty sector overall. The valuations are still expensive, and unless they correct in terms of a price correction from 15%, especially the companies which have traded at a premium like a Godrej Industries, Oberoi Realty or Lodha Developers, which have a sizable good governance goodwill in terms of them, but still there is a valuation discomfort, and we believe that there could be a 15 to 20% price correction where we would reevaluate the companies. But the debt levels seem to be above a debt to equity level of above 1.5 is discomforting. And broadly, if you want to play this sector overall, we would actually play this realty sector through housing finance companies, where we would actually go overweight on the financials and housing finance company, but continue to avoid realty purely based on valuation discomfort and high debt to equity ratios, even at current levels, in spite of the steep corrections they have seen in the last 6 months.
But can you tell us the reason for that? Because as we can see on the stock and on the sector as well, this has given mixed cues. Last year was good, but doesn't seem to be giving that kind of returns expected in such an overall market.
So broadly, Rucha, if you see the sales actually hit bottom in terms of 2020 post-COVID, and there was a significant uptick in premium and luxury apartments in size of about 4 crore per apartment or per condo sale. Now, we believe that this was high margin business where most of the companies which did ride on this bullish move were Godrej Properties, Oberoi Realty, Prestige in Bangalore, and pockets of companies across DLF in terms of the North India. But we believe that this particular sector will see a dent in the sales, which actually is seen in the 9 months of sales reporting, where they are very significantly short of target. So the high margin business of apartments above 4 crore ticket value across metropolitan cities or the 4 metros, Bombay, Delhi, Madras, Calcutta, specifically where most of the listed realty players come from in terms of their sales and geographical presence. This particular pockets of larger cities will see a sales slowdown as being indicated in the 9-month sales. And this could be the reason where there could be a pressure in terms of revenue growth, could be a pressure in terms of margin, and there could be significant pressure in terms of the interest rates going up. So broadly, on declining sales, margins coming down, we would avoid this sector on a valuation discomfort and a very mediocre sales outlook.
Okay, well, let's focus on the auto sector. Bajaj Auto is another one on the radar. This one is set to launch the Bajaj Gogo, and this will be the umbrella brand for electric autos. Let's have Puneet, who tracks this sector closely, to tell us more about that.
Well, thanks for that. So it's a big launch coming in from Bajaj Auto. They had mentioned that this will be coming in the 4th quarter of FY25, and now that has come in. It's also a rejig of its electric 3-wheeler portfolio. Now all future launches will come under the Gogo brand. Earlier this was under the Bajaj RE brand, which was, you know, the ICE as well as the diesel as well as the CNG, which you see the 3-wheelers on the road, the black and the yellow colored. Now it's making a transition to an electric wheeler through a new specific brand, which is the Gogo brand. Currently, it has mentioned that it's offering a highest range of about 251 kilometers, and prices for the two variants are roughly about 3.26 lakh and 3.83 lakh specifically. They have mentioned that it will have a battery capacity of 9 as well as 12 kilowatt hours separately. And this is interesting because this comes under the e-auto segment. So specifically, they had the Bajaj RE Tech, which is the electric 3-wheeler auto. Now that will be specifically coming under the Gogo brand with some more features and a higher range. But going forward, the company is also expected to launch the e-rickshaw segment, which has storage capacities as well, and is a big segment in the north as well as the northeastern markets as well. Currently, when you look at the last quarter, Q3 of FY25, company sold about 17,000 of the e-auto segment under the Bajaj RE brand. Their market share has subsequently grown to 35% at the end of Q3 from roughly about 13% in the same time last year as well. They mentioned that they will be expanding the electric 3-wheeler portfolio, and an e-rickshaw segment could also launch very soon in this particular quarter itself. That's something to watch out for. Apart from that, they mentioned that the L5 industry, which has higher storage capacity along with being a goods as well as a carrier for people as well, that can grow to roughly 4 to 6% levels in this particular year. Finally, just looking at the market size, the electric three-wheeler space has grown by roughly about 127% over the last 5 years. This does contribute around 17,000 units per month on an average for Bajaj Auto, and the electric three-wheeler segment essentially has grown at 30% CAGR. Finally, what the management had said at the end of the Q3 earnings, they mentioned that they're expecting a 13% CAGR in terms of exports for three-wheelers, and that's again a big market, especially the likes of in Egypt, where the electric three-wheelers are banned. So they've moved to the quadricycle, which Bajaj offers with the Qute brand. That's QUTE specifically. They also mentioned that LATAM as well as ASEAN markets will be something new to watch out for. So it's roughly about 45 to 47,000 units. That's something. That's how big the market is, and I think that's what Bajaj is looking to enter.
Absolutely, a strong market for a Bajaj. But Puneet, you're looking at Escorts Kubota as well. They are expecting the Indian tractor volumes to grow at 6 to 7% in FY26. What are you picking up on that front from the conference call that happened with Kubota Japan?
Well, definitely, these are some key comments coming in from Kubota Japan, as well as CLS has also written on the same today. Now, as you rightly mentioned, 6 to 7% growth is what Escorts is expecting. It's what Kubota is expecting from Escorts in India specifically. They mentioned that, some of the other key takeaways that, they're expecting market share to gain from a new launch of the Farm Track brand specifically, which has been launched in December of 2024 and will subsequently be scaled up in the next few months. Currently, Escort has a market share loss of about 1.5 percentage points to come in at 11.5%. They're expecting it to gain that much and go to 13% in the medium term specifically. And it's more to know that, this other listed peer, Mahindra, has been doing phenomenally well in the Western market, somewhere where Escorts is looking to enter and is currently weak. So it's been a year where, the stock price performance hasn't done well because of the sales as well. It's been a low sales growth for the first 11 months of FY25. They also mentioned they're planning new product launches in FY26 and expecting the Farm Track brand, which was delayed by about 9 months, that caused the market share to lose. With this new brand, they're looking to plug those gaps. They're also looking to have a new greenfield capacity going forward, which will localize content as well as help with margins. And finally, on their expectation from this year, they're expecting a 6 to 7% in FY26. That's higher than this particular year, and expecting the growth rate of tractors in this quarter, which is Q4 FY25, to be 14 and 15% specifically, something that Mahindra had also spoken about. CLSA maintains a target price of over 3,805, a subsequent upside from the current levels as well.
Very detailed analysis over there, Puneet. Thank you so much. But let's get an expert opinion. Raghavendra, on the fundamental side, this one from an 11,000 levels is now at 7,400 levels. What is your fundamental take on Bajaj Auto?
Bajaj Auto has significantly corrected, and this largely price dip was driven by the overall market negativity. But we believe at levels of 7,400, it is very attractively priced. This new launch in terms of electric vehicle would be a catalyst, a positive catalyst in the quarters ahead. The very formidable market share of 33%, or broadly 1 out of every 3 vehicles sold in that particular EV category would be a Bajaj Auto, gives us significant comfort. A pan-India presence, a very good after-sale service, a goodwill of more than 3 decades, and a narrative where there could be some import duty hike in imports coming from China or other countries in terms of getting a competition breather to Bajaj Auto. We believe that this new launch and overall price correction makes it a very attractive stock for a 6-month to 12-month trading as well as investment horizon for a double-digit returns at levels of 7,400. So we are bullish on the broader auto industry. We are more bullish on two-wheeler space, and Bajaj Auto would be our one of the preferred picks in this particular overall auto and two-wheeler space.
Return in 3 months for Bajaj Auto is what the fundamentals are looking like. So very strong opinion over there. But what are technicals looking like, Sarvendra? If you can give us an idea about the kind of entry point for Bajaj Auto.
See, numbers can slightly vary for both of us. I think that the short-term picture, the short to medium-term setups would be bullish risk reward around that 71, 7,200 mark. So maybe another 100, 200 points is what more I'm expecting on the downside. So I think the psychological 7,000 mark is the key now. That we need to hold in any case over the next 3-6 months. We have to hold that number if the medium to longer term setups have to improve. So I said with a review at 7,000, I think 7,100 to 7,200 would be my range for trying to start accumulating Bajaj Auto. But anybody doing, since being a technical analyst, I have to also give you the review point. Below 7,000, you will have to exit that trade, if at all, if that happens. I'm not saying it is going to happen, but if at all, you have to keep a stop loss below 7,000. Also, if you're going long 72, 7,100.
Right, so that's with regards to where the auto space goes. But moving on, another stock that's buzzing in trade today is HEG, and automatically when a HEG buzzes in trade, you see a counter ripple effect on a Graphite India as well, and vice versa. If you pull out a Graphite India on the screen, so there's no news in terms of Graphite India, but there you go, 4 to 5% is the kind of up move that we're seeing in today's session. Mika joins us to tell us more as to what are the trigger points with regards to where HEG surge goes. Mika, over to you.
Yeah, so HEG and intraday high of 7.6%, multiple triggers for this counter. The first one is an investment approval. So the company's board has approved a 250 crore investment in Bhilwara Energy. This investment will come from Singularity Growth Opportunities, which is backed by Adhisudan Kela. Now, the details of the investments, well, Bhilwara Energy will issue 1.76 crore equity shares at a face value of ₹10, and Singularity will hold 9.6% of the paid up share capital post the issue, and HEG will own 44.3% stake post the transaction, and Singularity will have the right to nominate one director in the company's board. It also has the option to invest another 250 crores post the completion of the first transaction, but this should not be done for a share price lower than 142.08 rupees. The second trigger is tweaks to the demerger plan. The board has approved to draft a scheme of arrangement between HEG Graphite and Bhilwara Energy. Now the proposal aims to demerge HEG's graphite business into HEG Graphite and the amalgamation of Bhilwara into HEG. Multiple benefits from this tweak scheme. One is to unlock value for shareholders of each of the businesses, to also allow better flexibility in terms of accessing capital, because it will attract different set of investors, lenders, etc. The restructuring will also help enable a focused growth strategy and provide better visibility on the performance to investors and enhance the operational efficiency, as it will de-risk the businesses from each other. Lastly, when you talk about the future outlook, well, in the Q3 con call, HEG's management did remain an optimistic view in terms of their medium to long-term outlook. They also expect demand recovery in the second half of 2025, subsequently where prices which are currently under pressure are expected to improve, and they're also well positioned to capitalize on the increased export demand that they are exporting 2/3 of the volumes to.
Right. Thank you, Mika, for getting us the details. Raghvendra, how are you looking at a HEG and Graphite India? Because these are very cyclicals and the cycle is, just unpredictable.
Well, we believe that it has taken a slight U-turn and the downfall has stopped, and there is some green shots in terms of recovery, in terms of price, and so there is some positivity at levels of 400, 410. We are bullish at current levels in terms of the valuation comfort. We believe a major stimulus in China would keep coming on from time to time, from quarter to quarter. That would keep the entire metal pack in terms of positive bias, and HEG or Graphite India would be beneficiaries of that positivity across metal and related sectors. So at levels of 400, we believe HEG is attractive in terms of this current event, in terms of that investment platform they have launched, as well as the demerger is in terms of the sum of the parts, SOTP valuations, value unlocking as a special situation. So we believe that with these two positive catalysts in terms of this investment platform, demerger plans, and overall global macro, specifically from China stimulus, HEG could be a positive bias, double-digit returns again for an investment horizon of 12 months or so, for a target of around 500 from current levels of 410.
Okay, well, let's move our focus to the pharma sector. The pharma major Sun Pharma has been buzzing in trade after ICICI Securities has upgraded the stock with a target price of 1895. The stock is up about 3% in today's trade, and Varsha will join in with more details.
Thank you for that. So 18% of upside potential is what we are talking about when it comes to ICICI's target price. Now we all know that Sun Pharma. So the major growth driver for Sun Pharma will be the specialty portfolio that company is being tried to create, and they are on a spree to expand the specialty portfolio. Now the upgrade by ICICI is due to the acquisition of the Checkpoint Therapeutics, which they did yesterday. Now this acquisition expands the company's specialty drug offering and is projected to increase Sun Pharma's future earnings as well. The acquired drug works under Sun Pharma's existing products, and ICICI now sees the Sun Pharma stock price at a good value also. The upcoming GLP-1, that is the obesity and diabetes drug, the launch of this drug is also a positive factor when it comes to company, and the specialty portfolio according to ICICI will likely witness a significant boost when it comes to FY27 and 28. But the key risk includes approval delays, increased R&D and pricing pressure that the company may go through. These are some of the key risks that the ICICI has highlighted.
Okay, well, thanks for that, Varsha, but let's also bring in Sarvendra, the technical expert. How are charts looking like for this company? Because clearly today it is up about 3%, but in last 6 months this has been down about 10%. So what kind of returns are the charts indicating?
I would say that definitely slightly oversold, and being a defensive play, I would not mind taking tactical longs here. So even if the market goes down, I think I see some pockets of strength within the FMCG space and the pharmaceutical space, which have been traditional kind of defensive names. I think Sun Pharma, you should be looking at current levels to get into that trade and look for targets in the region of around 1780, 1800. So purely a 1 to 3 month trade is what I would suggest here. And if you are doing that trade, you should also be having your stops below 1580. So I would say 1 to 3 months, the stance remains slightly bullish here.
Right. So that's with regards to Sun Pharma stock at the day's highest levels. But thank you, Sarvendra, and thank you, Raghvendra, so much for joining us on the show and sharing your views. So that's with regards to where markets go. But moving on, ever since its launch in October last year, we have been actually bringing you updates about Techspedite. That's a startup accelerator program by Games 24/7. The cohort announcement was made in Mumbai, where after taking applications from all across India, 17 startups were selected for the program. These startups were handpicked by a jury of industry stalwarts, peers and experts. The selected startups who are undergoing mentorship sessions and one-on-one connects with leaders are set to gain multiple benefits from this program. Here's a brief report on it.
Techspedite by Games 24/7 recently announced the cohort of startups that are now taking part in the 60-day accelerator program. The program that was open to entries in October 2024 received an overwhelming 330 qualified entries from across 24 states in India. And while 60% of the entries came from Tier 1 cities, the significant representation of Tier 2 and Tier 3 cities was pleasantly surprising. This represents the growing entrepreneurial spirit of digital India. In fact, a better indicator of this is the fact that 58% of the applicants are building AI-focused products and solutions. 22% entries for gaming and 15% entries by people looking to bring the next revolution in inclusive and assistive technologies. The list of startups that made it to the 2024 cohort are Arficus, Be Able Health, Cairo Vision, Chitu, Koira, Gabify, Glovertrix, Homeground, Laya Plus, Ample.ai, Noha.ai, Clan, Skitty, Spoda, Tutti Frutti Interactive, Walkbot.ai, Zuron.ai. A VC panel discussion held at the event helped these gain invaluable insights about how VCs select ideas and people that they back, challenges, solutions, and what a fruitful investor-founder relationship looks like. Present startups were also given a chance to present a brief elevator pitch about their product. These 17 startups who made it to the cohort are now being mentored by a renowned panel of mentors who are guiding them through the building stage using their own experience and industry insights. As these startups undergo this journey of growth, we will be keeping a close look at Techspedite, looking forward to the positive impact these people and their ideas will cause in their respective fields.
So that's about Techspedite that we should be watching out for as well. But completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Thank you from Rucha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome to this very special edition and very special show with my colleague Somit of Top Trades. Now specifically we will be looking at global markets which in a state of bother in the wake of recessionary fears in the United States. Now apart from that, let's look at the market first a bit, because we have seen Nifty coming in the green. That's a very big sign, because we did see the market start with about 150 points in the red specifically. Now that has come in the green. Let's also look at the contributors as well. And while it is very well known that it's a day that's dominated with news flow around IndusInd, we are seeing Infosys also dragging the Nifty down today. M&M also being a culprit there, with contributing 10 points negatively for the Nifty as a whole. But ICICI Bank also trying to get the Nifty in the green, and it has done so successfully as well, contributing 50 points to the gain for the Nifty 50. Apart from that, Bharti as well. Let's also look at the mid cap and the small cap indices as well, and see if the recovery that we've seen in the Nifty has been carried forward there as well. Getting there, 0.2% something for mid cap 150, the small cap 250 as well, still down around 1%, and that's been the divergent trend that we've seen between the mid cap indices as well as the small cap as well. And let's finally also look at the Nifty 500 as well, because and see the top contributors. There are a lot of big moves coming into trade today. IndusInd, of course, will be one of the biggest one of the Nifty 500. down about 24.8%. We've seen Triveni Turbine also getting impacted on the negative side as well, being one of the key ones to watch out for. But, Swami, apart from that, it's been a day that has been down across the market.
Well, yes, across the market, we are seeing selling pressure coming in. Specifically, if you look at the US stocks, the market sell-off worsened on Monday after the Trump over the weekend declined to predict whether the US could face recession in an interview with Fox News. Now, Trump's tariffs have increased the uncertainty for businesses, consumers and investors, with back and forth tariff moves against the major trading partners like Canada, Mexico and China. With increasing fears of an economic downturn amongst investors, the S&P 500 on Monday closed down by nearly 8.6% from its February 19th record high, shedding over $4 trillion in market value since then. The S&P 500 fell nearly 2.7%, marking its biggest daily drop of the year. Meanwhile, the Nasdaq Composite slid nearly 4%, recording its largest single-day decline since September 2022. Stocks like Apple, Nvidia both fell about 5%, while Tesla tumbled nearly 15%, shedding about $125 billion in value. Other risk assets like Bitcoin also saw a 5% decline. The yield on 10-year Treasury declined to 4.22% from 4.32% in the previous session. It's been dropping since January, when it was around the 4.8% levels. As worry, and this is because worries about the economy have consistently grown in the market. In the Asian market, if you look at markets under pressure following weak global cues and heightened deflationary pressure affecting China's Hang Seng index, which ended nearly 0.29% lower, while the Nikkei was down nearly 0.64%. Shanghai index was up 0.4%, while Euro Stoxx 50 index was down 1.5% yesterday, with DAX also being down nearly 1.7% in trade.
Well, with that, the Trump trades dissipating very quickly. But what's in store for the emerging markets? We spoke to Sonal Verma, Managing Director and Chief Economist at Nomura, has an answer to that. Listen in.
Well, it's an extremely tough period because if the US does go ahead and implement the various tariffs that it's promising to on 2nd of April, which is something as a house we think is likely to get implemented, then from an economic perspective for the US, we are likely to see weakness in growth. We think it's going to be a year of below trend growth and higher inflation as the tariffs kick in. So that stagflationary kind of a backdrop actually ties the Fed's hands in terms of what they can do. And as you all were discussing, the US administration is also ready to take some short-term pain for what they believe is going to be a medium-term benefit for the US economy. For EMs in that backdrop is essentially, much weaker growth. We think disinflation is likely to still happen because higher tariffs on China does mean the risk of more dumping of those excess products in other countries. But then we also need to basically be ready for more volatility in terms of financial markets, in terms of more capital outflows, currency spillovers, which typically do have feedback loop back into consumers through the wealth effect and businesses because of uncertainty. So essentially, weak growth and more volatility is what it all means.
Well, the Indian IT sector appears to have mirrored the sharp decline in the Nasdaq that we saw yesterday, even emerging as the biggest losing sector in trade today. Let's get in, Rucha, with what has been ailing the Nifty IT index today.
Nifty IT is in focus. It is down about 1.5%, and the top losing stock is Infosys. Now, uncertain macroeconomic environment actually weigh down on client spending, and because of reduced client spending, the top line of most of the IT companies is affected. Now, Infosys has a higher exposure to discretionary demand, and hence, because of more uncertain outlook for client spends, Infosys is looking like it is hit the most. Another factor is that US recession fears. Well, US US tech-heavy index, Nasdaq 100, saw the worst day since 2022, and the index fell about 3.8% overnight. Now, Donald Trump refused to rule out that his tariff could trigger a US recession, and this is why the IT, even in the US and in India, is actually down in the red. Apart from the index level news that we have, we also have Oracle, which came out with its third quarter FY25 numbers. The numbers actually missed their estimates. Revenue was below, and that is why the stock was down about 4% overnight. Now, talking about Infosys specifically, CLSA yesterday came out with a note wherein they had upgraded the stock from hold to outperform, but still maintained the target at 1978. Now, this is because of the sharp stock price correction that Infosys had faced in the recent months, and therefore they do not see any material change in outlook for Infosys. But yes, in case the discretionary demand revives, Infosys will be the most benefited one because it has a higher exposure than the others to the discretionary demand. So overall, US recession fears, bad numbers for Oracle are actually losing out on the IT stocks even in the US and in the Indian markets.
Well, thanks for that, Rucha. But while speaking to NDTV Profit, ace investor Manishi Raichaudhary offered his take on how to approach the markets, especially as stocks continue to correct. Listen into a bite of their conversation.
Gold has been a favorite for a while now, and you've seen how, gold prices have behaved. But I would think in the current uncertain period, that would gold and silver, possibly that would should still be one of investor favorites. We're also seeing currency-related, turmoil, currency-related concerns, and in times like these, those hard assets they tend to do better. They're also seeing significant interest from governments with various central banks in terms of purchasing bullion. Second, I would think that in times like these, cash is king. Money market funds, some of them have decent yields, maybe 4 to 5%, or maybe even higher in some cases. I would also talk about dividend yields. Dividend yields are difficult to come by in India, but there are lots of options and very good options in East Asia. Where I sit right here, there are state-owned enterprises, the SOE banks, some of the oil companies in China, which are yielding in the range of 6 to 9%. So there are options, no doubt, for capital preservation, which I think would be the supreme interest in the kind of situation that we are living in.
Very interesting. Manishi Raichaudhary is saying that gold is looking, good right now. Gold is the exciting bit. From just on the tariffs perspective, and this is crystal ball gazing, knowing that things are changing every 24 hours. But if the Trump tariffs do come to pass, we see a full-blown trade war. What does this mean for the way the Indian economy is structured and the impact for us?
You see, I think as far as the Indian economy is concerned, the negative impact would be more on sentiment than on actual fundamentals. So there is a lot of research on this. Possibly the most prominent is by the Yale, budget lab, as they call it. And so they have talked about the potential increase in tariffs if the reciprocal tariffs come into implementation. And by their calculation, average Indian tariffs would increase by about 16%, which is one of the highest. So for China, that's slated to increase by about 13%. But Chinese tariffs have already increased by 20%. So in case of China, the worst may be behind us. So if the average Indian tariff for exports to the US increase by about 16%, that's a pretty strong outcome. But at the same time, if I look at India's total exports to the United States, that is hardly about 2 to 2.5% of the economy. So I think rather than the depressing impact on the economy, it would be more of a depressing impact on the sentiment. both sentiment as far as the financial markets are concerned and sentiment as far as corporate investment behavior is concerned. And that is what we have to contend with.
Well, with Trump's tariff misbalancing the global markets, we spoke to Vishal Manchanda, the Senior VP Institutional Research at Systematic Shares and Stocks, to know his top pharma picks and the rationale behind them. Let's listen into that bite.
I think in the space, our bias is to be kind of more aligned with the companies that have less US exposure. So among the large companies that have relatively less US exposure are Sun Pharma, Cipla. So these are two players with relatively lower US exposure. Their exposure to the US is around 30 to 33% of the sales. While if we look at Lupin, Zydus or Dr. Reddy's, their exposure is between 40 to 50% of sales. So the reason to kind of prefer companies having higher presence outside the US is because US as a market is not growing. The demand is saturated. You don't have generic penetration is already at 90%. There is no volume growth happening in the market. If at all, it's only low single digit volume growth that we are witnessing in the market.
Well, speaking of pharma, Laurus Labs is buzzing in trade today as the export data trends show that the company is heading to a blockbuster fourth quarter. My colleague Varsha has the key details of it. Varsha.
Yeah, thanks for that. So yes, if you see, as per export data, Laurus Lab had booked almost $98 million worth of exports. Now this is in the first 2 months of the quarter, significantly exceeding their average number, that is $75 million for the last 3 quarters, and this suggests a strong increase in the export activity. As per the past trends, if you see, third month of the quarter is the strongest one for the pharma companies, including Laurus Lab, and this suggests that Laurus is well set to have a good Q4 FY25 as per the management commentary, or in line with the management commentary. Now, during Jan-Feb, analysts are estimating that the Laurus has booked at least $35 million of CSM, that is custom synthesis manufacturing revenues, with bulk of sales to Pfizer, and more than 50% of this increase is due to the Revlimid export. Now, Revlimid is the cancer product that every pharmaceutical company is dealing into, which suggests sharp increase in volume realizations for calendar year 25. And if I were to talk about their guidance or outlook about this company, they are anticipating API growth returning next year with positive outlook. FY26 is expected to be a good year on the back of CDMO, which is actually growing for Laurus Lab and for many other companies. And they're expecting the FY25 EBITDA margin of around 20%, which means that Q4 margin have to be blockbuster for Laurus Lab.
Right. Amid tariff uncertainties, the government is aiming to fast-track incentives under export promotion mission to support exporters. My colleague Rishabh joins to tell what are his sources gathering. Over to you, Rishabh.
What we've come to learn from sources in the government is that the government is pushing for the implementation of the incentives that it announced in the budget within a month. This comes as the US tariff imposition becomes more and more volatile as the April 2 deadline approaches very, very fast. We're seeing that the government had already announced these incentives. They wanted to facilitate access to credit. They wanted to support MSMEs, especially with respect to cross-bordering factoring, as well as support to tackle non-tariff measures. So these are some of the few. Apart from that, there's also the interest equalization scheme that the Commerce Ministry and the Finance Ministry are in talks with to implement very, very soon, especially for MSME exporters. We are seeing, and sources have told us that exporters are holding back a bit due to the uncertainties around the Trump administration and the tariffs that it has been imposing. And exporters don't want to send shipments out and then have duties be imposed on them. So that is a point of an issue. Some impact might also be seen in the February numbers, in the February trade numbers that will come out very soon in the next 4 or 5 days. And barring petroleum as well as gems and jewelry, there will be some impact, though the numbers will hold up is what we're learning. So more to track on this.
Well, thanks for that, Rishabh. But India's trade relationship with the United States have been in focus lately, with India claiming that its trade with the US is different from what is from US's with Mexico or that with Canada as well. Why is that the case? My colleague Pallavi joins in to break it down for us.
Right. So, the US has the highest trade deficit with China, and that's followed by Mexico and Vietnam. So let's take a quick snapshot of what merchandise trade with some of these economies and the US looks like. First up, of course, Mexico, like we spoke about. Imports from Mexico have actually been rising, but at the same time, exports have actually not seen too much of change from the US. And as such, the trade deficit that the US sees with Mexico rose to about $162 billion in 2023. Exports accounted for about 12% of total US exports, and imports from Mexico made up about 13.5% of total US imports. What do these primarily comprise of? Exports were led by industrial supplies and materials, whereas imports were led by auto vehicles, parts, engines, which accounted for almost a third of the US imports from Mexico. Likewise, the deficit with Canada, that is lower. That's at about $40 billion. Exports to Canada accounted for roughly about 15% of all of US's exports, and imports from Canada make up about 12.5% of US imports. What do these comprise of? Both imports as well as exports comprise primarily of industrial supply and material. Now, in case of Trump tariffs that we have seen on Mexico and Canada, these countries are possibly being targeted because they're neighboring countries. Hence, they allow economies like China and other Asian economies as well to route exports through them. That's something we picked up, especially in case of Mexico. Now, coming back to India. Now, while the tariff imposition on India is set to come into impact only in the next fiscal year, possibly from April, India is definitely more reliant on US than the US is. US is India's top export destination and alone accounts for almost 18.5% of India's merchandise exports. That's for FY25 at least, and those figures have more or less been stable for a while. Meanwhile, it accounts for 6.5% of all merchandise imports. Electrical machinery equipment forms the largest export category to the US, and other important categories also include gems and jewelry and pharma. On imports from the US, there's petroleum products, coal and gas, and electronics and machinery along with precious gems and jewelry.
Well, thanks for that, Pallavi. So that was a comprehensive view of what has happened in the global markets, and that was some of the key things to watch out for. But it also turned focus to some of the key stocks that you should watch in trade today. One of them is Bajaj Auto. Now, the company is in focus after it's launched its electric three-wheeler Go-Go specifically. Now, that is going to be the particular brand going forward and become an umbrella brand for all its electric auto three-wheeler specifically. Now, if you look at the earlier launches were under the Bajaj RE brand, which is a similar brand they share with the ICE as well as with the CNG autos specifically. And going forward, it is planning to create a niche within itself under the Bajaj Go-Go brand going forward. Now, they mentioned that it has a highest range of about 251 kilometers. Pricing starts about 3.2 lakhs and for one variant, while the other one is priced at about 3.83 lakhs with two different battery options available of 9 as well as 12 kilowatt hour. Now, there are three key things that come out with this particular launch. Apart from the e-auto segment that is used generally for passenger commute, there is a e-rickshaw segment as well that you should focus on. Now, the company did speak about this at the end of Q3 earnings. They mentioned that while electric autos, they sold roughly about 17,000 in Q3 of FY25, they have increased their market share in the electric auto segment to 35%. From just 13% the same time last year. So the electric auto segment was something that the company had launched products, gained market share as well. But they also mentioned they want to expand the electric three-wheeler portfolio, and that will happen with the electric rickshaw, which is used for both passenger as well as for goods carrying as well. Now it's expected to have this particular launch in this particular quarter itself. So we will be watching out for any launcher aspects and going forward. The other aspect is market size. Now the EV market specifically in the three-wheeler space has grown tremendously over the last 5 years, up about 127%, while the electric three-wheeler segment specifically has grown at 30% CAGR. And finally, what the management is expecting going forward, a 13% volume CAGR specifically in the three-wheeler export market, and this is a big opportunity here. Countries like Egypt have banned the three-wheelers sales in the country, and they will be using the quadricycles going forward, something which Bajaj already has a product under the brand name Qute, which is QUTE. Specifically, they mentioned that the last 2 years has seen a decline of about 29% CAGR in terms of export volumes for three-wheelers. So it will definitely be a big market to watch out for, Somit.
Well, moving on, after Piyush Goyal and PM Modi's visit to the US, trade negotiations are underway for the agreed upon bilateral trade agreement. How are India's export organization viewing this? Let's find out from the Federation of Indian Export Organization President Ashwin Kumar.
You see, like every country, having clarity of bilateral trade, this positive and negative ways. So I think this is a very good initiative by our Prime Minister. He visited on time. They discussed with Donald Trump, and we also appreciate the efforts of our Commerce Minister, Shri Piyush Goyal ji. He has taken this very seriously. But see, when this tariff war starts, that it takes time. I mean, it's too early for anyone to say what is in their mind and what is going on, what will be the outcome. So for anyone to predict this is very difficult, but I'm sure, 100% sure, each country will look for their own profits. Even if they have to lose 2 rupees, they will try to find out gain of 4 rupees.
Right. Sir, you also mentioned that there is a possibility of India gaining from this situation. You said we can quantify it at about $2.5 billion. Can you explain that figure? Where is that coming from?
That figure is not from anywhere, but we expect, this is our expectation that that whatever the tariff war comes, in all the cases, I will say that India will be benefited. See, we will increase our trade. Of course, we will increase. You see, the garment exports, engineering exports, and many other sectors which are already in exports. Even US putting a duty of 5%, 10%. Ultimately, these things, of course, matters to the countries, but.
Well, with that is all the time we have on this edition of Profit Top Trades. Stay tuned for India Market Close coming up next right here on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is
Well, thanks for tuning into India Market Close. It's not as bad a picture as it was looking, the markets currently. So the Nifty 50 in the green, despite IndusInd Bank and the Bank Nifty doing what it is doing, and some of the other private sector banks are doing well. The small caps have shown a recovery. Let's pull the intraday of the small cap index for you, and you will see a splendid recovery from the day's low for the small cap index. From here, I mean, yes, we may not be at the peak currently, but still a reasonably good move, if you will, for the small cap space as well, which is actually a good sign, and 0.73% low currently, which is but not bad at all. The market breadth would be yo-yoing, yes, in the favor of the declines all through and through, but you will see the advanced decline ratio having a fair degree of crisscrosses, like I said, you know, a bit of a closure. Coming close midway through trade, and currently too it's kind of recovering a little bit of layer, but still heavily in favor of the decliners, if you will. And get the heat map up on the screen. I'll talk about the large caps and then go to Hiral for what's happening at the broader end of the spectrum. IndusInd continues to sulk. Some pressure on IT continues, but it's not as bad because we had 5 top losers in IT names after IndusInd in the morning. That has changed a little bit. There is pressure in M&M and a couple of others as well. But there is strength in ICICI Bank. Trent and Sun Pharma have done reasonably okay for themselves as well. BPCL, HDFC Life, Shriram Finance. So a fairly disparate set of players out there in the green, which is actually looking good. Frankly, if you look at this screen, it wouldn't lead you to believe that the market breadth is going to be so terrible. But broader end of the spectrum has its points of pressure and points of pleasure as well. And Hiral, what's standing out at the broader end of the spectrum?
Right. So overall, Neeraj, if you see in terms of broader markets as well, if you just pull up the mid cap and the small cap index, clearly it's pretty much on the flatter end. I mean, no major moves, but it's absolute stock specific action that we have been looking out for. If you just look at the heat map as well, that will tell you in terms of the mid cap 500, which are the stocks which are gaining. But at the forefront of it, if you see in terms of the gainers, you have names like Tata Communication, but that's again on an ISEC report. That stock is seeing gains of around 8 to 9%. Paytm is up in trade. Tube Investment is a strong one. HEG again on the Bhilwara plant investment. That stock is seeing gains of 6.5%. And to that, you have a graphite which is reacting as well. Macrotech and Phoenix Mills. So again, real estate as a pack has seen a good bounce back in today's session. You have IndusInd, which is the top loser, as Neeraj was mentioning, but Zenza Technologies, Sapphire, Bandhan Bank, you have names like Eclax and Triveni Turbine, which are on the losing end. Chennai Petro is another one which is seeing gains of 8.5%. Apart from that, on the losing end, you have names like Dodla Dairy, which is down 7.5%, Nuvama, Bector Foods, as well as Zenza Technologies that are losing. So clearly, what IT is doing in terms of Indian markets, it's clearly mirroring what happened overnight on the NASDAQ as well, and that the pressure has continued. So that's with regards to where overall markets go. But let me also welcome in our guest today. We have Kush Bora, founder at kushbora.com, joining in. Kush, with the way markets have opened and what's happening, we're pretty much flat right now in terms of the broader markets. And if you see in terms of Nifty as well as Bank Nifty as well, it's mainly IndusInd which is contributing the kind of cuts on Bank Nifty. But a flattish move, we're still below the 22,500 mark. Any moves that you're tracking from here on, and what would you recommend to do with Nifty and Bank Nifty?
Sure. First of all, very good afternoon, Hiral. Well, I think the move on Nifty, if we would have seen the GIFT Nifty, before pre-open, and if we would have said that, we'll end flat or perhaps 25, 20 points higher for the day, I'm sure everyone would have taken that, gleefully. So that's where we are. I think it's a very good move on Nifty. Last Thursday, last Friday, we did peak of a 22,500 straddle at play, and the range came to 22,200 on the downside and 22,800 on the upside. So that range is being respected even now. Nifty yesterday tested the 20-day moving average and fell from there. So I think this is still, if you ask me, a healthy sign. This is still a Nifty which is on a fairly strong footing. So as long as this 22,200, 22,300 zone is maintained, I think a long position on the Nifty is not such a bad idea. Now, as far as Bank Nifty goes, so here I've had my doubts, and on the channel as well, I've spoken a couple of times, which is that the outperformance that we saw in Bank Nifty on the way down might not be replicated on the way up, which means, Bank Nifty fell much lesser, but it might not rise as fast or as or more than what Nifty would on the way up. Contributors could be IndusInd Bank, or you take your pick, HDFC or some of the other PSU names. ICICI is an outlier today, but this underperformance on the way up could continue. That is not to say that the Bank Nifty might not rise, but the underperformance on the way up might perhaps be par for the course. Now we've tested and broken the low of 47,800, which we recently made. A closing above that will still hold it in good stead, but I'll be a little skeptical on the Bank Nifty. So a long position on the Nifty fairly warranted. Bank Nifty, you might just want to perhaps wait and watch a little bit.
In light of that, what are the ideas for the afternoon, Kush? Good afternoon.
Hi, Neeraj. Good afternoon. After a brief while, I've gone to a long and a short idea, a combination of a hedge, considering what the markets are doing and what the global setup is like. On the short side, I've got science, as you would expect something from the technology space. And if I can have a quick 10-second view. I did maintain for the last 2.5 weeks that the NASDAQ had actually seen a lot of daily negative divergences, and some more pain was in the offing, and we're seeing that. Now NASDAQ has hit oversold territory. So don't be surprised to see some sort of a rebound on some of the tech names, not out of the wood, but just a dead cat bounce kind of an up move. And hence some of the IT stocks back home also might see some rebound, but nothing structural. So as I said, on the short side, I've got Science today for targets of 1240 and 1225, 1270 being the stop loss. And on the long side, as you would expect, metals, one area which has shown tremendous strength and continues to do so. So JSW Steel continues to impress on the long side. The targets here are 1035 and 1055. Stop loss comes in at 995.
Okay, now you could argue that on the gaining side, it's real estate. On the losing side, it has to be IndusInd Bank, which is the top draw now, down 25% after all that's happened. For people who have just tuned in or are tuning in right now to understand what's gone wrong, well, losses as they have uncovered with regards to some derivative trades lead to a potential hit of nearly 2,000 crores pre-tax for IndusInd Bank in quarter 4. Now you do a back of the envelope calculation based on FY25 or FY24 profits, that's about an 18% hit to an annual profit, but it'll all be taken in a particular quarter, so you'll almost see the profits getting wiped out for IndusInd Bank at the end of quarter 4. But it's raised multiple questions, including the point around why is it that it took so long for the bank to do this or bring out this declaration, because the stock price movement explains that people are not quite happy with all the explanations being handed out on the con call yesterday or by the management today. And part 2 is whether this raises a concern around continuous issues that come in from IndusInd stable for the last 4 or 5 years. There's an MFI issue, key personnel resignation issue, CEO given only a 1-year extension, and then now this coming out. And this is a bit of a de-rating for a stock which is not even expensive, was 0.9 times price to book before yesterday's news around the CEO getting only a 1-year extension came out. And in the last 1 month, or less than a month in fact, the stock has come off 35% from a high of 1046 to 680 currently. Kush, pointless to talk about supports, but I'm still wanting to know, is it closer to some supports?
Incidentally, on the monthly setup, it's actually broken some of the key support zones as you would expect. 750 thereabouts was actually the low that it had made somewhere in the mid of 2022, and also has been a medium-term support zone for IndusInd Bank. Those are broken, and as we are seeing on the back of very strong volume. So I don't think, as you rightly said, support would really hold, at the moment. I think the next key levels to watch for on the downside are perhaps 590, and if that's broken, perhaps some low, COVID lows as well. But then let's not get there, because the stock's now oversold on the daily and the weekly chart. So some dead cat bounce might come about, but then it'll be a prudent idea to stay away.
Well, we spoke to a clutch of experts, banking experts and analysts regarding IndusInd Bank's fiasco. Abhijay Divanji, Digantharia, for example, and here's what they had to say.
There is a regulation lapse for sure. I'm not sure it's a governance lapse, but it's certainly a regulation lapse, because as Vishy just explained, when the RBI circular came in, RBI basically said you cannot hold open positions in foreign currency assets that you take, and you have to hedge them. And rightly so, if you hedge them, you would not have an issue. Now look at the IndusInd problem. Either is it an oversight, or is it a conscious management decision not to hedge and make some money out of a dollar position, is the question that I guess the bank's management would have taken a decision in contravention to the regulation. So leave the regulation out for 2 minutes. The bank would have expected that if I have a position, and assuming this is all known and this is not something that was inadvertent, the bank would have said, yes, I'm holding a position and trying to unwind it. And of course, the 2023 circular kind of was not followed, would have been. In return to that, what happened is that we had a massive tumble of the dollar in the last 1 year. And that clearly has impacted or triggered the mark-to-market situation. And so it's a bet which has gone wrong if you leave the regulation aside. Now coming to the regulation lapse, whether it is a error on the part of the bank's management and the external agency will decide who the error was on, or whether it is a conscious open position taken by the bank in contravention of the 2003 regulation is always going to be a debatable issue, which I don't think will get resolved.
As of now, it doesn't seem to be. As Digant said, it seems to be something where risk management is gone. The control systems in the bank don't seem to be tight enough. Governance is something where the management knowingly is hiding things. That doesn't seem to be the case. The moment they seem to have recognized it or found it out, they seem to have highlighted it to the board and then come forward and disclosed it to the markets. So I hope it's not a governance issue. I mean, we've at all, at least from the news that is out there, from what the bank has put out, it's not. It seems to be just a trade that's gone wrong, not a governance issue. More of risk management, more of bad trades, etc.
Okay, now that's some bad news, but let's talk about something that is actually seen a lot of pain in the last few days, yes, but has done reasonably well, I believe, in today's trade. But since it's been correcting, we've classified it as one of the key sectors that we want to focus on. Let's get in Anushi to try and understand what's happened in that space and the resultant bounce back that we've seen today. Anushi.
One sector which is in focus this year is Nifty Realty, and now if you look at the year-to-date performance, it's been on the weaker side. The index has seen about a 23% of a drop so far this year. In fact, if we compare the last 14 years also, it has been in its worst performing start to the year in the last 14 years. Let's just see some of the declines that we've seen over the course of years. So 2025, we are seeing at a 23% of a decline, 22, 2020, but some of the other years we've seen about a 14 to 13% of a decline. But the double digit in the 20s that we are seeing is something that we'd last seen in 2011. So it's a steep decline that we are seeing in Nifty Realty, and this is after a year in 2024 we had seen a very strong start for the Nifty Realty. In fact, it had gone upwards in some majority of the stocks had clocked in more than 90% of returns. But so far there has been correction, and let me point out some of the stocks which are there. Prestige Estate is the top one over here with a 32% of a dip in its stock price of, if you take the year to date in consideration. Along with that, we have something like Godrej Properties, Ajmera Realty also seeing about a 28 to 29% of a cut in their stock prices. Prestige Estate is also on account of their guidance which they have given, which the analyst and the expectation is that there would be a miss on this guidance if they do not accelerate their pace of launches in the fourth quarter. But we'll discuss more about that. Let's see how the real estate sector has performed and what are some of the key concerns which are there. Suntech, Brigade, Signature Global are some of the other factors as well. Firstly is lack of approvals. Now in the second quarter, third quarter, what we've seen is a slowdown in terms of approvals from the RERA side, which has resulted in a slower pace of launches. And even though the sustenance sales is there, but the newer launches have been affected. So far, we've seen a 49% dip in the third quarter. So this slower absorption would also lead to higher supply going forward. So even if the demand-supply dynamics continue to be on a healthier side, it would pose risk onto the acceleration of launches and thus affect the FY25 guidance given by majority of the companies given the kind of launches that are expected over the course of year. Let's just see the overall picture in terms of where the companies are faring in terms of their FY25 guidance. So if you can pull that table out, we can see that Prestige Estates, which has accomplished about 42%, 33.6% of their guidance in the 9-month FY25 picture. So more than 60%, or rather 67% is something that they have to achieve in the fourth quarter itself. For AB Realty and Prestige is the number that we are looking at. If you look at something like Sobha and Ajmera also, Sobha has seen about a 52% of its guidance achieved. So fourth quarter is something that some of these companies have to accelerate their launches to maintain their FY25 sales guidance, because if they miss their sales guidance, if we take that into consideration and the valuations in consideration, then there would be further downgrades that we can expect in the some of these counters that are there. But also let's pull out some of the positive factors. What are the positives on the realty that we continue to see? So balance sheet debt reduction is something that the companies have maintained. They're seeing a rise in their debt reduction. They're seeing a rise in the overall fundraisers also and the internal sources also. So that is one healthy indicator. Also higher business development with the kind of QIPs that the companies are making. So that also remains on the healthier side. So overall, this is the picture that we are building up for the real estate space. What are some of the key concerns that are seeing, and how the index is down about 23% year to date, making it one of the top sectoral losers of the year.
Thanks, Alushi, for getting us all the details. But let's also welcome in Tridib Bhattacharya, CIO Equities at Edelweiss AMC. Tridib, good afternoon and welcome to the show. Let's start off with the real estate sector as a whole. My colleague was just talking to us about what's happened and how 2025 has started. What would you have to say? Because this kind of correction, 20 to 25% are the kind of cuts that we've seen. What would you advise investors to do?
Sure. So I think, there have been many sectors which have corrected even more. But I would think that overall, this is a reflection of the fact that we are going through a mid-cycle slowdown in India. Particularly on the urban front and on the urban consumer side, that's the reason why on one side the pre-sales have been low. On the other side, demand has also been a little languid. But I think as we go towards the back half of fiscal year 26, when rate cuts start to kind of take hold, there is room for improvement that will come through, not immediately, but as we kind of look forward in the next 12 to 15 months. So yes, reflective of the consumer slowdown, particularly on the urban front, the shares have corrected. But after having seen a phenomenal 2 or 3 years, it should be seen as a mid-cycle slowdown. And if you look at 6 months to 9 months out, you would see gradually the sector improving in the form of launches, particularly in the context of the consumption bonanza or the consumption improvement as that comes through in the economy.
Got it. Tridib, good afternoon. Neeraj here. It's been a while, but good talking to you. Just trying to understand. Just trying to understand, Tridib. Is this the time or the zone which tempts you to invest lock, stock, barrel? Of course, you would be choosy, but is this the time to go whole hog into equities, or do you believe that at best it could be an SIP kind of a model because there are a fair degree of uncertainties around?
It's to answer your question point blank first, I would say it's the start of the time to start nibbling in.
Okay.
And to elaborate further, I would say that basically, the correction that we have seen so far, broadly somewhere between 10 to 15% in Nifty, depending on which day you look at, is actually earnings driven. And that's why, in my opinion, this will take time to recover and will not be immediate. Driven by policy-related lack of decision-making in FY25 and also consumption slowdown, we started off with expecting 15% growth. And as we end FY25, it might be a year of lost growth with practically about 10 to 15% earnings cut. So whatever markets have sort of come down, it has come down on the back of earnings cut. And hence, a market recovery should be coincident with earnings recovery as well. And based on my prognosis, my assessment so far, my sense is back end of FY26, second half of FY26 is when I would think that earnings would start to make a comeback. And till then, we'll basically kind of course, markets would be slightly ahead of that. But that's the earnings picture in front of you. And hence, the markets would actually take a bit of time to gradually meander around and then steady its course over a period of time.
Okay, Tridib. So, would the leaders of let's say if it's back-ended and the market's discounted maybe 3 months earlier, etc., what have you. But if there is a upturn that starts, would the leaders of the next upturn be dramatically different from what has led the previous run? I call it the previous run, meaning the run that lasted, let's say, till October or November.
Basically, overall, it'll be a mix. It'll be, in my opinion, it was more sector-led before, it will be more execution kings-led this time around. What I mean is, if you look at historically till September, over the last 2 or 3 years, it's been capital goods, really, which has been done there, which has been doing, phenomenally well. And that's on the back of the fact that government capex has been spent to the extent of almost 34-35% CAGR over the last 3-4 years. Well, the fact is that starting this year, that spend, which is roughly at about 3.1% of GDP, is normalized now. So going forward, the growth in capex would be in line with the GDP. So the supernormal growth of capex is over, and hence I think the sector leadership will also moderate. On the other side, consumption has been given a bit of a fillip. So whenever, as you said, when the markets recover, consumption will probably kind of start to make a comeback as well. So my sense is now that the sectors and the policies are more calibrated, the road for growth is slightly tougher because we are looking at the later stages of an economic cycle. The execution kings, the guys within the sector which execute well, would actually tend to do better within each of the sectors rather than as a sectoral theme would be my best educated guess as we go forward.
Right. So Tradeep, clearly the sectors that you should be watching out for, you have called out earlier as well that in 2025, probably consumption is going to be the dark horse. Do you still sit with that idea, number one? And two, if so, what are the segments within consumption that you would be betting big on?
Sure. So first of all, before I talk about those sectors, I must say that in the near term, consumption will be weak, okay? We are talking about a back-ended recovery. So consumption recovery will actually start to look through post the festive season this year. And hence, of course, the share prices may start doing well a little earlier and all of that. And that's why the connotation of dark horse. So 3 sectors I like here from a 12 to 15 month perspective. One is consumption. And we think that with the tax cut, which effectively means a salary increase of 5 to 7% after the first few months, which goes to repair the balance sheet, could go towards consumption spending, and hence consumption would look to do better over the next 12 to 15 months. The second sector that I like would be NBFCs. Reasonable valuations. I think as the rate cuts stand to happen over the next 12 to 15 months, even though it might be a shallow one, you could see earnings do a little better. And growth is reasonable. So I think that's the second sector that I would point out. And third is IT. Of course, the stocks have done well if you look at heading into this year, and we are kind of in a Trump regime where we could expect any sort of tariffs and stuff and things like that, and that would create a bit of volatility near term. But the fundamentals of the sector are on the mend, and I think if you take a 12 to 15 month view, the growth in the sector will actually stand to improve. So these would be the 3 sectors that I would highlight in the context of our portfolios: consumption, NBFCs, and IT, where one could hang our hat on from the 12 to 15 month perspective.
So that's the overall view in terms of sectors which you could be betting big on as well. Thank you, Tradeep, so much for joining us on the show and sharing your views.
Pleasure.
So Neeraj, clearly, from what Tradeep is talking about as well, yes, there could be pressure in the near term in terms of consumption, but taking the way valuations are panning out, probably a long-term bet from here on.
Yeah, well, what's your guess?
Probably, when the budget is already talking about the kind of money that could be in the hands of the people, probably you could look at it from a long-term perspective. But yes, don't look at it from a trading perspective. I think that's what you need to read in between the lines as well so far. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Welcome back. You're watching India Market Close. Now, the key segment that we have here is Heard on Street. My colleague Somit Sarkar joins us with the chatter from the dealing room. Somit, good afternoon. What's in your kitty today?
Well, firstly, it's Varun Beverages. Now, if you look at this stock for the first couple of months, we had seen a massive underperformance, but off late, it has been a consistent buy in the FI desk. Strong buy flows is what dealers are indicating from foreign institutional investors post this fall that we have seen in the share prices. Apart from that, the other stock on the list is Nippon Life. Large HNIs and FIs have been seen accumulating this counter. The delivery volumes for this counter could be on the higher side in trade today. Third stock on the list is Ashok Leyland. Now, today after the IndusInd fiasco, what we have seen a 26%, 27% downfall in the share prices. What I'm picking up from dealers is that sovereign investors and large FIs have been seller when it comes to Ashok Leyland as well, and dealers are indicating that the selling pressure for Ashok Leyland could continue for few days even going forward. And lastly, it's Zomato. Now, large HNIs have been seen accumulating this counter. There's a potential buzz on the street that there could be an upgrade that could come in for Zomato from a large multinational brokerage firm. So keep an eye out for Zomato also in trade.
Wow, okay, very interesting. These brokerage upgrades, things are great. On the buying front, it's very interesting. So, do you have the color of the nature of the money that might be accumulating some of the stocks that you're mentioning?
Well, yes, Zomato, as I mentioned, it was large HNIs who have been accumulating this counter today.
And anything on the fund side which is happening?
Nothing as of in the fund.
Nothing as of now today. Okay, great. Okay, Sumit, thanks so much for putting all of that into perspective and a few names that you could keep an eye out for. Kush Bora, on the charts, any of these stand out for you? I mean, there are 3 or 4 names that we just spoke about, including a Zomato.
So Nippon Life is giving a good up move. I mean, it's the strongest of them all. If you see the day, today's move. But irrespective of that, the 500 mark did prove to be a strong support zone for this stock for the last month and a half, and then it's rebounding from there. So definitely something to be kept on the radar. Crossing above the 20-day moving average, that's the litmus test cleared. Also, VBL, Varun Beverages, a sharp recovery, but the follow-through was missing. Even today's move is actually not taking it past the 20-day moving average. So any closing above the 485 mark, which it is very close to right now, but a close above the 485 mark would make it a very interesting buy from a risk-reward standpoint. So Nippon Life and VBL. Zomato, I would still be a little skeptical, and Ashok Leyland, as you already pointed out, it's very clear in avoid could see some more pressure in the coming days.
I mean, let's focus on Ashok Leyland for a bit, Kush. Simply because there is collateral damage here, right? And I wonder if the move today opens up trading downsides for this one.
So interestingly, had that been the case where it would have been a standalone today's move that is taking the stock down, then I would have actually said that this is an opportunity to buy. Now on the flip side, if you see the rally that started somewhere mid or early 2024, the stock is actually at the 61.8% retracement at the current levels. So if a breach does come about of this 200 mark, if we close below this level, then indeed some more downside cannot be ruled out. So short position, if the closing comes below the 200 mark, can be considered for levels of 193, and once that is taken on, perhaps even a 185. So yes, the point was that the stock has already seen a bit of a sell-off for the last about 6-8 months or so, and any recovery that was coming about was sold into, and what happened today is just further nail in the coffin. So yes, shorting opportunities abound, but below 200. If the closing is below 200, then yes.
Right, so that's with Ashok Leyland, and plus there is some bit of an impact on the back of Maharashtra's motor tax hike as well on an Ashok Leyland, so some pressure on that one. Let's pull up our MGL on the screens as well, because the motor tax levied on compressed natural gas four-wheelers as well by 1% has weighed on the shares of MGL, but now you're seeing a recovery, 0.8% higher. Kush, your view in terms of MGL, what would you advise?
Some stocks you avoid because they're on the way down, and some stocks you avoid because even if they're on the way up, they don't really do too much for you, right? It's not done, something great either for an investor or for a trader for a while now. I can just give you a broad range, which is 1,225 on the downside and about 1,350-ish on the upside. The stock's going nowhere for a while now. The momentum indicators also suggesting so. So for me, even if there is this upside, I would give it a miss. Any break above those 1,350, 1,360, upper end of the band, we might consider it for a brief trade. But for now, MGL is an avoid.
Avoid on an MGL coming in there. But moving on, let's look at the top 3 stocks of the day. Rucha standing by to get us more. Rucha, what's on your list?
Hiral, my first will be the IT sector. Well, IT sector is in focus because number one of the fears of US recession. People are believing that Trump's tariff could actually impact the IT sector as a whole as well, and the client spends are very much discretionary in nature, and because of that the top line of the companies might get affected, and that is why Infosys is exposed to the discretionary portfolio even more, and because of which this one is also down in trade. So IT as a whole as a pack is down. Other than that, there was also Oracle, which reported its third quarter numbers which were below estimates. So overall IT is in pressure because of what is happening in the US. Moving on to Bharat Electronics, the company has received an order worth 843 crore. Major orders largely include vessels, air traffic management system, etc. And the total accumulated order book, therefore, as on FY25 stands at about 14,567 crore rupees. Last one on my list is Max Financial Services Limited. As we all know, Max Financials and its subsidiary Axis Max Life Insurance are actually in a similar structure, and they've also stated that they are looking to be amalgamated, and in a way that they intend to be potentially listed as Axis Max Life, and that is why, as we can see, Max Financials is up about 4.3% in trade. But yes, BEL is also a thumbs up over here, but ID Stocks is the one which is doing negatively amongst them.
Right. Thank you, Rucha, for getting us the details. Kush, coming to you on a Max Financial as well as a BEL, because BEL, on a fundamental perspective as well, a lot of brokerage notes that are coming in. The target price is pretty strong as well. What would you advise? Any picks between a BEL and a Max Financial?
So depends on your trading style and your trading pricing. If you're a momentum trader, Max Financial. If you've got the patience for about a 3 to 6 month kind of an holding period, then BEL is the stock to go for. I mean, time and again we've discussed this. This stock has actually held its ground for the most part, in the sector, especially when you compare it to the peers in the sector. So if you've got a 6 to 12 month kind of a time horizon, then this is the stock that you should consider accumulating on the upside to 90, and about 310, 315 are the targets to look at. Supports for this one comes in at 260 to 55 zone. Max Financial, as I said, a very clear momentum play. However, two words of caution. First is that on the hourly chart, it's actually gone in the oversold territory, so could see some profit booking. And on the daily chart, we've got some resistance around the 1100 mark. So may not be something for a fresh trade, on second thought. But yes, if you've got a position, then ride this momentum and keep your trailing stop losses around the 1070 mark for this one.
Okay, some very interesting movements in the markets and individual stocks as well, and we'll continue that conversation. Remember, IndusInd is now down 27% nearly, and at the same time, there are some clutch of other names. But Tata Communications, for example, is up 8%. But here's a small snapshot from the Macquarie FI meet. The Macquarie met up with 30 investors in the EU region. And here are the key takeaways, right? They're saying that investors are looking to deploy money into Indian markets post the corrective move. And they are saying that most investors may cut the current underweight stance, but the overweight stance is still some time away. So not completely overweight currently. And the interesting piece is they say that India has a structural story. China has structural issues and is a tactical short-term play and not really a long-term play, as per Macquarie's feedback from 30 EU investors. Now, the other interesting piece is that now they're starting to watch, global investors are starting to watch domestic flows. So their feedback is that the key worry was how domestic liquidity could get impacted post recent correction, because if this were to happen, it could derail. They are tracking this closely, because if the domestic liquidity dries up, it could actually derail the recovery of the Indian equity markets. That's the feedback that Macquarie has gotten from those 30 EU investors as well. And what sectors are they looking at? That's the other key thing. Let's move on to that. The sectors that they are looking at. We've spoken about this. Let's move on to the sectors effectively. The financial stocks, at least, that Macquarie is talking about. HDFC Bank, ICICI Kotak Bank had the most interest. Bajaj Finance, people are happy with. Shriram Finance, a lot of interest, and PB Fintech was the other one in which there was a fair degree of interest. And on Q today, PB Fintech is up about 3.5% in trade. There was little interest, as they say, in Axis Bank, PSU banks, and NBFCs beyond Bajaj Finance and Shriram Finance essentially. So keep all of that in mind. Now, interesting, and I want to talk about PB Fintech with Kush Bora, because that stock has moved up in trade after a sharp correction. You could argue maybe due to this report as well. Any thoughts here, Kush Bora, from a trade perspective, PB Fintech?
It's slightly early for a momentum play on this one, but yes, I would grant it that the base formation has been in play for some time. The 1375, 1370 zone has acted as a good base. As you said, today's move could be on the back of this news, but yes, the base formation was in place. Now, as I said, momentum is missing, but a fairly attractive risk-reward ratio with 100-point kind of a stop loss. You could look at the upside as close to about, as high as about 300 points. So 1:3, a fairly attractive risk-reward ratio. So this is one stock that yes, you can consider, in your portfolio. There could be near-term resistances, but with the kind of news flow that you mentioned has come about, and the volume pickup that we're starting to see on the days when the stock is higher is actually starting to become a little attractive. So don't expect fireworks after the kind of move that it saw today. But yes, as I said, from a positional standpoint and a good risk reward ratio, PB Fintech does make a good buy.
So that's PB Fintech. The other names that Neeraj was mentioning from Macquarie, you have the likes of an HDFC, ICICI and Kotak, which have good interest as per what they are indicating. Kush, anything from that front? Because clearly if you see a ICICI and Axis trading pretty much at discounts.
This is precisely my worry, and this is why I'm a little skeptical on the bank Nifty move also, which is while HDFC Bank has respected its 20-day or 200-day moving average, it's not done much to go substantially higher from there. ICICI Bank, yes, after a while it's seeing this kind of an up move. Not sure whether this will be sustainable because this 1250 mark is a bit of a resistance for ICICI Bank. So these two names, while they do make the cut, and in fact, if you were to pick something in the banking space, these are the two stocks that you want to be. But right now, it seems like that's more of a margin of safety kind of play rather than a momentum play. So I would keep my eyes on these 6-month, 12-month kind of a horizon. Yes, they would make a good buy. The momentum is missing, and that's the worry. The one stock that I like amongst the others that Neeraj mentioned is actually Shriram Finance. Very smart up moves. We did discuss this as a call as well on the channel. Target achieved on this one. Last couple of days has just been a bit of a profit booking. I think you should consider Shriram Finance as someone looking for a momentum play. 620, 615, good support zone, so that should act as your stop loss. On the way up, you're looking at new recent highs. The spring high that it had made of 650, that being taken out and move towards 655 and 680 kind of levels also. So that's one stock that I like in particular, which is Shriram Finance.
Shriram Finance on Kush's list so far from the financial pack that we have been watching out for. But let's also now welcome in Jonathan Chizell, Deputy CIO at Westminster Asset Management, to talk about what's happening with regards to the global markets. Because clearly, Neeraj, if you see what happened to the US markets overnight, with that, the futures are now again edging higher. If you see S&P 500 or even Dow futures, right? So there is that mild recovery that's coming in. So whether it's recessionary fears or it's just that Trump is confusing the markets right now, I think people don't know where to go from here on.
Yeah, let's try and find out if Jonathan has some answers there. Johnson Ratna. Jonathan, great having you, and thank you for agreeing to talk today. But yesterday was such a brutal day for the S&P that it makes sense to just try and understand whether there is a feeling that there could be a recessionary move in the US economy, and is that causing the nerves to fray in investors' minds?
So I think it's a combination of many things. I think you're quite right. The data clearly looks like we're going through a slowdown. Obviously, there's a lot of concerns about unemployment picking up in the US with everything that's going on with Doge and the efficiency drive. Obviously the whole tariff issue remains and gives investors a lot of nervousness and uncertainty to try and price that in. So clearly there's a lot of issues going on. Our indicators suggest the US economy was up until recently humming along very nicely, and we're going through a slowdown. And you combine that with equity valuations which were at record high levels, and a bit of profit taking come in, and so it's nasty, it's painful, but it's very much focused on more of the high priced stocks that are really taking a beating, and some of the sort of theme stocks of the last few months in particular are taking an absolute beating. But I think the broader market, this is at the moment nothing out of the ordinary, this sell-off. If it carries on, then sure, it will get a slightly larger one. But this is not something we haven't seen before. And it's not a great surprise. A lot of strategists and technical analysts have been warning that the market was looking a bit overextended for some time.
Right. Jonathan, one point that we need to understand over here is that we're talking about the chances of a recession hitting. Now, why all of a sudden a conversation about recession? What indicators, according to you, are pointing to this? Because, the payroll data has been relatively strong. The consumer spending in the US is still pacing between the 3 to 4% bracket. So, which are the fears that you are looking at?
Yeah, so I mean, broadly speaking, I think there was some of the now GDP data that came out of, I think it was the Atlanta Fed that came out a couple of weeks or last week, which showed a massive drop in GDP expectations, which caused an initial flurry of comments around what was going on. Now, clearly that, on closer inspection, there were some technical reasons for that very large drop. And our data as well seems to show this is not a recession we're heading into. It's a slowdown, from elevated growth levels. And so I think, this recession talk is probably because investors, quite frankly, are very confused with what's going on from a policy perspective. And this is just blown out of proportion. I think what we're going through, what it looks like, at least what we're going through, is an economic slowdown, which is not surprising after the run we've had and the changes that are going on in Washington in particular. So yeah, we don't quite buy the recession story just yet, but to us, it's a normal, standard economic slowdown, more so.
Got it. Jonathan, I have just one more question, and that is, could a potential Fed rate cut be an antidote to a recession looking like pullback in the US markets? Conversely, if that were not to happen, could it be at the margin positive for EMs? The last dollar was moving to the US because of US exceptionalism. If that is not quite the case, could EMs like China, maybe even India, benefit a lot more from that scenario?
So definitely on your last point, I think that would be very positive for emerging markets. I think clearly India's been going through a pretty tough time since the last quarter of last year from a market perspective, and China's obviously been going from strength to strength. So I think, yeah, the ending of this, or a temporary ending of this US exceptionalism story, probably is what is playing out at the moment. But I think the market sentiment, the way it is, we've seen such a dramatic shift in US investor sentiment to extremely bearish levels in a very short time, that if the Fed, for example, did cut, probably, whereas a few months ago the market might welcome that move, now they think, oh dear, it really must be, the economy really must be cratering. They're having to cut rates here. So yeah, it's obviously with sentiment that swung so quickly, and clearly there were a lot of investor hopes that President Trump would have this so-called Trump put in place, and he wouldn't let the S&P fall too much or the indices fall too much. And clearly that hasn't played out yet either. But we do believe, obviously there's been a lot of talk previously about tax cuts, about further deregulation measures which haven't come through yet, and that's probably will be coming through at some stage. So yeah, to us, broadly speaking, this is a perfectly normal US sell-off. It's making assets out of the US look more attractive. They've obviously, Europe, UK, EM starting to do reasonably well. And yeah, it's for us, it's painful, but it's what we've seen before.
So clearly, thank you, Jonathan, for speaking to us at NDTV, but not a recessionary phase. Probably you're staring at a slowdown when it comes to the US markets. That's what Jonathan is alluding to so far. But moving on, let's just pull up a trend on the screens. It's very interesting because last couple of trading sessions have been absolutely weak. In fact, yesterday itself, if I'm not mistaken, we did see a target price cut coming in on a trend, and everyone's alluding to persistent revenue pressure. Now, today the stock again is at the day's highs with gains of 5%. Kush, overall with regards to trend, how are you looking at it?
With cautiously optimistic, let me put it that way. This move that has come about is showing some sort of a daily on the daily chart is showing positive, positive daily divergence. The move that we've seen from September onwards up until now has actually brought the stock to about 50% retracement from the rally that started early 2023. Now that's typically where big high flying, big moving stocks like these tend to take support either here or further down at the 61.8% mark. This one has taken support at the 50% retracement mark for some time now. My only concern is that the volumes on the way up aren't really as aggressive. Also, the stock is facing this resistance around the 20-day moving average. So any closing above the 5050 to 5075 range might perhaps give it that push that is needed, for the tide to turn at least in the near term. Up until that happens, I will be a little watchful because in the last, week or 10 days, it's been 2 or 3 times where the stock has tested the 20-day moving average but failed to cross that. So wait for a brief while. Any move towards the 5050 mark and a closing above that will, as I said, might just turn the tide for the better for trade.
5% higher today, but let's wait and watch what happens to trend. I tell you though, you try as you might, it's very difficult to take your eyes off the moves that are happening in IndusInd Bank. IndusInd Bank is now down 27%, 27.5%. So not only has a lower price not brought in investors, it's actually sulked even more as the day has gone by. Vineet Bulinjkar, I'm told, Johnson right now with his thoughts as well. Vineet, factually speaking, this is not even a 27% fall because from I think end March till now, in less than 12-15 trading sessions, IndusInd Bank has come down from 1035 or thereabouts to whatever 650, which is about a 37-38% correction, right? In a large bank trading sub 1 times price to book is a 40% correction. What does this reek of? Is it that the street is saying we've had enough, let them prove, until then we'll move to other banks?
Yeah, so IndusInd Bank has been guilty of having these excursions, if I may say, periodically. They had some in 2018. That time the stock was beaten down to 400 odd levels. And then then the market had given it a second breath of life. And today we are down bang again. You know what? I think this, there is some kind of pressure within the bank to meet growth estimates. And I'll tell you, if you read the language of the con calls that they present, I'll tell you some very subtle things that come out. They will always put the positive metric, but they will never give the like-to-like metric. So, it's just tom-tomming the bullish case for the bank without actually giving a very, very, an analysis where, you can make sense out of it. It's always a positive number and it is put out across. So that really always had me worried that, things are not panning out the way they should be. And here you have them coming out with their, caveat that they put out yesterday. And the street does not believe them one bit. And it is doing what it is today.
Yeah, it's not looking good. What's happened though, it's Vineet, it's gotten some of the other stocks excited. I mean, there is strength in ICICI Bank, a few others. Do you reckon that Bank Nifty or banking exposed funds might have moved money out of IndusInd, even at these prices, into some of the other banks like ICICI or some others?
See, what happens in the mutual fund industry is that if you are caught with the wrong stock, your NAV looks bad, right? And then all your advisor, asking you what has gone wrong, because 2 funds are up and you are down. Then the advisors come asking you what's wrong with it. So it's a slam and dunk. Everyone is exiting that and, moving funds into others. So rotation happening out of IndusInd Bank into the other stocks. I think one other stock which could be not that good going ahead could be Axis Bank, because they are not guiding for growth, they're guiding for profitable growth. So you might see the AUM numbers come down a bit. And already there is so much stress in the system that this could be another stock which could go down, although not in the corporate governance fashion, but purely because of lack of.
Right. So that's with regards to where you're talking about an IndusInd, and after that an Axis and ICICI Bank, where there is some bit of buying interest that is coming in. Now, whether funds are moving from an IndusInd to an Axis or ICICI is anyone's guess. But moving on, let's move on to the segment where we do a bull versus a bear case scenario. And the stock that Puneet has picked today is a Tube Investments. The stock has seen gains of nearly 6% in trade. Puneet, over to you. Firstly, why a Tube Investment, and what are you picking up?
Well, definitely, stocks back in focus after the sharp sell-off that we've seen over the last few months. And re-rating trigger is what's been, something that my colleague Somit had picked up as well over the last few days. Now, when you look at the bull and bear case scenario, of course, Tube Investments as well as the whole Murugappa group has multiple, listed entities, from Carborundum Universal to a CG Power to Shanti Gears and many more. Now, some of the stakes are going through, Tube Investors, which is of course the listed entity, but there are two main specific companies. One is of course CG Power, that's been driving the re-rating valuation for the company, and the new investments that the company has done, specifically with the semiconductor venture also going through CG Power, and the investment that Tube Investment has in the company has been one of the key things to watch out for. So while the CG Power is trading at around 50 times price to earnings for FY27, the standalone entity is around at 25 times, and that's where the valuation differential is seeming to pick up now. The new ventures that the company has announced over the last 5 to 7 years have been bearing very good fruit. Between FY21 and 23, they had a very big investment plan. So that over the last 2 years, some consolidation there in terms of businesses, but that is one of the first bull cases. Although the standalone entity, which has 60% of its revenue coming from the engineering space, is very commoditized in nature, and hence that has been, which we saw in Q3 earnings as well, not doing particularly very well. So that's the first one, where the new ventures and new investment that the company is around has been doing very well. The second key aspect is, as we mentioned about the new ventures, organic as well as inorganic opportunities is something that they're also looking to do again. After the last 24 months has been lean on that aspects, they have been, they eyed investments after currently eyeing investments of about, did about 2,200 odd crores between FY21 and 23. But going forward, it'll be something to watch out for, because CG Power has already announced big investments in the semiconductor space. And finally, brokerages are believing and anticipating in the third bull and bear case of better traction for the new ventures. And that could also be another trigger to watch out for in terms of the re-rating for the bull case. And that's the next one to watch out for in terms of the bull and bear case. The final one is, of course, the 60% of its revenue coming from a segment that's not been doing well over the last few months, and it'll be something to watch out for going forward in Q4. Also, expectations of the engineering segment not very strong, but it could be multiple triggers for this stock in terms of stakes with new ventures as well as new investment, but definitely one which a lot of investors have picked up on.
Right, so that's the bull and the bear case. Vineet, would you be a buyer of the bull case or the bear case for a Tube Investment?
Bull case for Tube Investments. I think the management is very strong. We are going to see manufacturing come back in a very ravaging way in the years ahead, and Tube Investment is best placed to benefit from that.
Why so, Vineet? Sorry, just wanting to understand how have you looked at Tube from that perspective?
So, what is going to happen is that, manufacturing, what we have seen happen in China with all the tariffs coming in play, we are going to see substantial movement of manufacturing facility to India. Already, there are discussions happening in the deglobalization trend, where, you're seeing China cut back on steel capacities. Same thing is going to happen across all industries. And the virtual beneficiaries of those are going to be countries like India, where we are the only ones who are negotiating a tariff policy with the American government, while all the others have had blanket tariffs slapped on them. Not that we are not going to get slapped with tariffs, but we have engaged the government to get things done so that we grow. And today in the geopolitical scene of events, if we find the US is completely outcast by the rest of the developed world, And India is the only country with whom where they have geopolitical equations to have some kind of sanity in terms of having democratic governments making their stand. And in that, I think geo-economics will prevail over geopolitics, and you'll see a lot of manufacturing coming to India.
Right. So that's the view coming in terms of where tube investment goes. But let's quickly slip onto your short break. On the other side, we'll get you the top buy and today and sell tomorrow picks. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I
All right, back with India market close right here on NDTV Profit. In fact, the Nifty's flattened out yet again. The Sensex at least has. So bear that in mind. But the small cap index is actually doing even better. So now 0.6% lower. I would suspect that this would be maybe not the highest point of the day, but in or around that, about 20 points off from there. So which is actually a good thing. Should bring up Europe and what Europe is doing for just a moment. Because Hiral marked that the US futures were in the green. Europe is not doing too bad, by the way. DAX is on a different trajectory. 22770. The German markets are really having a good run, but a clutch of others are not doing too bad. And from among stocks which are doing well, we've been speaking about how consumers stand out. Look at Jubilant Foodworks. It's now up 3%, and I would suspect in or around the high point of the day as well. So good going here for this one too. Before we move any further, Kush Bora, any thoughts on Jubilant? Is there a trade here? Or for that matter, I will also throw in a couple of other stocks related to telecom then. Tata Communications and Indus Towers, both of which are trading at the day's highs.
No, I don't think there's a trade to be had in Jubilant Foodworks just yet. There was a recovery underway, fizzled out, falling trend line resistance, 200-day moving averages. So as you see, more than a couple of technical no-nos for now. If at all a trade will come about once the 200-day moving average of 635 is taken out, so be on the lookout for that. Now, as far as Tata Communications goes, it has those sporadic moves, but they sort of tend to fizzle out. So not a big fan. Wouldn't recommend a fresh trade. If you've got something, sure, you could hold on to this one with a trading stop loss around the 1450 mark from here on. And IndusInd Bank too. Storm in a teacup kind of a situation where it's been in a broad, or rather a narrow band, but rather big moves on, within that band. So 320 on the downside and 345 on the upside. It had days where it's moved wildly between this band, but not been able to take out meaningfully. So as I said, no fresh trades on any one of them, but a Tata Communication with the kind of momentum continue to hold with a trailing stop loss around the 1450 mark.
So that's with regards to Tata Communications. Stock up 9%. That's a smart move on that counter. Indus Tower as well is another one which is gaining. But moving on to the pharma pack, Sun Pharma, that has been in the news as well. And buzzing in trade after ICICI Securities upgraded the stock to a buy. In fact, the target price is 1895. Varsha joins in with more. Varsha, what are you picking up on the Sun Pharma?
So yes, ICICI has upgraded Sun Pharma to buy from hold with target price with upside potential of 18%. Now, what they are saying that the company is spree on specialty portfolio. So basically, the next growth driver for Sun Pharma is the specialty portfolio that they are betting on, and the upgradation by ICICI is due to the acquisition of Checkpoint Therapeutics, which expands its specialty drug offerings. Now, the acquisition is projected to increase Sun Pharma's future earnings, and the acquired drugs works well with Sun Pharma's existing products as well. ICICI now sees Sun Pharma's stock price at a good value, at an attractive valuation, and the upcoming GLP-1, that is obesity and diabetes drug launch, is also a positive factor for the company according to ICICI, and the specialty portfolio which they are betting on will actually witness a significant boost in FY27 and FY28, but the key risk that has been highlighted by ICICI includes approval delays, increased R&D spend, which will actually affect the margins and the bottom line, and also the pricing pressure that the company may go through.
Okay, thanks a lot for that, Varsha. So certainly watch out for this one. And Pharma has had a fairly decent move selectively in the session today. So that's actually a good sign. Vineet, come in on this one. Sun Pharma, some of the CDMO companies, analysts today told us that the Jan and March numbers have looked pretty strong for Laurus and a few others. Any thoughts here?
Yeah, so CDMO is going to be the space to watch out for in full year calendar year 25, 26 and 27. And stocks which are looking to do well are DVs. We'd be looking at Laurus Labs, 1.1 Source. These are some of the stocks which have got good capacities for complex products margins, and huge capacity. So today the thing is not whether you can do CDMO, but at what scale can you do it? And out here, I think Laurus Labs scores, and one source is the other stock which is putting up significant capacity. So bullish on both.
Bullish view coming in on Laurus Laboratories as well as the Sun Pharma. Let's also welcome in Nilesh Jain, Head AVP Technical and Derivative Research at Centrum. Nilesh, good afternoon and welcome to the show. What would you do with a Sun Pharma and a Laurus Laboratories?
Very good afternoon to you. Well, it's a buy. So overall, if you look at the pharma pack today, we are witnessing a good rebound. Specifically, Sun Pharma, if you look at this particular stock where we have witnessed good build-up on the long side with an OI addition of more than 4%. And technically as well, we have seen a good momentum today. The stock is also, in fact, it is on the verge of a breakout from its 21-day moving average. So it's a buy for the upside target of 1680 to 1700 with a stop loss below 1625. Sun Pharma can be bought at current level. And apart from that, the another stock, Loris Lab, this particular stock is also doing pretty well today. We have seen 2 days of correction, and today we are witnessing a strong rebound. So a follow-up move could be seen. It can be a good BTST trade for the further upside move towards 580 to 585 can be seen. Stop loss can be placed below 560.
Right, so stop loss below 560 is what you're looking out for in terms of Loris Laboratories. But moving from here on, in fact, we also have another stock that is in focus that we were discussing about is a Tata Communication. Varsha is again standing by with us. ICICI Securities has upgraded the counter. Varsha, a target price of 1840. Why are they positive and why are 1840?
Right. So actually, the upside potential that we are talking about is 34%. Now, the recent decline, what they're saying is the recent decline in Tata Communication stock has made valuation compelling and risk-reward favorable. And Tata Communications' performance over the last 12 months was affected by various challenges, particularly a muted order book. However, the order flow has started gaining traction, and also the company remains confident of more conversion from its strong sales funnel, which has piled up over the last few years. In FY24, as per ICICI, the company faced setbacks due to cable cut in the Red Sea and weak order book growth. But with the Red Sea issue now behind and double-digit growth in FY25 year-to-date order book, the brokerage expects Tata Communications data revenue growth to swell. And the digital services revenue growth is also expected to pick up from the fourth quarter onwards, driven by large deal expectations and also sustained momentum into FY26. And ICICI Securities also believes that aside from their strong digital product portfolio, the market is yet to fully factor in the company's 3,300 crore estimated free cash flow generation in FY27 in core connectivity, which represents 7.2% of enterprise value. And lastly, company has launched many products servicing cloud ecosystem, which shall benefit from its adoption. So these are the reasons why there's an upgrade and increase in target price.
Okay, well, 9.5% higher for this one. Good going here. And Nilesh Jain is with us too. Nilesh, while you give us your index view, give us a view on Tatacom again. I mean, we asked Kush about it, but such a strong move today. What do you think of it? Also, are you trading the Nifty or the Bank Nifty in any fashion, Nilesh?
Well, no doubt we have seen a good rebound today from the lower levels after testing the lows about 22,300. That's the strike where we have seen a huge amount of put writing as well. So that is likely to act as a major support from here. So we are expecting a follow-up move to continue towards the levels of 22,600. So to play a 100-point move, one can keep a stop loss below 22,300 and wait for some dip towards 22,450 that will provide a good risk and reward. As of now, at current level, at present level, there is no trade. But if we see any dip towards 22,450, that can be used as a buying opportunity. Because looking at today's rebound, we are expecting a follow-up move in the coming session. Now, coming back to telecom space, specifically Tata Communication, we have seen a good build-up on the long side. Close to 7% OI has been added today, with a good breakout coming in about 21 DMA in this particular counter, and volume activity has also picked up today with the volume of over 41 lakh. So the good setup for a follow-up move in the coming session towards 1520 to 1550 can be seen. But at present level, the risk and reward is not favorable, not advisable to buy at current level, and better to wait for some dip towards 1450 to 1420. That can be a good opportunity to initiate a fresh long with a stop loss below 1380. But at present, it's an avoid. But yes, if somebody is already holding the long position, can keep a trailing stop loss at somewhere around 1470 and ride this momentum till 1520 to 1550.
Right. So that's with regards to Tata Communication and the overall view in terms of markets. Nilesh, very quickly, your top picks.
All right, Hidal. So I have two recommendations. First of all, OMC space. Today we are witnessing a good rebound. after 2 days of decline. So BPCL is something that is looking attractive at current level. We have seen a good build-up on the long side in this particular counter. So we are expecting a follow-up in the BPCL futures. So one can buy with a stop loss below 257 for the upside target of 275. Another stock is on the buy side is JSW Energy. Again, a similar setup, a good breakout can be seen from a consolidation breakout. So JSW Energy is a buy in futures with a stop loss below 504 and target would be 532.
Okay. Interesting moves, of course, in markets by and large. We put out that piece just a while back, just the comparisons. And for IndusInd Bank, which had a 52-week high of 1576, now at 655, the market cap is 51,000 crores, which is lower than now Yes Bank as well. So in the pecking order of the larger banks by market cap, IndusInd has come down quite significantly in the last 12 months. Not necessarily the best of things. In fact, now below 51,000 as well, 27.5% lower for IndusInd Bank. For people who might be tuning in right now, Kush Bora, no respite, right? You wouldn't think of bottom fishing here for a short-term uptrend, would you? A bounce back move?
No, not at all. As I said, because of the oversold nature on the daily and the weekly charts, there could be some respite that might come about. The only problem is from what level does that rebound, come about? A stock losing 27% in a day, having already lost about 10-15% previously. Those levels might not hold just yet. So don't venture into a stock like this, especially when there are plenty more options and rather more stable and favorable ones. You'd perhaps want to consider those Shriram Finance and Bajaj Finance. If you go to Housing Finance and Aavas Finance, some of these names to just put out there, but definitely not an IndusInd Bank at the moment.
Okay. What's also doing well is Castrol. It's getting into the data center coolant business, and that stock is up 3% today. I think if I'm not wrong, if you pull up the 1 month chart, you will see that it's had a fair degree of green in an otherwise sideways market at the mid cap and the small cap end. So let's get the 1 month chart for Castrol right there, 16 or 17% higher for Castrol over the last 1 month. Some serious moves that have happened here. Vineet, fundamentally, any thoughts here on Castrol?
So, the myth has been dispelled that, EVs will take over their world. And, loops continue to run the roost. They're getting added bullish verticals from data centers and coolants for EVs. So, the growth path continues. And, we think that there's a possibility of another 10% move on this stock before it gets, kind of fairly valued. But in relation to Castrol, we think that Gulf Oil looks to be a better stock to look at. And we think that there is a significant 20% upside waiting to play out there.
Right, so that's Gulf Oil. But interestingly, when you mention about Castrol as well, Bloomberg had reported that Saudi Aramco is weighing a potential offer for the Castrol lubricants business of BP. So probably that could be one of the triggers why you're seeing this kind of a move. But Kush, coming to you, your BTST calls, I think you have something on Castrol as well.
I was just going to say that. Did the team give you a heads up? Because this is like a beautiful tie-in, a beautiful segue. Castrol is indeed my BTST calls for the day. In fact, it was I think about 4th of this month where we did discuss this for targets of 236 rather the second target of 236. The stock did well, went to the 250 mark and corrected a bit, but that is more of profit booking. You could see that kind of a move. The move that you're seeing today is actually a reinforcement of that. So it's still a buy, as you said, with the kind of structural changes happening, positionally the stock could actually rise much higher. But from a trading perspective, the revised targets from this one are 246 and 252. Your stop loss comes in at 234.
That's with regards to where Castrol goes. Nilesh, any BTST calls at your end?
All right. So two stocks that we have just mentioned are can be considered as a BTST as well. There's JSW Energy and BPCL. But apart from that, Nifty Realty Pack as a whole is looking very strong after today's rebound. So within this space, counters like Godrej Properties, DLF, Oberoi Realty, in fact, all these three stocks are forming a bullish engulfing pattern. So specifically, Oberoi Realty is looking attractive for a follow-up move to continue towards 1600 to 1625. So these are the two targets on the upside with a stop loss below 1570. Oberoi Realty can be bought.
Real estate has had a good move today. Vineet, I don't know if we started off talking about real estate or no, but the big rebound day today for real estate stocks, fundamentally, are you a buyer into any specific names or would you stay on the sidelines?
So I'm completely avoiding real estate stocks, specifically those focused on the IT major hubs. So that is Bangalore, Pune, Hyderabad, and Gurgaon. The reason being that, if there is any kind of disruption on jobs for IT sector, back office translation, then I think, these stocks will get impacted the most. And we don't have to wait for very long. 4th of April is when you will get to know what's happening. And hence, just staying away from these stocks for a while.
Right. So stay away with regards to
at least the South-based names.
South-based names, absolutely. But what's interesting is going to be as to how the super luxury project companies are doing from here on. I think that's the trend we will have to watch out for. And what's happening to rental yields as well, right? Because that is on an increase. So probably a Mindspace REIT, as we were discussing, but nothing happening on the stock itself. Very quickly, Vineet, any view in terms of Mindspace REITs?
Sorry, I don't track the REITs, so I will not be able to comment on that.
Right. So moving on, HEG, that's another stock that is in focus. In fact, it's having a ripple effect on a Graphite India as well. Though the stock has cooled off, seeing gains of around 3%. It hit an intraday high of around 7.5. Mika tells us as to what are the key triggers with regards to HEG. Mika, over to you.
So HEG an intraday high of 7.6%, multiple triggers for this counter. The first one is an investment approval. So the company's board has approved a 250 crore investment in Bhilwara Energy. This investment will come from Singularity Growth Opportunities, which is backed by Adhisudan Kela. Now the details of the investments, well, Bhilwara Energy will issue 1.76 crore equity shares at a face value of rupees 10, and Singularity will hold 9.6% of the paid up share capital post the issue, and HEG will own 44.3% stake post the transaction, and Singularity will have the right to nominate one director in the company's board. It also has the option to invest another 250 crores post the completion of the first transaction, but this should not be done for a share price lower than 142.08 rupees. The second trigger tweaks to the demerger plan. The board has approved to draft a scheme of arrangement between HEG Graphite and Bhilwara Energy. Now the proposal aims to demerge HEG's graphite business into HEG Graphite and the amalgamation of Bhilwara into HEG. Multiple benefits from this tweak scheme. One is to unlock value for shareholders of each of the businesses, to also allow better flexibility in terms of accessing capital, because it will attract different set of investors, lenders, etc. The restructuring will also help enable a focused growth strategy and provide better visibility on the performance to investors and enhance the operational efficiency, as it will de-risk the businesses from each other. Lastly, when you talk about the future outlook, well, in the Q3 con call, HEG's management did remain an optimistic view in terms of their medium to long-term outlook. They also expect demand recovery in the second half of 2025, subsequently where prices which are currently under pressure are expected to improve, and they're also well positioned to capitalize on the increased export demand that they are exporting 2/3 of the volumes to.
Well, thanks for that, Mika. Singularity's investment into this one. I wonder if graphite electrode companies are interesting businesses to look at, Vineet, and if they are not, now tell us, because the markets have corrected so much, what within the small cap space looks exciting?
So we like a stock called Salzer. It has got, yeah.
Okay.
So it is into your switch gears. It's getting some orders for smart meters, EV chargers, doing really, really well. And you can have a very good upside on that. If you were to look at PSU banks, and if you call them small size banks, then I think your CUB looks very good out there. I think, in line with the theme of manufacturing picking up, not CSB, CUB, City Union Bank. City Union Bank should do really well. They've had 100+ years of dividend history, always grown 15%, best in class NIMs, 3+% NIMs for a MSME is very good, where the cost of funds is not that low. And good, very strong management. They've lived through life cycles of bull and bear markets. They know what works, what doesn't work. And so, when you are struggling with an IndusInd Bank, I think City Union Bank offers a lot of comfort to that extent.
Right. So that's with regards to City Union Bank that comes in with comfort. 5.5% is the kind of downtick that you're seeing in today's session, but a good buy, as Vineet is mentioning, and Asalza Technologies. But let's quickly look at what we should be watching out for from here on. Firstly, you have the US jobs data that will be in focus for this week. Secondly, you have ECOFIN meeting, which is the Economic and Financial Affairs Council configuration meeting that will be relevant from a European market perspective. Japan PPI data is something that we will be eyeing as well. So this is on the global front. And the other things which are on Profit's watch list is the general meeting at Genesis International Corporation. So that's the only one. No major items on the domestic front, but clearly, I think the way markets move and the FIDI number, I think, is what we will be eyeing from here on with the kind of volumes we saw yesterday. Because that probably will give you some indication whether there is comfort that the markets are giving them or not.
Yeah, well, very likely that today will be a slightly different day, but interesting to watch for sure. Okay, what else? As we start wrapping up the markets, Arcade Developers is doing very well for itself. 5% higher, something that Parag Thakkar mentioned on the show the other day. So that stock is doing well. We spoke about Jubilant. The one which has done well today is Persistent on a day when the Nifty IT. By the way, the Nifty IT has gained a lot of lost ground. It's now just down 0.6%. So keep that in mind. But Persistent, 1.5% higher and trading very well for itself. So Nilesh, any thoughts on Persistent as a trade?
Well, good rebound today we have seen from the levels of 5,000. So a good close as well. So we may see a follow-up move towards 5350 to 5400. But I would rather wait for a confirmation if it closes above 5300 or if it breaks above 5300. That will be a first level of confirmation. Then probably it can be bought with a stop loss below 5150. And target would be 5,400 to 5,500. There is no doubt about that. The recovery that we have seen in the Nifty IT index today looks like it is forming a hammer candle and looks good as a whole Nifty IT pack for a follow-up move, or can be we may see a follow-up move towards 37,800 to 38,000 levels in the coming session in the Nifty IT index.
That's to Persistent. Kush, very quickly, your view with regards to a Paytm, 7.5% up move. Would you still be a buyer?
So Paytm, I'd wait and watch. There's a falling trend line resistance plus a 20-day moving average resistance near the 725, 730 zone. Once that is taken out, you could see some sort of an up move. The moves that you're seeing right now are more of a 200-day moving average support that the stock is holding on to.
All right. With that, gentlemen, thank you so much, all three of you, for joining me today. Really appreciate your time. A minute left for the markets to shut shop. And let me quickly wind down trades as they are. It's not a bad day for our markets. We actually done well. IT's recovered a bit of lost ground. The Nifty virtually at the high point of the day today on the closing basis. Bank Nifty okay. Nifty IT's recovered a lot of ground, which is actually a good sign. Look at this chart. Beautiful chart here from a bull's perspective. Started at the low point, ending at the high point. So in some sense, very nice chart. Advanced decline ratio would possibly be looking a bit better, but let's get the heat map up on the screen. Right here, yeah, definitely looking better. A bit of a convergence, if you will. Let's get the heat map up on the screen. IndusInd Sulks ends at the low point of the day. Yes, Infi is still down, but the others, including HCL Tech, including TCS, etc., have recovered a bit of lost ground, which is actually a good thing. Trent, top gainer. BPCL not doing badly on the HSBC note today. Sun Pharma, ICICI, Shriram Finance, HDFC Life and Bharti are amongst the others that have done really well for themselves. And let's just get the BSE 500 contributors before we wrap up the trade today. Right here on your screen, Tatacom, 197, that is Paytm. Some strength for HEG and Graphite India and Phoenix Mills too. Macro tech from the real estate pack doing very well. Tube Investments up 6.5%. Hykel up 5%. On the losing side, Polymedicure down. IndusInd, of course, tops the list, but Polymedicure, City Union Bank, Bandhan Bank also facing pressure. Triveni Turbine and SIS round up the other list. So that's the long and short of what the trade has been like today. Thanks so much for tuning into India Market Close. But stay tuned, a lot more coming up on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Welcome, you're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmark indices end a range-bound day of trade, flat with a positive bias. The Nifty ends above the 22,400 mark, whereas the Sensex ends above the 74,000 mark. Broader markets action remain mixed. The mid-cap index outperforms, whereas the small-cap index underperforms benchmarks. The small-cap index recovers some of the day's losses, ends lower by 0.6%. Sectoral action mixed on Dalal Street. Private banks, auto, IT end with declines. IndusInd Bank declines over 26%, dragging the private bank index further. On the other hand, realty strengthens further to rally over 3%. Oil and gas, pharma, metals and financial services lend support. Rupee inches higher to 87.20 levels versus 87.37 against the US dollar at open. A weaker dollar and lower level of crude oil prices impact the currency. One of the largest banking heavyweights, IndusInd Bank, has seen wealth erosion by over 15,000 crore rupees today. This comes on the back of an accounting discrepancy in its forex derivatives portfolio. The stock plummets to an intraday low of 22.79% in the worst intraday fall since March 2020. The worry cause for retail investors arise from mutual funds as they account for 30% shareholding in the IndusInd Bank. 35 asset management companies own stake in IndusInd Bank. Going ahead, there are a couple of headwinds for the bank. A 25% hit is expected on the profit estimates by the analyst, owing to accounting discrepancies. On the other hand, issues like shorter CEO term extension, succession planning concerns loom on the bank. Quarter four slippages remain high owing to microfinance institution issues. As per analysts, the rebuilding lost credibility will take time. In fact, IndusInd Bank issues clarification amid discrepancies. As per sources to NDTV Profit, the bank conducts very large treasury operations. In fact, the bank says that the size of these discrepancies relative to the size of book is very small. IndusInd discovered that gap in October, but was not sure that the size of the impact might be. The bank has taken time to conduct checks and data reconciliation. Macquarie comes out with a note on meeting 30 foreign institutional investors, says investors looking to deploy money into Indian markets post-corrective move. Most investors may cut current underweight stance, overweight some time away. Macquarie believes that India is a structural story. China has structural issues and tactical short-term play. The realty index strengthens today with gains of over 2%. But that has not been the case in the last year. The index languishes with losses of over 9% in the past year. Some of the key issues plaguing the realty sector are lack of approvals leading to subdued launches. The new openings are lower by 49% year on year for the top 14 developers in Q3. Additionally, slower absorption in Uber premium and luxurious segments. Further delay in launches may lead to companies missing FY25 guidance. The IT index, the top sectoral laggard, languishes on a weak global handover from the US markets. Additionally, Oracle's third quarter results misses analyst expectation. The company's cloud infrastructure segment has been booming due to demand for computing power that can support artificial intelligence projects. Jefferies, in its note on India strategy, says that the Indian market is poised for a near-term bounce. In that regard, Jefferies prefer banks, NBFCs, autos, property and power to play the same. Jefferies downgrades the IT to underweight given potential weakness in the dollar index and US. Jefferies trims weight in pharma on potential US tariff concerns. Indoco Remedies slips over 3% after US drug regulator finishes 5-day inspection for the Hyderabad plant. Company's Anacipher, a clinical research organization, was inspected from March 3rd to March 7 and received one Form 483. The company says that response to the Form 483